in the beginning, it's about the system.
Mm-hmm.
It's not. It's about you. Like, it's about you and how you execute the system. So that's why, for example, you'll go on the Free Factory forums and you'll find people saying, someone gets on there and says, this system works brilliant. I've been making lots of money, blah, blah, blah. Here it is. Hey guys, do you want to make it into an EA or, you know, or, or improve it or something? It's usually, they usually say, I want to improve it, or I want to, you know, automate it because I hate sitting around the chart, you know, looking at the charts all day. That's usually how it starts. And then other people get on there and they'll look through it. They'll test it out. They might even trade it live. And they'll go, dude, this sucks. It doesn't work.
Mm-hmm.
Okay, why is that? You know what I mean? Like, why, how can we both have the same thing and not in that? And that's the same reason why you can't go by the trader that has the best track record and say, that's what I want to do. Because they might not trade in a way that makes sense to you, and you might not have enough time to trade the way they do or whatever. Or maybe they're trading the London Open and you're sleeping during the London Open or what, you know what I mean? So it really comes down to you are the system.
Yeah.
And so, you know, as you know, a lot of work you do is going to be on making sure that you follow the rules, that you are in a good mindset, that you are in a situation where the easiest path for you to follow is to actually follow the rules of the strategy. Like that's what you want. You don't want it to be where a different path is easier. Yeah.
And like you say, I think it really comes down to knowing yourself and taking control of the situation. A lot of times I think too many traders try to pass the buck onto the system or the mentor or the trading buddy or whatever. But if you take responsibility, then that's when things start to change, right?
Yeah. It's not the broker's fault. Exactly. It's not your mentor's fault.
They're not
it's not the system's fault. Yeah, exactly. Yeah,
right,
that's
cool.
right.
Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, and it also helps you cut out what you don't want to do in your life.
Yeah, that's true too.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, so I know I've done this before, and I don't know if you have, but sometimes you tell somebody, just snap out of it. As we both know, it's not that easy. So, or some other steps you can do or help somebody with to get them out of a situation or a mental like block or whatever, instead of just saying snap out of it.
You know, I think that's a good point. One of our friends that I've worked with, her name's Nicola, and she's a great trader. She was saying she went through the trading psychology course that I created, and she was saying that her turning point was that. She's like, I remember, you know, in one of your videos you were saying, you just need to take responsibility. You know what I mean? Which is basically what you're saying. And that's really it. And so there's a couple of different ways to do that. Like you can, if you're journaling and you have a list of your trades, like you can literally pinpoint what went wrong on each trade. And we're not talking about losing trades here. So if your answer is anything but, it was bad luck. It was bad luck. It was bad luck. It was just a loser. If it's anything other than that, then that means that you're like, there's something else that's impacting your trading, right? It's not the random sequence of winners and losers. So, and another way you can do that is, so you can look in your journal and find it, right? You go, okay, well, I keep doing this. I keep missing the trades. I'm always an hour late. So I'm getting in late. My stop loss is too far. I'm risking too much. And that's affecting my reward risk ratio, for example, or something like that. Or every time I have a signal at this time, I miss it because I'm on my way home from work. Or every time I have a signal after 4 losing trades, I don't take it because I'm worried it's going to be another loss, for example. You know, those sorts of things, whatever can creep up. That's one way to see it, is in your journal if you're journaling. But another thing is to ask why. It's called like the 3 whys. I don't know if you've heard this. So what you do is you go, the reason why I'm trading is, or the reason why I'm having trading challenges is blank, whatever it is. So you write it down. Okay. But why does that happen? Right? So for example, like the reason why I'm is because I'm getting in my trades late. Okay. All right. Well, why are you getting in your trades late? Well, I'm getting in my trades late because I'm on my way home from work, and that's when the 4-hour candle prints, and I can't do it because, you know, I'm on the train or whatever, and I don't have phone reception, or, you know, I'm on the BART or whatever, you know what I mean? Like, you know, I can't do it, you know, and so by the time I get home, it's too late.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Okay, well, why is that happening? Oh, well, the reason why I'm on the train when I'm going home is because that's how I always go home. Could you do something else? Well, yeah. Could you wait until the 4-hour candle prints and then maybe take a look on your phone? You know what I mean? Could you open up your laptop and check your charts in the BART station or outside of it in a cafe or something before you get on BART and just get on a later? Like, there's always you know what I mean? Like, there's always a solution. It's just difficult when we put these barriers up and we say this is why, but it's usually not why. There's always something behind that. You can dig deeper and figure out the real reason why is because, well, I want to get home early and I only want to get on the 6:20 train. I don't want to get on the 6:45 train. Like, that's the real reason why, you know what I mean?
Yeah.
So there's lots of different ways to do this, I think, to kind of dig into, what's going on and what, because it's so easy to say, oh, it's just, I keep missing these trades, or, oh, my broker keeps slipping me, or, oh, the markets are too volatile now. Well, why are they volatile now? So you can use the 3 whys, and you can do 4 or 5, 6, however long it takes you to dig to the real reason. And then also in your journaling, you should be able to throw your trades into a bucket. All your losing trades should go into one of 2 buckets, either bad luck or I screwed up. I mean, that's it. There's only 2 buckets, really. Yeah.
No, I agree for sure. And I think once you start asking those whys, it really comes down to much deeper reasons, right? Like, I don't have self-confidence, or I don't know what else there could be, like, I don't think this is actually going to work, or whatever, right?
Yeah, that's it. That's totally it. Yeah.
It's kind of surprising once you start asking those questions, what comes up. Like, you might not expect it, but especially like with your dream analysis thing that you use, right? I was surprised you came up on that one too. So I don't know if you want to talk about that a little bit.
Yeah. I mean, it's in the course, but you get what you trade for course. But basically, what you're doing is you're trying to figure out what the themes are, right? And you'll notice recurring themes in your dreams. You will notice a couple of really important memories that you remember from when you were a kid, right? And those things. What you're looking for are patterns. And if you want to ask the 3 whys question in a really good state of mind, try to do it right as you wake up or right as you're going to sleep. Really, it's almost better right as you're waking up, because or after you meditate, right? So you want to be in that really calm state of mind where things, you let them bubble up, like you're not repressing them, you're not pulling them down. So like the first thing you think about right when you wake up, just why is this happening or whatever, or it's probably going to be easier to get into like a hypnotic or a meditative state and do it. But that's really powerful too, is to be in that state and then trying to dig into it and figure out what's going on. That's really a good technique for people who want to get into that. Or look at your dream themes, or look at the biggest things you remember, like your biggest childhood memories. And why do you remember those? And what does that say about you? What does that say about, can that relate to any patterns, in your life? Those sorts of things. Yeah.
And how do you feel about that? Those events?
Exactly. How does it make you feel? That's right. Yeah.
And I personally found also just kind of building the habit of whatever you're doing during the day, ask yourself, how do I feel about this? And I found that can help you find some patterns also.
Yeah, and it also helps you cut out what you don't want to do in your life.
Yeah, that's true too.
I don't want to be answering these emails or whatever, you know what I mean? Like, yeah.
Somebody else do it.
Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And then once they get that, then they can become, like a star tennis player or whatever, like, expert on AI. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think your psychological edge is? I know we always talk about like trading systems and having a trading system edge, but what about a psychological edge? What do you think yours is?
Yeah, that's a good question. So the way I look at it is that a lot of traders, especially the ones that are kind of new to the markets, those are kind of like the easy ones to take money from, because this isn't really kind of an area for them in a lot of cases, I guess. And so my edge really is that I realize that this is where I need to focus on. You know what I mean?
Yeah.
So that means doing whatever I can to be, there's 2 parts: aware of what's going on psychologically and then to improve my psychology, right? And so there's lots of different tools for that and lots of methods for both, really. So if you want to become aware, there's journaling, there's meditation, there's just like becoming more mindful. I know that's kind of like a buzzword nowadays, but that kind of thing. And that's a little bit easier, I think, for introverts, because introverts are, which I classify myself as, because introverts kind of, we think more about, like, we like time alone and kind of decompress, and we think more about what's going on. Yeah. So I think being aware of it and then having the, like, a plan to improve, those are the two things I think that everyone needs to be, because if you don't have awareness, then, like, you know, you've got nothing, right? So that's how I see it. What about you? What's your take on that?
Yeah, I think the biggest gains have come from awareness, basically, and just trying to pinpoint what the issues are, and then finding out the true reason behind those issues, or the true cause of those issues, and not saying, oh, this is just, you know, I'm just revenge trading. Okay, so why are you revenge trading? Are you mad at your mom from when she was, like, you know, yelling at you and your kid or something, right? So just digging into that, I think, really gave me that awareness. And I think for me, at least, awareness is the number one thing also. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's so true, man. Yeah, like, you just really need to start at awareness, you know. It's like a kid, you know, when they're growing up, they first got to get their motor development down. Like, if they can't, you know, use their voice and walk and use their legs and their hands and their fingers, like, they got to get that first. And then once they get that, then they can become, you know, like a star tennis player or whatever, like, you know, expert on AI. Yeah, exactly. Yeah. And so that's it. Yeah. So yeah, I'm totally down with that. Like, for most people, like, journaling is going to be the easiest thing, but I think you have to be careful, because journaling is, you know, people think, like, and I thought I did this when I first started doing my journals. All I really did was I would take a screenshot of my trade. I actually found my old journals from like 2004 or something. No, 2005, 2006 area. Yeah. And so all I did was I took a screenshot of my trades, I printed them out, and then I wrote kind of like what the trade was, like what system, why I took it. And you know what I mean? So I had a before and after shot of all my trades, and that was cool. But that's not really what we're talking about, right? Like, we're talking about, what do you think, you know, or what? And so it's more of almost kind of like a diary of your trading development. And that's really good. And I have those too. But yeah, that's kind of the key, I think, is for awareness, is to dig into that. And it's so much better if you write it than type it. And I know everyone wants to, and some people, maybe it makes sense to speak it, you know, and there's enough text, you know, voice to text things software out there that can do that for you. But, you know, it's really tricky to do it right, because it's so easy to, like, say you have a trading journal, but that might be just kind of like a trades journal, you know what I mean? Not a trading journal. So there's a difference. Yeah, it's interesting you mentioned that, because I've been going over mine right here, and it's just kind of like a little notebook that I check off. Okay, these are the trades I took. This was the result. From there, then I put it into a digital journal. But I found that, like, just marking it off like this really helps me, at least during my trading. Yeah, and it activates a different area of your brain, and you'll remember it better and all that. Yeah, it's so easy to get sucked into the you know, the fancy online tools and stuff. And there are great trading journals out there, but I think that's the way to do it for sure. Yeah, I think part of it is also discouraging, right? Like, when these journals are too complicated and you have to fill like too many forms, I was like, screw that, and you just stop doing it. So, all right, cool. Thanks, Walter. Yeah, thank you.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. Last month, I heard about this guy who, like, some crazy returns in his trading, and his secret is basically mushrooms. So, like, I don't know how sustainable that is, but you know, trading on mushrooms.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, how do you tell the difference between, your knowledge or your skills at work and your ego telling you what to do.
That's pretty good, isn't it? For me, that would be execution. So like ego's tricky, isn't it? Because I think as traders, that becomes one of the biggest challenges the better you get. And if you've ever seen this among other traders, like who've been around for a long time, you will see the ego creep up. And I think it's interesting because I think as we develop as traders, a lot of things kind of, get easier, I guess, so to speak, in some ways, with experience. Yeah. That's the one thing I think that's not. The way that you phrased it was, how do you know if it's ego or what was the other thing?
Yeah, when you're making a trading decision, how do you know if that decision is coming from a place of knowledge and skill or of your ego trying to take over and run the show?
Yeah. So for me, it always comes back to execution. So I need to answer this question. In this part of the trade, whatever part it is, it could be the risk management, the pyramiding, the entry, the exit, whatever. In this part of the trade, did I do what I am meant to do, right? And if I didn't, and you even see this in traders like George Soros was famous for it in his interview in the Market Wizards or New Market Wizards or whichever book he was in. A lot of traders, like if you go to the traders who speak and stuff, those things, you'll see it. You'll definitely see it where these guys get up there and they say things. And it's funny because then they get sucked in this trap where it's like, you must do this. Like this is the only way you can, you know what I mean?
Yeah,
make
totally.
money in the markets. And I understand why they say that because that's their experience. And like, they're like, well, man, I mean, look, I look what I've done,
Yeah.
I get that, but that's tricky. I think that's a big trap. The longer you trade, obviously a lot of people are going to fall by the wayside because they quit, but the longer you trade, which means obviously you're making money, the more ego can seep in and convince you that you should break your rules in this instance, or you should do something different in this instance, or that you are responsible for your results and not your system.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Really, because it's kind of like you're a bus driver. You're just driving the bus. Like you can drive a VW bus or you can drive a Mercedes bus. Don't matter. Like you got to drive the bus and not wreck it, So that to me, boy, man, like if you can't, that is a really good question because trying to disengage those two things is, it's a common one, I think. I really do. And I think if you go, like you guys can go out and look on the internet and see, like, do you hear any traders saying, like really kind of beating their chest and saying, this is the only way you should do that. You should always do this. You should always do that.
Pretty common.
A lot of times, they're not saying that because, they're trying to lead you astray, but they're saying that because they're coming from their experience, So, I mean, I can't speak to their motivations, but I shouldn't say that. But I think in a lot of cases, they're actually well-intentioned. It's just sort of like that's all they know. You know what I mean?
Yeah, and that's all they can prove also. Like in terms of a track record, that's what they can prove, right? So that's what they're going to talk about. So it makes sense from that standpoint.
Yeah, and that's why I think, just reading those Market Wizards books is so good. Like that was the real eye-opener to me. The big lesson from those Market Wizards books by Jack Schwager was that like there's so many different ways. Like you come across all of these interviews and you just realize, man, like this guy did that and that guy did the opposite and they both made money. Like what the, like, you know what I mean? Like it's really kind of it'll snap you out of the idea of finding the holy grail or the perfect strategy because you're like, dude, all these guys did totally different things. You know what I mean? And look what happened. Like it's crazy. So I really like how that, that can help you see trading for what it is, which is really it's a personal journey to match up what you should be aligned with, like what makes sense to you. Yeah. So.
Yeah, for sure. And funny story, last month I heard about this guy who like some crazy returns in his trading, and his secret is basically mushrooms. So like, I don't know how sustainable that is, but trading on mushrooms.
So he takes the psychedelics and then he uses those to kind of see the future or something, or like how does he?
I think he feels the market flow better or something like that. I don't know what that's going to do to your brain long term, right? But like, it's an interesting thought.
Yeah, that is crazy. It makes me wonder if you can't just achieve that same thing through a different means, through like a non-chemical means or something.
That's what I'm thinking
it's
too.
Interesting.
Yeah, for sure.
Yeah,
it is an interesting thought though. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I love this analogy. My friends who are into martial arts, they're like, oh, be like water, like free flowing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. So there are some things that I used to say to myself, like, that's not possible, or you're so dumb, or I used to ask for permission a lot. And I realized that I was programmed that way partially because I was telling myself that on a daily basis. And have you come across, what were some of the things that maybe you were programming yourself with just by your speech?
Right. So it's interesting the way I see it is, I guess you could say that I'm programming myself, but the way I see it is that it's kind of like water. So water will go down the path of least resistance, right? Like down the side of a mountain, and that becomes the river, right?
Yeah.
Okay. For everyone watching this, everyone listening to this, I think what happens is you go down that path of least resistance. And where does that come from? It comes from your experience. So it's exactly what you're saying, Hugh. It's the things that you've heard before in your family, like growing up, and that kind of becomes what you say to yourself. So in a sense, you do program yourself, but that comes from your experience, right? So your individual experience growing up, and particularly experience that you had with the important people in your life, and the experience you had, like the relationship you had with money, that to me is what you're talking about. Does that make sense?
Yeah, for sure.
Yeah. So what you're saying is true. Yeah. Go ahead.
So you're basically just perpetuating whatever was programmed into you, right?
Yeah. So yes, but I have a very subtle distinction, because I agree with everything you're saying, except I wouldn't say, just me, I wouldn't say it was programmed into you. I would say, like water, like you're like water, right? Like, so we're like the water. I love this analogy. My friends who are into martial arts, they're like, oh, be like water, like free flowing. Anyway, I wish, some ways I wish I was like a Bruce Lee, and I'm not. But anyway, so you, or I should say Jackie Chan. I guess Bruce Lee is old. That dates me, doesn't it? Yeah. So what I would say, instead of saying that what's been programmed into me, I would say what I've found to be accessible, or like what's easiest for me to latch onto. And what's easiest for me to latch onto as a trader and as a person is what was around the house, what the things that I heard growing up, right? So I'll tell you what the big two for me were that I mostly grew up basically in a single parent household. Okay. All right. And so, my mom had relationships and stuff, but my father, I affectionately call him my sperm donor, because he was gone by the time I was 5, that sort of thing. So that was a big one for me, was trying to figure out, like, am I worth anything? If I was worth something, surely, you know what I mean? Like, if I was actually worth something, surely my father would be around. Like, he left. So I must be worthless. You know what I mean? So that's number one. And number two is my mom would always say things like, and my mom was brilliant. Trust me. She did a great job with her kids. Unbelievable. Okay. This is nothing against my mom. I love my mom. She was literally unbelievable, the things that she was able to juggle at the same time. Amazing. So, but what was interesting was that, she would say things like, we can't afford it. And especially money doesn't grow on trees. Where do you think we'll get the money from? So those two things, so kind of like a low self-worth, and this thing about money, which is like so hard to get, when in reality, if you think about it, and money is probably one of the most replenishable resources on earth. I mean, they literally print it out of thin air.
Exactly.
You know what I mean? Ask any central bank. So that was actually wrong. Like, in both things, I was wrong. Like, the thing to do with my mother, my father had nothing to do with me, right? And then the thing about money is that money literally is probably one of the most replenishable resources in the entire globe. So that was for me. Like, and so what I would say is those things, I use those things to program myself. You know what I mean? I pulled on those things because they were so accessible, because they just were easy. And that was the path of least resistance, is to rely on those crutches. And so I had to, like, overwrite those, you know what I mean? And say, no, like, logically, you can do that two ways. You can do it with logic, and you can do it with simple, like, almost like emotion or like like psychedelics or like subliminals or anything like that. Hypnosis is a little bit of both logic and emotion, but so that's kind of so it's kind of an interesting way to say it. You know what I mean? Like that you've been programmed that way. I would say we have the choice to program what we want.
Mm-hmm.
And your subconscious is only, to me, your subconscious is like a dog. Like your dog can go and fetch that paper for you every morning. Your dog can make sure that he does his business in the right corner of the yard, all that stuff, right?
Yeah.
Or your dog can attack, everyone who comes to the door and can poop all over the place. You know what I mean? Like that's your subconscious. You just have to train it the right way to what you want, and that's what will work. You know what I mean? Like that's how I see it.
I believe that everybody's kind of programmed a certain way. I think it's kind of hard to get out of that. What do you think about that? Like your innate, whatever personality that you're born with?
Yeah, in psychology, they talk about internal locus of control and external locus of control. So the people that say like everything is due to them, like, oh, I'm in this situation because of the world around me. And then there's those people who say, well, I'm in this situation, but I basically chosen this situation through my path, the decisions I've made in my life. And so if I want to get out of this situation, I got to make other choices,
Yeah.
And so you kind of see that in people who say like they're stuck in a job or whatever, when really I think internal locus of control is more realistic and that you chose to go a certain way and got there. And so that's how I would say about your subconscious beliefs and those beliefs that are really kind of driving our everyday behaviors. You're right. I mean, you're right. Okay, you're right. The reason why it's so difficult to reprogram yourself is because most people aren't aware. They're not even aware. Like they're not even aware of the things they say to themselves.
Yeah.
Like, how they do like time management courses? They'll say, okay, write down everything you did for like a day or a week or whatever. And then you have a list and you go, oh my God, I've been wasting my time. Like, you know what I mean? I never do work. I'm always on Facebook.
Yeah, exactly.
Yeah, exactly. Yeah, exactly. Well, it's kind of the same thing, I think, with your subconscious, where if you actually took inventory of the things that you say to yourself and the things that you think and the thoughts that you think, you'd be like, hang on. So what's like my driving belief system here? What's going on? Like, and those will kind of come up in your self-talk. Like you get a little tiny glimpse of that when you pay attention to your self-talk. So I think you're definitely on the right track. I think, like from my point of view anyway, like thinking that way. But I think we just have to remember that we choose, like we literally choose how to run, like which programs to run, how to run them, and we can become aware of those. And another thing you can do is when you wake up in the morning, just start writing. Right when you wake up in the morning, you're in the hypnopompic state. So hypnagogic is when you're going to sleep. Hypnopompic is when you're waking up. And you can literally, in either state, it's a little bit harder to do when you're going to sleep for obvious reasons. But when you wake up, if you can just kind of write stream of consciousness, like in an emotional journal or something, and see those things, and likewise, when you go to sleep, you can make like a really strong fist, really tight, and then as you're falling to sleep, you'll start to feel it kind of relax, and that's when you're going to sleep, and that's when you should start thinking things that you want to sort of seed your subconscious. Like it might only be one thing, I take the best trading opportunities according to my strategy. I take the best trading opportunity or whatever, whatever you're trying to, I attract money easily or whatever you're trying to, like, you know what I mean? Overwrite with all that stupid crap that we've accumulated over time.
Yeah, no, you're right. I think the programming is in the beginning of your life, basically. But then if you don't have the awareness to overwrite that, then it's going to rule your life. But you're right. If the awareness is important, and you just have to overwrite that at some point. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, I have to say, man, it kind of makes me sad, but like where I live, I have to walk by what in the States we would call it the projects, okay? But it's not, they call it something else here in Australia, I forget, okay? But where I live, I don't have to, but a lot of times I walk by. I usually ride my bike and walk. I don't like to drive a lot. And where I live, you don't have to, right? Everything's right here. So I go by these projects, and it kind of makes me sad because I see exactly what you're saying, Hugh. Like I see people, especially with their kids and stuff, and the things that they say, and I feel like, man, it would be so easy to not easy, but if they just had this one thing, if they
Yeah.
just took stock of what they think and how that, you know what I mean? Like how that's driving their lives, if they could just kind of just become aware of that and flip it,
Yeah.
it would make a big difference. And if people just feel like they're stuck,
Yeah, no, I had a similar experience last week. This woman was in our neighborhood. She was looking for directions, and she said, "Yeah, you're all the rich people, but I'm trying to get back to the poor neighborhood." And in reality, these houses they cost less than the ones over there where she lives. But it's just that mentality of this is the rich people and we're the poor people, right? So yeah, it's just a thinking.
Yeah, it's so true.
Yeah. Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
This works, and then, okay, I'll use it then, that sort of thing.
Yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, how's it going?
Pretty good. How you doing, Hugh?
Good. Good to see you again.
Yeah, exactly.
All right, so new podcast, slightly different topic. So I guess we can get started with the first one, which is,
Let's do it.
Is psychology or your trading strategy more important?
Yeah, that's an interesting question. I guess it's like in science, or in psychology, they're always nurture versus nature. For me, personally, I think I look at it, I did my PhD in developmental psychology. So we're looking at different stages. And so the way I look at trading is kind of the same way, where as traders, we go through different stages, and you may have a different experience to me in terms of, what trading, like what that journey's been like. But I think that there tends to be an overarching commonality among traders, which is essentially that, in the beginning, it's all about the system, and the entry especially. And then later on, you start to learn about the importance of exits. And then maybe you start to get into the importance of your risk rules. Mm-hmm. And the other side, I kind of look at them as two sides of the same coin. Risk and psychology is sort of the same thing. I mean, in a sense that if you really mess with your risk and really ramp it up, that will affect your psychology. And we all know that as traders, like the sleepless nights, worrying about the trades and things like that.
Yeah, right? You get your alarm set and everything, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, so I think psychology is very important. Probably, if I pressed, I'd say it's the most important. But I think it's only important to you once you've already gone through those first stages. That's my point of view. I don't know. What's your experience been like?
Yeah, I mean, I kind of think that if I had to put a percentage on it, maybe about 90% is psychology, because a lot of people, think, the system, but that psychology is going to help you stick with the system, number one. Number two, keep searching for systems until you find something that works. So I think the psychology is like a really big part compared to the system overall.
Yeah. And if you think about it, I always like to think the extremes, and then that kind of highlights things like the importance of things. So, for example, like what you just said, what if Hugh traded a totally different system, right? Would Hugh still be able to make consistent profits? And my answer would be yes, right? Let's face it, there are free systems available right now in the dark corners of the internet that will work, right? Mm-hmm. And you just got to find the one that makes sense to you, right? And yet we still spend all this money on systems and indicators and all this stuff. It's the reality. We want someone to put a stamp on it that we believe in and say, this works, and then okay, I'll use it then, that sort of thing. So, but then the reverse, what about the reverse? What if, and so I said the system, right? What if you swap out your system? Can you still make it work? The answer is yes. What if you have a pretty good handle on your psychology today and that's all going well, but then in the future you don't, you lose that part? Would you still be able to make money even though you're trading the same system you've always been trading? And the answer is probably no. So I think you're right. I think you nailed it. Yeah.
Yeah. What do you think about this thought of like, there's just some basic concepts in trading. Regardless of the system, it's always there. So even if you switch systems, you're still looking at a similar type of structure, price structure, or whatever, right? Is that part of that, or do you think it's more of the system?
Yeah, I guess. Can you expand a little bit more on that? Because I want to know exactly what you're
so like if you
focusing on.
If you did like a moving average crossover, right? So that's just basically a turning point. So you could do the moving average crossover, you can do the Bollinger Band, you can do the head and shoulders at that point. That's kind of a system, right? But if you have the right psychology, you could probably spot, oh, that's just a turning point because of this, and not necessarily the indicator, right?
Yeah, and that's right. Yeah, I definitely agree with that. Like I think that you can see divergence on the charts without indicators on the charts, right?
Yeah.
Like if you look at charts long enough, and I'll never forget, I had a friend who'd been trading longer than I had, and he was really good at what he did, but he had all these really, like, I think he paid, I want to say he paid about, I don't know, $1,000 a month or $800 a month. It was something like that every month to rent these indicators that he used, right?
Mm-hmm.
And then he came out to visit me in Australia, and he was looking at the chart on his phone. And he goes, "Oh, I got a signal now." I'm like, "What do you mean you have a signal? That's a naked chart. Like, you don't have all your fancy indicators on there, you know?" Like, because he had to have TradeStation, and I don't know if TradeStation is mobile now, but back then it definitely wasn't.
Yeah.
And he was looking at his naked chart, and he goes, "No, I have a signal." I'm like, dude, that's the 5-minute chart you're looking at, okay? You trade the 3-minute chart with a bunch of indicators. How do you know that you have a signal? And the reality is that he had looked at the market so much through that one like filter that he knew exactly where the indicators would be placed. Do you know what I mean? Because he's just so used to it. Yeah. And I think there's something to that. I really do. I think that if you get someone who's been around trading for a long time, particularly with one filter, one point of view, one system, I think they will be able to tell you whether or not they have a trade, even if their crutch isn't on the chart. I do believe that. I really do believe that.
That's a good point. Yeah. It's kind of a crutch at me sometimes, right? Yeah, cool. Okay, great. Thanks, Walter.
Yep.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
When you find like a new system or a new indicator, you scroll back on the charts and you're like, this thing is gold. Yeah. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about intuition when entering trades?
Oh, intuition.
Yeah,
this is a tricky one. There's actually a really good book if people are into this. I think it's called The Intuitive Trader. We can put it in the show notes for people who are interested.
Okay.
It's not very long. It's kind of a small little book, but if you're into this sort of thing. But I actually think the scientist comes out in me when I think about this, because I think that we have a lot of biases that affect our trading. Obviously, cognitive biases, you can look those up. One of them is that we know, like we know when things are going, like, really going to go, right?
Mm-hmm.
And maybe you're right, but the best way to find out is to test it. So what I always encourage people to do is just keep it in your journal. What I mean by that is, like, if you think that the next trade, like you think you have 90% confidence that the next trade is going to be a winner and unfold exactly as you see it, then write that down in your journal. And then when you have a couple hundred trades, you can actually go back and you can group your trades by the ranking. So like, say, all the 8, 9s, and 10s out of 10, see if those had a higher win rate than the 1, 2, 3s, that sort of thing. Like, that would give you a good sense of whether or not you're right.
Yeah.
Because remember, the turtles, you guys can read about the turtles, obviously, in the Market Wizards and the New Market Wizards by Jack Schwager, those books, great books and all that. They were taught, they were beginners, of course. They didn't really know much about trading when they got into this, and were trained by Richard Dennis and William Eckhart. They were taught to go with the trade that they thought was least likely to go. So if they were almost fully loaded and their risk rules only allowed them to take on so much risk, they had to stop and go, okay, if I have to take corn or soybeans and it looks like soybeans looks better to me, like I think it's probably going to work out, go with the corn. Like, that's what they were taught to do, because Dennis and Eckhart knew that we have these intuitions that are typically wrong, at least in the beginning. I do think as you go as a trader, you can fine tune them and get better, and there might be an edge there. But I think in the beginning, it's definitely not an edge.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. And the open position ratios are a good point to that. Like people who follow the open position ratios among retail traders, to me, that's a really good gauge of the trend. And so when you see all these people going one way, it doesn't mean that the market's trending the other way, but it often is. So, that intuition that we have as traders, I think in the beginning is probably not so good, but maybe later on we can fine tune that. How have you, I know you've been working a lot on your psychology, and what have you found in terms of, like, do you have any data or you have any experiences in terms of locking into that and tapping into that as an edge in itself?
I don't have enough data yet, but I think it's exactly like you say. In the beginning, you think you have the intuition, and it's just wild ass guessing, right? But then later on, then you develop some sort of intuition. And then nowadays, it's more like, you have a feeling if the market's going to move in your favor or not. And when I've tracked it, bailing early I've been right more than often than I've been wrong. So you do develop that intuition going forward, right?
Oh, that's awesome. So far your data shows that you have like a bit of an edge there with your intuition.
Yeah.
That's awesome. Yeah, that's great.
Yeah.
That's great news. Yeah. People sometimes ask me, they'll say, hey, what do you think about just like going total free ball, just like whatever, you think is going on and that sort of thing. And I think that's a dangerous path. Like, I think if you just do that as a trader, I think it probably could work if you had decades and decades and decades. And maybe, like I said, you've got good data to back that up. But I think a lot of times, like, for instance, right now, I'll tell you right now, this week as we're recording this, I have a bias on some charts, like the Aussie CAD, the Aussie Swiss, a couple of other charts that CAD Swiss is another one where I want to sell. But looking at the charts, like I look at the chart and I say, if I didn't have my sell bias, that actually looks like a really good buy. Okay. And it's hard for me to watch the market march and go up, for the last couple of weeks as I'm waiting for a reversal signal to sell and write it down. But that's because I've got my bias. So, I think you really have to decide. And sometimes you can do both. Like you can say, okay, I have my systems that have my rules, and this is my account that I'll do that in. And then I have maybe you have like an intuition account. If you have enough data that suggests that you're good at that, maybe do that and just have a race. See which one's going to make more, see which one, over time comes out ahead. Maybe that's the way to go. I don't know. But I think definitely you got to be scientific about it. You got to test it. You got to make sure that what you think is going on is actually going on, because it's so easy, as we know, when you find like a new system or a new indicator, you scroll back on the charts and you're like, this thing is gold. Yeah. It never works out that way, does it? Yeah.
No. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I don't know why we're just built like that or something, right? Like some of us have that tendency to take it personally.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. What do you think of FOMO? How do you deal with FOMO? Like, you missed a trade. It's a really good trade. It turned out to be a big winner. How do you go forward?
Yeah. And it comes in so many forms, doesn't it? Yeah. Like you could have a situation where you missed on the trade and the trade went just like you thought. And for whatever reason, you weren't around the computer, or you didn't block out that time, or maybe you're on an airplane. That's happened to me before, back when people used to go on airplanes. We're recording this right now when no one's going on any airplanes right now and the airline stocks are tanking. But yeah, so there's that. And there's also the other bit, which is like, I think comes in when, as a trader, you get a little bit more advanced, where you're like, all right, I had this trade and I was in it, but then I got out too early and oh my God, it's gone another 500 pips. Like there's another FOMO where you start to like, and that's dangerous too, because that can lead you to tweaking your strategy, which maybe it's a good thing, but a lot of times that's a slippery slope too, to go down that path where you start changing your system because of one sort of we might even call it an outlier trade that's not very common, right? So yeah, that's tricky. That's definitely that's definitely a tricky road to go down. So I think you really have to put it in perspective too and say, like, why do I feel like I'm missing out? Why is it? Is it because my exit strategy doesn't capture the big moves? Is it because I want to trade more often and I feel like I'm under the gun to up my income from trading so I can quit my job? You know, what's the motivation going on there? Is it because all the headlines, like all the news is saying to buy gold and I didn't buy gold? Like, where is it coming from? And I think as traders, I feel like our job is to put the pressure should really be coming from our system rules. And I know that seems kind of weird. Like, what do you mean system rules? But I think most of what we do, we should really strive to point back and say, okay, the reason I did that is because of my system rules. Okay, you can argue whether or not those are correct or not. And you might look at my system rules and go, dude, what are you doing? That's okay with me. Like, that's totally cool with me. As long as I can look at myself in the mirror and say, you know, I did the right thing. I took the right trade. You know, that like I followed the rules. That's really important to me. And remember, I don't know if you remember this, but remember at the London conference we did with Rima. Rima's a great trader, right? I think someone asked him during his presentation about trading big shadows, and they were saying, well, what if like it's almost a big shadow, but it doesn't quite, like, you know, it misses it by a few pips or whatever. He's like, dude, you know, you got to have the line somewhere, you know? And he's like, I won't take it. He was like, that's how firm he was. Like, I'm not going to, if it doesn't fit my characteristics, I'm just not going to take it. So, you know, I think that's actually a really good thing. And I know people kind of rail against that, but I think the problem is if you don't follow it in such a strict manner, you just run the risk of blurring all the lines, and that can lead to problems, especially in the beginning. I mean, with experience comes a little bit of discretion, but I really do think if I had two traders and I knew one of them was really conscientious and he was going to follow his rules, and the other one, like, she was a little bit more wild and a little bit crazy, I would bet on the more conscientious trader who's going to let trades go and have that FOMO, even though and miss out, knowing that he's gonna stick to the rules, you know, regardless throughout any sort of market situation. So to me, I think the pressure should come from your rules, I guess.
That's a great point. Yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
At least for myself, I think one of the issues was taking everything personally, like being wrong. And that was a reflection of me somehow. You know, I was wrong on that trade, so that's why I'm beating myself up about it. But I think once you can learn to forgive yourself for that and just kind of move on to the next one, like you said, follow your rules, then I think it becomes much easier, right?
Yeah, and you know, you guys, we can all learn a lot from the sports psychology stuff, right? Where like think about the greatest batters in baseball history, like 7 out of 10 times they sit down. You know what I mean? Like they, you know, it's only 3 out of 10 that they actually get on base or you know, hit the ball or whatever, right? Like that just doesn't happen. And it's the same thing. Like to use like an NFL, I like to follow NFL. So gridiron, we call it here in Australia, gridiron. The players who get burnt, like the cornerbacks, so they're the defensive players that get burnt, right? And so people are scoring touchdowns on it. They have this thing called a short memory, right? Like, you got to have a short memory, just go back to the next play. The only thing I can control is the next play, you know, and this mentality. And if you can sort of adopt that, maybe read some of those books about sports psychology, you can kind of get that mindset. Like, really, the only thing that matters to me is my next trade. If I screwed up the last trade, if I flubbed up the exit, if I ruined the entry, if I got my risk wrong or whatever, like there was a guy in the forum, he accidentally had a trade size that was 10 times bigger than he wanted. Right? So he fat fingered his trade. Like, it doesn't matter next time. It doesn't matter because it's a new slate. You start over, you just follow your rules again. Like, all that stuff that happened in the past, it really, but the problem is it's so hard, isn't it, as a human to let go of that?
Yeah, it is. It's really hard. And I don't know why we're just built like that or something, right? Like, some of us have that tendency to take it personally.
Yeah, and maybe it's adaptive. Like, maybe when we were in the jungle as hunter-gatherers, we saw grandma eat that green berry and she died. And so we're like, okay, you got to stay away from the green berry, right? Yeah. I mean, maybe that's where it comes from. It's just like, we're kind of fluid in our behaviors and adapting, and that's, that might be like an adaptive, trait in most life, but obviously not in trading. Obviously not in trading. It's really hard to make trading work if you're continually changing. Yeah.
Yeah, good point. Yeah, short memory. Remember that.
Exactly. Yeah.
Yeah. All right. Thanks, Walter.
Yeah. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Hey, Walter, before we start this episode, how about we do the drawing for last month?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Let's do it. You got your randomizer on there? Is that what's going on?
Yeah, I think I'll put it in a certain order, and then you pick a number, and then we'll see who that is.
Okay.
So we got 26 comments and ratings from iTunes. So why don't you pick a number between 1 and 26?
17.
17.
Let's see what we get.
All right, cool. So I'm going to hop over to YouTube. And so Veronica Henderson, you are the winner for last month. And what are you giving away, Walter?
Well, we're going to send her a psychology book. How's that sound? Good?
Sounds good.
Yeah.
And that's from you. And for me, Veronica, you get a 30-minute coaching call for free.
Cool.
So,
all right. So Veronica needs to send in her, and where will she send in her, or how will she send in her address or whatever? You know what I mean?
Yeah. I'll try and contact her through YouTube, but Veronica, you can send in an email to hi@thinkprofit.io, and that will come to me, and I'll take care of you.
Sweet. Thanks, Veronica.
Yeah.
Cool.
Thank you, Veronica. All right, cool. So let's get into this week's episode. I thought we could talk about feedback loops, like positive feedback loops, and creating rapid feedback loops to improve yourself faster.
Right. Okay. Yeah. Well, so from my point of view, the lower the time frame you're trading, obviously, the faster you're getting feedback on your trade decisions. But beyond that, one of the tricky things about trading, I think, is getting stuck in the improvement idea because there's the element of chance, right? So because we can't really account for the random nature of our sequence of wins and losses, we can anticipate losing streaks, the worst type of losing streak, the typical losing streak, the biggest sort of win streak. We can use that you can use that to change the way that you manage risk and stuff like that if you want to get really sophisticated. But the other thing is there's a real temptation to ascribe responsibility for a given trade's outcome to elements of your system and then have to go back and, rejig it. So that's one thing that's really critical. So the two takeaways from me would be, if you're trading lower time frame, the good thing is if you can do that, you will get almost instant feedback. Like if you're trading the 5-minute, 3-minute, 2-minute charts, you're going to get this feedback like really quickly, which is great. But there's a real temptation for us to tinker with things. It's never like, you think about it. When the Wright brothers came up with the airplane, the one that they got off the ground, lots of people around the world were trying to get off the ground.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And interesting fact, did you know that Harry Houdini, the magician, was the first guy to fly in Australia?
Yeah, I heard about that.
Yeah, he packed all this stuff and brought it down to Australia. But anyway, so that airplane that the Wright brothers created, like, we as a species, we don't like just go, we got it. We got an airplane. We're good to go. Like, we don't do that. We're always kind of like making it faster, better, more comfortable, more efficient. Like, that's how we're wired. Like, we're engineers by birth, really. And even you can watch even like little kids when they build a sandcastle or something. They're just, they're always trying to figure out, okay, well, this collapsed, so I'll do that. It's in our nature. And so I think for trading, that can be a bit of a slippery slope. And I'm always kind of guarding people against that, so that's, but yeah, so your feedback should be, so you want to account for hindsight bias. So a good way to do that is with your journal. So in your journal, you can write down how well you think this trade is going to work out, like on a scale of 1 to 10 or 1 to 5. I think it's like a 5. This is brilliant. This is a great 1 to 5. This is a 5. This is a winner. And then you can go back and see if your intuition really works. And you can go back and when you exit your trades, go back and look at your exits. How well did you sit with your rules, or did you change things up? So that's a really good way to incorporate that, especially if you're using higher time frames like I am, and your trades kind of take, like, why did I take this trade again? Like, you need to have a good record, right? What are your thoughts on using feedback, or how feedback interacts with trading?
Yeah, that's a really good point you made about trying to tweak things. I think people buy courses, or they have forums, and then they always want to tweak them. So that's a good point. I would add to that, I think it's important, especially if you're trading the higher time frames. Like you said, if you're trading a 5-minute, yeah, you get a lot of feedback, and you get instant feedback loops, basically, right? But if you have a higher time frame, figure out ways to create that same sort of repetition, but not doing it necessarily in the live market. So you could do Forex Tester, do some back testing, just practice your setups. You could look at your old journal entries and take a look at the winners versus the losers, and kind of focus on the losers and see what you're looking for. And then at the end of the week, you can also take a look at the trades that you may have missed. And that, like you said, that could suffer from hindsight bias, but that can also give you repetitions that will allow you to improve faster.
Yeah. And yeah, that's great. And the screenshots too, like if you have a screenshot before, like at entry, and a screenshot at exit, right?
Yeah.
And you can have a screenshot of what you consider to be like a perfect setup, and compare that to the one that you're about to take. Make sure, like, am I saying like a similar thing here, or is this very different? Like for me, as a pattern trader, that became really important for me to make sure that I knew that I was trading the pattern and what I saw, and not what I thought. The more you get into news and stuff, and I love FX Street. Like FX Street's awesome. They're awesome. But spending too much time on there and reading about what other people think about the markets, to me, that's something that, well, it's the same with any business newspaper or any business website, like any economic related thing. Like you can really get stuck, and to the point where you're blind to one side. Like you just buy only or sell only. So yeah, it's really tricky. Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
These are the sorts of people that don't make it as bank traders, right? They get fired. Yeah, they get fired when they make the mistake twice. They're done. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So, Hugh, we have a question from a trader, good friend in Ireland, but he's from South Africa. Really cool guy. And he has this issue of, he will backtest his strategy, get his numbers, get everything set up, everything's right, everything looks good. But then what happens is, during the week, he'll start taking trades that are not part of his strategy. So he'll see signals from other traders or another system that looks really good that he hasn't tested or whatever, and he'll take the trade. And so the question is, well, what do I do to get around this?
Yeah.
Like, how do I, this is an issue. It's really impulsive trading, right? Is what it is. So I have some thoughts on that. Do you want me to?
Yeah, sure. Go for it.
Okay. So there are a couple of things you can do. So this impulsivity, if you take a personality test, you would probably see that you're high on impulsiveness. So you need a good a good personality test like the Ocean, which is the big 5. If you just Google, like, I'll put a link for guys in the show notes so you guys can take it. But if you're high on impulsiveness, then that would be the kind of thing that would come up. And this is tricky because, like, these are the sorts of people that don't make it as bank traders, right? They get fired. Yeah, they get fired when they make the mistake twice. They're done. So what I said to him, I said, you need a trading accountability partner. You need someone to talk to every week. On the weekend or whenever, and just go over your trades and let them go through everything and see why you took this and all that. Also, I like to use you only have a certain number of arrows to shoot. So this is really good for, actually, scalpers use this quite well. This rule where they say, like, actually, I was talking to a trader this week. He has a 5-minute scalping system, and he only gets 2. What he's basically trying to make is, if he can make 1.5% a day, then that's his goal, and he only gets 2 arrows a day. And that's kind of what I recommended to my friend. I said, look, just give yourself a certain number of arrows, whether it's 2 arrows, 3 arrows, whatever is a day. And after you shoot those 3 arrows, you have to come back the next day. And your trading accountability partner on the weekend will say, okay, let's say, how many did you do on Monday, Tuesday, Wednesday? Which system was this? Is it a system you actually tested, or was it some, Yahoo on the internet saying that the euro is going to go up or whatever, you know what I mean? That sort of thing. So that was a pretty, and then also I suggested I can put a link in for people interested in the show notes. For people who are interested in the subliminals, there are subliminals for impulsiveness. There's hypnosis tracks for that sort of thing. So if you're accountable to somebody, if you use the arrow technique, if you're working on your subconscious, those are the 3 things that I would recommend to do if this is the kind of situation you find yourself in. Yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Okay, cool. Yeah, I personally have a slightly different opinion on that one. I think the arrow technique is good. Like, I only allow myself 2 entries per trading idea. So that really limits the losses also. But I think also maybe one thing to consider is if maybe you feel too restricted by a system. Like, if you should be more of a discretionary trader who just reads price action as opposed to somebody who has a set system and only trades that system. That kind of goes against some logic and some things that I also teach. But I think there is that personality type that is more of the discretionary trader and wants to have more variety, and the system might be like restricting them. And I think that that's something that can be back tested, something that can be practiced every day, but it's less about having a set system. So I think that's maybe something to consider also if you find yourself straying away from the system that you're supposed to be trading. I've read a lot about like ADD personalities and how sometimes these types of people have to do a project, put it down, do the next project, and then come back to the other project. And it's just the variety. They need that variety. So that could be one of the things to explore if you find yourself not being able to follow a system.
Yes, I definitely agree. And another thing you might look at that occurred to me while you were explaining, I think, some people will say, hey, Walter, why don't you just, like you said, just read price action? Why don't you just trade price action? And my question for you is, have you tested it? And so what I would say is, what if you take all of your strategies that are tried and true and back tested and all that, and you're trading those on your live account, and then at the same time, in parallel, you have a demo account. What you're doing is you're taking all of these, like, sort of reading the market or gut feel sort of thing, and have a race. Have a race. Who wins every quarter, every 6 months, every 9 months, whatever it is, and see, like, where do you fall out in terms of the demo account versus the live account, and see if it's actually better. Because I feel like we do run into hindsight bias with this sort of thing. We kind of trick ourselves into saying, oh no, this system's amazing, but it's easy to skip over, you know what I mean, when it doesn't work. So I agree. I definitely agree. I think that's definitely another way to do it. And if you have that data, though, and you can go, well, look, I've got this demo account, and I've actually been just fully trading discretionary price action reads on this one, and it's actually pretty good, then that might give you a reason to consider moving a small account into that, to that method or something like that.
Yeah,
for sure. Yeah.
All right. Thanks, Walter.
Cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
We could print the turtle rules in the Wall Street Journal and a lot of people wouldn't even trade them.
Yeah, nobody would
Well, why
follow
is
it.
that, you know?
Yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, talking about trading or changing trading systems. So you're at that point where you want to change your trading system. What should you consider?
If it makes any money. No, yeah. No, obviously, yeah. No, I think, well, the two big considerations are, I'd say three actually. Is it related to anything that you're doing right now? In other words, are you just kind of trading almost the same? Will you be taking almost the same trades with adding another trend following system, for example, right?
Yeah.
Number two is, are you going to be able to trade it depending on your lifestyle? Like, for example, if I'm trading the 6-hour charts where I live, I have a problem because I miss the 1 a.m. one, which is pretty darn good, right? That's a 1 a.m. candle that prints at 1 a.m. that I would miss. So unless I've got some sort of automation going, you know what I mean? Whereas the 8-hour charts is a little bit different because I can get all three in, right? Yeah. So, you know, there's sort of considerations around lifestyle. Is it related, highly correlated with something you're already trading? Can you actually take the trades? Like, it's going to fit in your lifestyle? And the third thing is really, what's the goal? You know what I mean? Like, what are you trying to do? Are you just, is it variety? Like, you know, the people I think we talked about in another episode, you know, ADHD, always kind of moving to a new thing, and it's exciting. But what are you trying to do here? I think it makes a lot of sense if you're trying to flatten your equity curve so that you have a strategy. Like, if you have a trend following system and then the one you want to add is a reversion to the mean system, if that's what you're trying to do, that would make a lot of sense to me. You know, like, let's say you trade Donchian breakouts, right? You're a trend follower, and then you want to add a Bollinger Band strategy where you have a really wide Bollinger Band or whatever, like a 3 standard deviation Bollinger Band, and you wait for the market to make, you know, double tops and double bottoms at the edge of the Bollinger Band or something like that. Like, that would, you know, that would make sense to me, because those two strategies are probably going to come out with a super low correlation, even if you're trading the same pairs and the same time frames. So that's ridiculously good idea if you can make it work, right? So yeah, that's what I would basically say. Just those three things. What about you? What are your thoughts on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, I mean, similar thoughts. It has to match your lifestyle. I know early on, I would learn like New York Open trades, and I wasn't even awake for the New York Open, so it didn't make any sense. But that's what we do, right? Like, we jump on a system that we think looks good, or the trader said, "Oh, I made like 50% in a month or whatever," and then we just jump on it because we want to make that money or whatever. And then, like you said, what do you want your life to look like? Do you want to be trading for like 2 hours a day, or do you want to be day trading for, you know, like 30 minutes or whatever on the New York Open or whatever? Kind of build your strategy selection around that, instead of jumping on something that's the most profitable or the most, you know, has the most trades in a month or whatever. So that's what I would say. Yeah.
I mean, sometimes we don't actually consciously acknowledge what we're trying to get.
Yeah.
Like, when you're scrolling the internet looking for like the quote best system or whatever, like, you just have to be really aware of the fact that there are some really good strategies out there that work really well for some people, but you might not be able to trade it. Like, people, like, you know what I mean? Like, especially like the people listening to this, you are most likely to be the type of person that likes to figure things out. So you're not probably going to be the type of person that's going to sign over your account to a signals trader, right? Like with those social trading platforms or whatever, like where they hook up your account and just, like, you're the kind of person that wants to know how to trade. Like that's why you're here, right?
Yeah.
Most likely. So it's hard for you to let go of that. What that means is, finding really great strategies is one thing, but making sure that they fit with you is another thing, because everyone, you just can't, you won't trade it unless it really matches up to what you believe. And that's why I think when they mentioned, I think it was Richard Dennis was saying about the turtle rules, he said, look, we could print the turtle rules. This is when they were a big secret. They're no longer a secret, but when they were a big secret, like, look, we could print the turtle rules in the Wall Street Journal and a lot of people wouldn't even trade them.
Yeah, nobody would.
Why is that? Yeah, exactly. Like, why is that? Well, it's because some people look at that and go, that doesn't make any, like, no way. That's not for me. Look at all those false breakouts or whatever, that sort of thing. Meanwhile, you have these turtles that learned it and went on to manage more money than Richard Dennis did. So it's just funny to me that, people think that it's like finding the hidden treasure, in a lot of ways it is, but it's not, the system isn't the hidden treasure, right?
Yeah, exactly. Cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Well, if you get too down on it that you missed a trade, I think it also blinds you to another trade setup that could be happening on that same pair. And that really kind of brings down your psychology.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. Today we're going to talk about patience. Johnny wrote in and he asked, I'm having trouble sticking with profitable trades. And he makes some profit on some, but I think he's really dealing with cutting his trades too short, or he feels like he's cutting his trades too short, his profits too short, and he's getting out a little too early. So what would you say to that, and what kind of tips would you have for him?
Yeah, well, that's a common one. So I'll tell you a story. So I had a friend who was a scalper, and he traded the 3-minute charts. And there were plenty of days, he would trade the New York Open. There were plenty of days when he would be kicking himself because he would literally like get in on the double top on the 3-minute charts of the day, or you know what I mean?
Yeah.
And I said, well, dude, that's not your strategy. Like, your strategy is to make 15 pips, 20 pips. Like, that's how he traded. Look, it's a missed opportunity. So one of the biggest things for trading, like I missed one last week. I had a Swissy trade all set up. I put everything in perfectly, my order and everything, and it didn't retrace enough. It was a sell limit. It didn't retrace enough to get me in the Swissy, and then I watched it go literally like the next 24 hours. And that's the hard thing, right, about trading.
Yeah.
I think you just need to decide who you're going to be, because if you're going to be the type of trader who bags those really big wins and that's what you're looking at on the chart and going, oh, wow, I missed that, then you need to build that into your strategy. Okay. So if you're a 3-minute chart trader and you want to occasionally get those big wins, maybe you take like 2/3 of your trade off when you hit 20 pip target, and then you trail the rest. And then, 1 out of every 8 or whatever, you'll get a nice big fat win, and that will bump up your average R. But trading is dealing with the missed opportunities, dealing with the emotions, dealing with, figuring out why you do certain things when you shouldn't, which is all the psychology of it, which is what we talk about here, right? So yeah, I mean, either build it in or just let it go. That's what I would say.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah. I think a lot of that is also like, you don't think another good opportunity will come along again. If you just keep in mind that, okay, there's going to be another opportunity out there, there's going to be another chance to make some money, then you can just let this one go and, take whatever you make, 1 hour, 2 hour, whatever your plan was, and then not really obsess about missing this one trade.
It's so true, man. And that to follow up on that Swissy, the next couple days, I had a New Zealand yen trade, and I got in at within 2 or 3 pips of the high of the day and sold. And it, so one of them, it went to where I wanted to get in, and the other one, it didn't, it didn't retrace enough. So that's exactly it. I think And that's one of the things I learned from my friend who was doing the 3-minute scalping stuff. He would say that like all the time. He would go, oh, well, there's always going to be another trade. Like he was really good about that.
Yeah.
And I guess that's easier when you're trading the 3-minute charts.
Yeah, that's true. That's true. Yeah.
If you're trading the daily charts, you know, and you get like 8 signals a month or whatever, and you're like, well, there will be another one. Yeah, could be another 2 weeks or so. Yeah, exactly.
Yeah, that's true. That's true. And I think it also blinds you to, well, if you get too down on it that you missed a trade, I think it also blinds you to another trade setup that could be happening on that same pair. And that really kind of brings down your psychology and your profitability too, right?
You're right. Yeah, that's a great point. And it's also why, when you think about it, I learned this from an old trader. He was saying that, you know, when you're in a trade and you're like riding it out and then you finally get completely out of the trade, if you think about it, why did you get out of that trade? Okay, so if you bought, for example, you bought the pound and it went up, and then you got your signals and they all got you out of the trade, why wouldn't you just go short? You know what I mean? Is there a difference between an exit signal and an entry signal? For some systems, there isn't. So he would say that the reason why traders have a hard time getting right back in is because they've spent all their psychological energy on the trade and they kind of want to rest. And I totally identify with that. And I was like, wow, that makes a lot of sense. And I think that's kind of what you're getting at. You know what I mean? Like it's kind of part of that thing. Yeah.
Yeah. You're tired and you just want to take a break.
Yeah. You don't want to deal. You just want to deal.
Yeah.
Exactly. Yeah.
Yeah. That's a good point. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I've heard about a guy, I don't know if it's true, I don't know the guy, but I heard about a guy who was doing kind of a similar thing where you would have like a 1-pip stop and he stopped out all the time. And then he would occasionally like a 500 pip win where he'd make 500 R or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, I know you have some experience talking to Darren with this. I want to talk about random entries. What are your thoughts on the psychology behind random entries, just entering anywhere in the market, putting in a stop loss or whatever, and a take profit and just letting it rip?
Okay, so got two main thoughts. So my first thought is that this is an exercise I encourage people to do, like people listening to this or watching this podcast. I would say try it out because it's a really good way to highlight the importance of your exit rules, which a lot of people don't focus on, number one. Number two, that's really important. It's a great lesson to do that. And the other thing is, it's interesting that like you would think really sort of data-driven, logical traders who are like programmers and have that sort of background. It's interesting to me that many of them won't apply a strategy if it doesn't make sense. So this kind of speaks to what you're saying. Like there's software out there that you can get. You feed all your data into it, and it will come out with a strategy that will say, hey, every day at 3:15 p.m., you need to buy the euro against the dollar or something like that. You know, some sort of, data-driven rule. And a lot of traders, they'll go, why? That doesn't make sense. And they won't trade it, even though the data is looking at them in the face and it says, this is a profitable strategy. You know what I mean? So I think that like you kind of have to decide as a trader, are you going to like be hands off and let the data tell you what to do? In this instance, what you're talking about is, what if you had a strategy where it was random entry and you just had a really kind of cool trailing exit that took advantage of the occasions when you were right? And so would you trade that? For most traders, the answer is no. And it's the same reason why a lot of traders want to be discretionary and want to have kind of have their hands dirty when they enter trades. And I'm just as guilty as anyone. So I think it kind of gets at the core, this idea of, why do you need to have a logical entry rules? It kind of gets at the core of what you believe as a trader. Is it that you are making the trade, like you're making this happen? Or is it that there's just randomness in the market? Occasionally these things pop up, and that's why the buying the euro at 3:15 every day sort of thing works. You know what I mean?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So it really is up to you. And most traders can't do that. Most traders won't be able to take random entries. It's a very unusual thing that you'll run into somebody that can do that. I've met a few, that are like usually like programmer types, and they're like, yeah, this is what it shows, this is what we find, and this is what I'm going to do. And so you can do it. You can definitely do it. I mean, all the tools are there now. This wasn't the case when I started doing neural networks in like 2004, 2005. I was using neural network software that wasn't trading related really. And so it was kind of clunky, but now today, like there's all these really cool softwares that you guys can use. Maybe I'll put some links in the show notes for people interested, and it literally will spit out a strategy and say, well, based on your data, this would work. Now, that doesn't mean it's going to be profitable in the future or whatever. That's like the first step for a lot of these people who want to use machine learning and these sort of advanced, in vogue algorithms that, are kind of taking over the world. Yeah.
No, that's interesting you mentioned that, because I coded up a simple EA. It was just taking a 20 pip stop loss and a 200 pip take profit. And I just coded up one side, just say buy all the time or sell all the time. The system was profitable. I mean, it was like marginal, but you just let it rip, and it made money. And I never went back to it because like you said, I don't know if I could really get my head around trading that with real money, but maybe at some point I'll revisit it, because just a simple idea like that, I'm sure could be optimized a little bit more.
Yeah. I can see the wheels turning in people's heads who are listening to you say that about your EA. Like, well, what if I used, like moving averages or MACD to kind of give me a direction, and then I would just turn it on, like I can see people definitely doing that. Yeah. And it makes sense. I've heard about a guy, I don't know if it's true. I don't know the guy, but I heard about a guy who was doing kind of a similar thing where you would have like a 1 pip stop and he stopped out all the time. And then he would occasionally like a 500 pip win where he'd make 500 R or whatever. Yeah, I don't know if that's true. I do know there is a guy though that trades 20 to 1 and he has an 8% win rate. Matthew in London. And so that's kind of cool that there are people doing it, I think. And he said what he was saying was that I think there's logic behind it. I don't think it's random entry. He didn't really tell me. It was interesting. He was saying he thought he had to have it automated because he wouldn't, like psychologically, he wouldn't be able to take 92% losses, like keep entering.
I think that was the biggest issue for me. Like there were so many losses in a row. And in live trading, I don't know if I could handle that, but
of course.
Yeah, if you automate it, might be all right.
Yeah, exactly. Cool.
Cool. Yeah. Thanks, Walter. See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
It's obvious.
Yeah. It's like trying to watch a YouTube video on how to ride a bike for the first time, and then you go ride the bike and you fall on your ass, right?
Yeah. That's so funny you said that. Of course
you're not going to have confidence.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, here's a classic one. Fear of entering a trade. Some people are afraid to pull the trigger. What are some of the psychological things you see behind that and some fixes?
Well, it's kind of like, I think about sports, right? And it's specifically like coaches. So like I like to watch NFL, and what's interesting in gridiron, as they call it here in Australia, gridiron, it sounds so much more manly, gridiron, but when the coaches are always talking about in NFL about how, being prepared. And even the players will talk about like when they move from one team to another, like, wow, things are so different here. Everything's so accounted for and they've considered every scenario. And I think that's kind of in a way what coaches are meant to do, is to kind of provide this framework for the players. So no matter what happens, they know what to do, sort of thing. In trading, it's the same way, because if you're not prepared, that's when you feel like uneasy. Right. Mm-hmm. So you tell me, like, if you were to, like, I'll ask, if you were to take a strategy and strategy A, you've back tested, you've taken 900 trades in it, in the strategy, and you know the numbers, and then you go, okay, I'm gonna go live today. Versus you have a strategy where you kind of was just messing around with something the last couple hours, looks pretty good on the charts, let's go for it. You know what I mean? Which one? Yeah, which one are you gonna stick with after you have 9 losing trades in a row? Right? It's obvious.
Yeah. It's like trying to watch a YouTube video on how to ride a bike for the first time, and then you go ride the bike and you fall on your ass, right?
Yeah. That's so funny you said
you're not gonna
that.
have confidence.
Of course, yeah, of course. That's exactly what I did last weekend with my daughter. Actually, we were looking at YouTube on how to roller skate.
Okay.
And I'm like, dude, so I'm like, because I didn't know how to teach her. I just fell on my butt as a kid, right? Like everyone.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And she's really keen on the roller, and she's been talking about it constantly. So I'm like, okay, we're gonna go to like an empty parking structure where there's no cars or anything, a nice smooth pavement. And she was having trouble, so I said, well, let's YouTube it. So we YouTubed it, and we got a couple of tips. But you're right, we were still falling all over the place. Like it was still terrible. And of course, that's the same thing with trading, right? Like the goal really, I think, as a trader, it's like in sports or in battle. I kind of hate the battle analogies because it's so different, but real life is different to like, going into war or something. It's not, I know people say that with trading and business and stuff, but it's not to me. It's totally different. But anyway, so if you're super prepared, you've got your numbers, you've got that experience, you've traded in sideways markets, up markets, down markets, all that stuff, you are actually going to have a bit more stamina than that trader who just kind of pulled that stuff out of his behind last afternoon, in the last afternoon. So that's under your control. It's not like a personality dimension where you say, like, some people are very conscientious and everything has to have its place, and other people are open-minded and can experience new things, and other people are closed-minded and want to have a routine. And, it's not like that. It's a thing that's up to you. Like you decide how experienced are you going to be in your strategy before you risk real money, and how much do you know about it? Like, do you know what the probability is of 9 losing trades in a row? Do you know what that is for your strategy? Like, if you don't know that, you have a 29% chance of having 9 losing trades in a row, then you might think that something's broken, right? So there's a lot that goes into being prepared. And to me, that's why you would be fearful. So the reason why you have like fear of taking a new trade, even though you have a solid signal, is because you're afraid of what's going to happen. Why are you afraid of what's going to happen? Well, because of what happened in the past, right? Yeah. Well, I had a bunch of losers in the past. So the question is, do you know this is normal based on your preparation? Or do you just think you're not prepared enough, so you don't know? You think, well, this is it. It's broken. So
I think it's also worth mentioning, sometimes when you go live with it, maybe you're taking too big of a position size. And that's, if you just scaled it back a little bit, sure, you won't make as much, but then you won't actually take the signals, right?
Yeah, and that's how our friend Alex in the UK, that's how he got really good at trading, was he just risked a really, really, really tiny amount. He's like, dude, I had perfect execution. Like, he never had any problems. Like he literally trained himself to execute his strategy flawlessly because he's like, I'm risking 1/4%. What can possibly go wrong,
Yeah.
So, yeah.
That's a good point.
Yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A really good way is self-talk. Like when we all talk to ourselves, or I hope we all do. I hope I'm not the only one. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about different methods of rewiring your brain for success? What have you tried? What have you seen work? stuff like that.
Yeah, that's a great question. I know you've tried quite a few things. I'd be interested to hear. It's funny, isn't it? Like there's sort of two competing ways to look at it when you talk about this. One would be like set a map for me to do what I want to do. Like it's sort of the attract, like what do I want, right? What do I want to achieve? What am I trying to do? Where am I trying to go? Versus the other side of it, which is what am I trying to get rid of? You know what I mean? So people get it confused. Like I believe that people look at your subconscious and they say things like, oh, your subconscious is sabotaging you or something like that, right? But that's not really how I look at it. It's like if you're a programmer, you can create any program you want. That program could be like a virus, to hack into, and steal people's passwords or whatever virus, or shut down your system and stuff like that. Or you can create a program that kind of sets you up on the path, right? And so the way that you can do that, there's lots of different ways. So hypnosis, right, which I'm a big believer in, especially for habits. Like if you have a habit of, let's take what I did was I would move my stop. So if I had 150 pips of risk on a daily chart trade and I saw that it went 120 pips toward my stop, I would move it because the trade's right. I just need to give it a little bit more room, I'd say that.
Yeah.
And that was my big habit, right? So, hypnosis works really good for those sorts of things, like stop smoking, stop overeating, stop moving your stop loss when you shouldn't, like things like that. I've also used what's called the Neo Neurophone, and I can put a link in there. Unfortunately, for the show notes, you guys can check it out. Unfortunately, I do believe that the Neo Neurophone is no longer available. However, you might be able to find used ones, and you might be able to find an older version of it, which is a little bit different, but it basically does the same thing. It's an amazing device by a really cool inventor who died just recently, I think just last year. Yeah, January. Yeah. So anyway, so that's another thing you can use to program your mind. You can use subliminals, right? You can listen to those when you're back testing, when you're around the house and you're sleeping at night, which is what I like to do. Sometimes I'll turn on during the day, but usually I just have them run at night. There's all kinds of things. There's like tapping, right? That people have used. There's also a thing where you kind of like test your beliefs with your body, and you sort of reprogram your body or reprogram your subconscious through that, which is really kind of interesting. I think for most traders and for most people, really, the key is to get to the deeper level. When you realize like I have an issue or I'm not going where I want to go. So those two, so I'm trying to get rid of an issue or I'm trying to map out progress to where I want to go. Once you decide which, what you're trying to remove or add, then I think the important thing for you to do as a person and as a trader is to really sort of zoom in on the deeper thing, right? And so that could be like dream analysis that you can do that. And so what you're trying to figure out is why is it that my subconscious program is setting me up for this? Why is that? What's going on? And then you can reprogram it, right? I've never done it, but people who talk about, I know we're getting into the sort of esoteric stuff here, but that's cool. And the esoteric stuff is cool. Like people who do like past lives therapy, and they'll talk about things. I've tried to do it, but I didn't really I should have gone to a hypnotherapist or someone who specializes in that. I've actually just listened to CDs and stuff like that do it. And I always just fall asleep. So, and I haven't really made much progress there. I would like to though. But yeah, so I think the real key to me, there's a couple of things. Are you trying to remove something or are you trying to get something? Obviously, we want to do both, right? We want to figure out what's the issue and then how do I map out where I want to go? And then the other thing is, it's not just writing down affirmations or like staring in the mirror and saying things. Like I think that stuff is great. Like at a certain point, you're going to hit a wall and I don't think it's going to work. And you're going to have to really somehow reprogram your subconscious. And there are lots of ways to do that. I've mentioned a whole bunch right now, but to me, that's the key. And I know, there's lots of different ways. Like I said, you can hypnotherapy, lots of different ways. And I know you've done some interesting ones as well that people might be interested in hearing about.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, sure. And I think to take a step back, it's also useful to understand that you can reprogram your brain, right? This idea of neuroplasticity. And some people think, oh, this is just how I am, and that's how I'm going to be for the rest of my life. And that's simply not true. So I think the first thing you have to understand is that you can change some of these really deeply ingrained habits. And it might take a while to get there, but if you keep trying things, I think you can figure it out one way or the other.
Absolutely. And what you just said is sorry, but what you just said is really important, Hugh. And I want listeners to get this. What Hugh just said, that example that you gave, you said, I've always been this way or whatever. Like, I can't change. I've always been this way. That's a program in itself. Like, people need to realize that, right? Mm-hmm. That is a program. So you are running on that software. When you catch yourself, a really good way is self-talk. Like when we all talk to ourselves, or I hope we all do. I hope I'm not the only one. You can catch your self-programs. They kind of bubble up a bit in those self-talk moments. That's a really good way to figure out, okay, this is what software I'm running on, sort of thing, right? So I think I just want to highlight for everyone listening or watching or whatever, that what Hugh just said, oh, you can't change your brain or whatever. Oh, I've always done this with. You're right. All the research is so clear. It is so clear. Like, I don't want to get too personal, but my wife works with people with brain injuries, right? Like really severe stuff. And it's amazing how you can rewire the brain so that it goes around those areas that are broken, or, people have strokes and that part goes dead. Or there's a study about the nuns or whatever. They lived like in a monastery and they had like the brains, when they scanned their brains, a lot of them had Alzheimer-like brains. Like they were indistinguishable from Alzheimer's with all the plaque and stuff, and yet they had no symptoms. And they put it out to the fact that they were like, meditating, praying a lot, and doing lots of reading. And what happened was the neurons grew around the plaque areas. So they were actually normal in appearance and normal in behavior, even though their brains should say that they'd be, deep in the throes of Alzheimer's. So I just want to, point that out, that what Hugh is saying is really important.
Yeah. And I've seen that too. I've read about it in some other books where people were missing part of their brains and they were functioning pretty normally. So yeah, it's cool. For the stuff I tried some of the hypnosis stuff. I've tried, what else? I've tried energy healing. That was actually really, really useful. To your point where you said that there's a deeper cause for a lot of these problems. I think some of this stuff, it can be solved by just some affirmations and I'm good enough, I'm smart enough, people like me, whatever. But like also you have to look at what is the cause. And I found that for most people, the cause is really trauma, some sort of trauma. That could be your childhood. That could be, something, maybe bad marriage, whatever it is, like, or past lives, like you mentioned, if you believe in that kind of thing. If you can pinpoint that trauma and really address that, I believe that's the key to starting to heal and starting to get past some of these roadblocks that you're trying to solve.
Yeah, absolutely. That's the key, is that, like, what's going on here? Okay. Mm-hmm. What's going on? What's happening? How do I dig into it, find out, where this comes from, trauma or whatever, like there's some root cause to it. And then now that we've fished it out, now, like, what's the way forward? I think those three things, like, and, not everyone wants energy healing. Not everyone wants hypnosis. Like, there's certain things that won't, you're not going to jive with you. But that's a good list to start with right there. The neurophone that I mentioned, I didn't really mention much about it. What that kind of does is that sort of is a way to, like, in a way, it's like hypnosis. It's a way to put data into your head, right? Mm. So there's anecdotes about people learning how to speak languages by using the neurophone. So you would plug in like the way it works is you put these things on your head, right? Like, almost looks like like an EEG or whatever. Like, you put these little sticky tabby things on your head, and then you could plug into it, like, let's say you want to learn Romanian, right? You would plug in like a Romanian MP3 class, like, and then it actually goes into your head. It physically, and if you're quiet enough, sometimes you can hear it. It depends on the person. Sometimes you can't hear it, but it's actually going in there. And so that's how you would, what I'm saying? Like, you could use a hypnosis track, or you could use subliminals, or you could write your own affirmations and record them and put that in with the neurophone. So, and your brain's a little bit weird when it's on the it's sort of activated. So, yeah. Some people, they feel like they get shocked. Like, I've given it to people and they're like, they like, get that off me, So everyone has kind of a different reaction, but,
I bought one on your recommendation, and I got the older one because you can get that one brand new. And I've been using it, and wow, like when you put it on, like, I'm like in the zone, just really focused because of the alpha state, right, that it puts you in. And
it's awesome.
Yeah, so I would recommend giving it a try if people are interested.
Yeah, we'll put it in the show notes so you guys can check it out. Cool.
Yeah. Okay, cool. I think that's a good list for people to start with. So thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Just being curious about the losers. Why did it lose? Was there something I could have done better?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, there's this, I don't know if you want to call it a misconception in trading, but some people believe that you have to beat your emotions in order to succeed in trading. So what do you think about that?
I don't necessarily agree with that. I think what's happening is people are confusing emotions with breaking your rules and trading on the basis of your emotions. So I think that's true. So there's the idea that you should take emotions out of trading. I don't agree with that, because I think it's nice to, you can feel good when things are going well, and it's okay to feel bad when things aren't going well. That's part of life, man. I mean, that's, it's okay to be fearful when you're in a situation. I remember my wife was telling me she went into the jungle in, I can't remember if it was Uganda or somewhere. Anyway, she was on this grand tour of Africa, and they were going through the forest or whatever, and then they come upon this silverback gorilla, right?
Ooh, okay.
And the silverback gorilla was standing right in front of him. He's like, oh, and he's like bumping his chest, and all this stuff, and like, showing that this is his territory and kind of back off, you humans. And she said, it was amazing. Like she never, like whenever you hear her tell the stories, and she tells it, right? And I've heard it many times, but she never says, I was scared that this gorilla was going to do something. Although I'm sure that everyone there felt a level of fear. Maybe the tour guide didn't feel the level of fear that everyone else. You know what I mean? And so that's kind of a thing that stuck with me. There was a famous trial attorney named Jerry Spence. He's written several books. I'll put them in the show notes for people. What he was talking about, and his books are more about how he never lost a trial. He was a criminal defense attorney, and he never lost a trial, right? And he talks about, in the book, he talks about fear and how when we have fear, we know we're alive. Like that's such a core thing of being alive, is feeling fear. And what is fear? Fear is just like you're not sure what's going to happen. You're standing in front of this gorilla, and he's thumping his chest, and he's trying to look all tough and stuff. And you kind of just stumbled on this, or you're, like I can imagine the same thing would happen if you stumble upon a bear in the woods, or for me, if I'm surfing and the waves kind of get bigger than I'm comfortable with, or whatever. Like there's always those things, and in trading, it's like, wow, I've had 5 losing trades this week. Am I really going to take another one? And that's all part of being alive. So I think you need to disentangle whether or not your emotions are causing you to stop trading your rules, versus are you just feeling emotions because of the normal ups and downs of your equity curve? So that's, to me, that's how I see it. So I don't know, what do you think about that?
Yeah, no, I totally agree. I think that I don't think you can actually totally remove emotions from trading. Like even if you have an automated system, you're going to, have your ups and downs because the system's working, system's not working. And I think like you say, it's part of being human. So you might as well enjoy the good part of it with the bad, as long as you don't swing too far in one direction, right? Yeah, I think that you need to maybe control them a little bit more, but not necessarily eliminate them altogether, because that's impossible.
Yeah, that's kind of the default. It's sort of like the 2% rule, where they say always risk 2%. Well, some strategies are risk 2%. You're going to go broke, right?
Yeah.
Like Matthew in London, he has an 8% win rate. If he risks 2%, he will go broke. He will lose all of his money. There's no doubt, because he's beyond the optimal F point, that anyway. So yeah, so I'm with you. I think it's kind of like a mind trick too. If traders listening to this, if you get to that point where you can be like, especially if you have a low win rate strategy, if you can kind of trick yourself into thinking after you've had lots of losing trades in a row, hey, this is really exciting. Like, I know I'm fearful, but that's because that's what I get paid for as a trader. I get paid to take risks where other people won't. There are people who are punching in every day, they're doing their time, and they're getting the same paycheck every week or every month or whatever it is, every fortnight, as they say here in Australia, every 2 weeks, right?
Yeah.
So, like, and you're not doing that. You're a trader. Maybe you have another job on the side or whatever, but that's cool. But what's cool about what you're doing is you're embracing fear. And you're saying, look, I understand. I get paid for this excitement, for this fear. You know what I mean? I don't know what's going to happen. I've had 5 losing trades in a row. I have a 37% win rate. Chances are I'm going to have another loss, right? I know I have a positive expectancy, and this is what I get paid for, this moment. And then pull the trigger, man. You know what I mean? Like, it's so cool. Like, one of my favorite quotes is, the Larry Williams story about how he won that trading contest.
Yeah.
And he was saying he was in a $900,000 drawdown when he won. Like, I think in November, December, at the end of the year, he actually lost. He would have won, but his record stands. You guys can look it up. I can link it up to the show notes if you guys want to check it out. But his record still stands. And I think his daughter has the second best result ever, which is pretty funny. Yeah. And she's an actress. Like, she's not even a trader, right? So Michelle Williams, yeah. So he was saying, hey, man, I'm a trader. He's like, look, I knew when, like, by August that I had wrapped up the contest. Like, he knew, or even by June, he knew that he was going to win it, right? Mm-hmm. And he could just kick back, not take any more trades. He's like, hey, man, I'm a trader. I'm going to keep taking my signals. You know what I mean? Like, it's awesome. Like, I think it's really cool that he's decided, this is what I'm going to do, because even though I could just say, oh, there, I won, game over, I kept going. And when he kept going, it even put him down from 1.9 million to 1.1 million. He lost that 900 grand or whatever it was the last month or month and a half because he decided, hey, I'm going to trade. If I get a signal, I take it,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
That's really, I think, if you can kind of mind trick yourself into remembering that you get paid to take risks, it's a different story,
Yeah, no, totally. The mind trick that I started using that helped a lot was just being curious about the losers. Why did it lose? Was there something I could have done better? And just being able to dig into that without any judgment or like fear of the loss or any regret of the loss either. And that really helped me out. But are there any other mind tricks that you know of that have helped you or other traders?
Well, the biggest one that I really like to promote for people is the execution journal. And I think for me, that was a game changer. Like the idea, and I'll explain what it is. So most traders, what we do is we go, oh, you got to keep good records. Oh, you got to, pull the emotions out or whatever. Like they say things like that. Or if I automate it, then the emotions are out. And like you said, that's all BS, right? Like you still turn on the robot. You still turn off the robot. Yeah. You still see drawdowns from the robot. You might be able to shirk the responsibility and say it's not me anymore, it's the robot that's doing it, but it's still, you can still intervene and say, holy crap, the markets are crazy, I'm going to turn off this robot. So automating trading does not take the emotions out. Yeah. You still have to babysit your stuff, right? But the other thing is this execution journal for me was the biggest game changer. So instead of focusing on, which system did I take, what was the signal, when did I take it, how much did I make, where was my stop, what was the R return and all that, and that's all great. And writing down, I felt really bad about taking this signal. It didn't look really good to me, but technically it was, so I took it. That sort of stuff is great, However, the best thing I've been able to do for my trading is have an execution journal where I actually rate my entry on a scale of 1 to 5 and rate my exit. What this does is it shifts my focus from why did I lose to am I following my strategy? And it's really weird to do that and to start rewarding yourself for having 7 losing trades in a row. But if you've performed your system according to its rules and you're getting 4.5, 5 out of 5 stars, because you're doing a really good job, then you should be happy. And the only reason why you have drawdowns, the only reason why you have losing streaks, provided that your strategy actually makes money, of course, and presumably we tested that, we have a pretty good idea, we have a handle on that, it's because of bad luck. So all of a sudden you're letting go and you're saying, bad luck has given me a losing streak. I can see I'm executing according to my plan. So, you know what I mean? It's a different way to look at trading instead of, because it's so easy to change things up because you have a losing streak and go, oh, well, I see here if I would have added this stochastic, then I would have, missed out on, you know what I mean? Like, that's how you go down the slippery slope, man. Like that's terrible, right? So yeah.
Yeah, it's all about focusing on the process, right? Not necessarily the result, but the process.
That's a great way of putting it. Yeah, that's exactly right. Yeah, exactly what you said. Focus on the process. Focus on, am I executing? Not, am I losing money? Am I making money? You know, hey man, look, one of the worst things that can happen to you as a trader is for you to do really well on the back of bad habits. That happened to me. My first week trading, right? My friend convinced me to move in with him, quit my job, take my trading stake. We put it in our account. Second night, we tripled my money, our account, right?
Oh, yeah.
And that was Tuesday or whatever. It was Tuesday. Yeah, Tuesday. And then by Friday, it was gone. Like, you know what I mean? Like,
yeah.
Like that was my story. That was my introduction to Forex trading in 2000. Like that was it, you know? You know, 20 years ago, I got into the game and it was all like bad habits, man, and not knowing what the heck I was doing. And so that was probably one of the worst things that could happen to me, because I saw that you could make money doing it, but I didn't know how, because you know, it was just dumb luck. Like it was stupid. So so execution is key. Focus on, like you say, you know, it's really all about, are you doing the right things? Not the result. It's process. You know, like they say, keep chopping wood, you know, that's the key.
Yeah. Cool. Awesome. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If that 7-year-old can tell you that that's a trending chart. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, something I learned early on was that the crowd is usually wrong. You know, there are a lot of books about this, and I think I was kind of wired to do that naturally. I'm kind of like go against the crowd or whatever. But I want to hear your thoughts on mass psychology, psychology of crowds, and how you use that in trading.
Yeah, so I think you're right, by the way, that like your approach, I think a lot of people watching this, a lot of traders, I think, are contrarian by nature, and they're drawn to trading that way.
Yeah.
I do think, however, there are certain asset classes. So if you're a futures trader, if you're a currency trader, if you trade CFDs, which are illegal in the US, but like in England or Australia or New Zealand or whatever, you can trade them, you probably have some contrarian bent, probably. If you are investing in real estate, if you're investing in shares or stocks, there's a chance that you're the other side, that you're more of a social proof. So everyone should look up social proof. That's the cognitive bias you want to pay attention to when it comes to this. I saw somebody the other day, I think it was on Twitter, they posted a thing, and I don't know who she was. I think she was like some actress or something, or reality star. I literally don't know who she was, but apparently she was famous. And it was a video, this guy, she was talking about how like stocks were going to rally and stuff. And she was clearly not, like, that's not her game, right? Yeah. And the guy was like, that's it. S&P 500 has reached the top because so-and-so has claimed that it's going to go, you know, further or whatever. And so he was making the contrarian point, you know, which is what I like to do. And so one of the things you can do, and sometimes people fight me on this, but I would encourage you to look at the data. The easiest way to look at the data is to get an account at Wanda. We can put the link in the show notes. And at Wanda, you will have access to their tools. They have really cool tools there. And you can map out the open position ratio, which is just a fancy way of saying the percentage of traders long or short a currency pair. And you can map that against the actual price. And you can go back at least a year, probably even further. I think you can zoom out further. Anyway, and what you will notice is a very interesting phenomenon, which is as more and more traders sell the Euro USD, for example, selling euros, buying USD, as more and more traders as a percentage, like when that gets really high, like 70, 75, 80%, what you will notice is that the Euro USD will tend to go up. Don't shoot me for it. I'm just the messenger, right? I'm just telling you, this is a very valuable tool. Is it foolproof? No. Is it always that case? No. All I'm saying is that if you have two things, if you have a chart that you look at and it looks like it's trending, and you say, and you can bring over your 7-year-old and point to the chart and say, hey, you know, put it on line chart. Is it going mostly up or mostly down, or is it just going up and down, up and down?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
If that 7-year-old can tell you that that's a trending chart and the open position ratios are flipped, so if the Euro USD is going up, making higher highs, higher lows, and the open position ratio shows you that 70, 75, 80% of the traders are selling the Euro USD, that's a pretty strong trend.
Mm-hmm.
And I would count on that trend breaking through resistance and to keep going higher. And of course, the opposite is true as well. Now, so what you want to do is find a good broker that has these. The best one I found is IG Markets. They have a big chunk of the retail market. These are retail traders. They're not funds. They're not pros. They're the people that we're trying to take money from, right? Our fellow retail traders, right? Those are the traders that you'll see at Awanda, Saxo Bank, IG Markets. There's lots of them out there. I think even Daily FX or certain news websites. I don't know if FX Street does it. I don't think it's retail traders. I think it's their experts or something. They're buy. So that's what I like to use. And so that's a contrarian point of view. We don't move the market. We're very small. Retail traders are a very small percentage of the currency markets, and our broker is really participating in the real market, and we're sort of trading an image of it. I think using the crowd as a gauge for the strength of trend can be very valuable. And so that's one way to do it. Just look at the open position ratios and look up social proof, look up all the cognitive biases, see how those are. And social proof is the one that really, which is basically this idea, if it works for everyone else, it should work for me. If my uncle keeps flipping double wide trailers in Alabama, I can flip double wide trailers in Alabama or whatever, my friend keeps buying Apple and Tesla stock, I should do the same thing, sort of thing. That's social proof. And so that's what makes a trend happen. And that's what makes a bubble happen. And that's what sooner or later, there's no more there's no more fuel, right? If everyone's flipping double wide trailers in Alabama, pretty soon there's no one left, right? There's no more buyers. Everyone's, so you just have to be aware of that. And so that's one thing I would encourage you to look at. It's an empirical question, which is, do open position ratios tend to be inversely correlated with the trend, the movement of the market? And the answer is a clear yes. And like I said, don't take my word for it. Have a look yourself. So yeah.
I've tried looking at the commitment of traders in the futures market. That really didn't work for me. Have you looked at that?
Yeah, that's interesting. I was actually hoping you'd bring that up. For me, the problem is it didn't come out. I think it comes out weekly.
Yeah.
Last I checked, it was weekly. So what Hugh's talking about is different. That's the pros, right? And that's futures. We're in spot retail Forex. It's a little bit of a different market, right? But I think that could be useful if you were long-term position trading, maybe weekly charts or something, or maybe some sort of daily. I haven't been able to make that work either. I have to admit, though, I didn't have high hopes for it because it didn't give me enough data. If I go to IG Markets, every 10 minutes, they're going to refresh the open position ratios. If I go to Awanda, every 15 minutes, they're going to refresh the data. So it's a little bit better data, you know what I mean?
Yeah. Otherwise, the COT is just too lagging.
Yeah, exactly. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I'm really big on going home different ways. So where I live, I can walk a lot and just walk to the shops or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about doing things a little bit differently during the day, like brushing your teeth with your other hand, stuff like that, in order to get your brain going?
Yeah, I think that's good. I think in some ways, traders can do that too. If you're used to trading the daily charts, what if you started demoing on the 5-minute, just to, you know what I mean, exercise different muscles and things like that. I think in some ways, the theory of the neurophone or the neurophone that we talked about before in another episode, you guys can go back and find that. We can put that in the show notes. That's meant to kind of activate more of a whole brain, sort of thing. And they say that women have a much Yeah, like their corpus callosum between the two hemispheres, they're actually they have a stronger one, so that's why they often are better at verbally speaking than we men are. And so the neurophone is meant to sort of activate the whole brain and in a way kind of help with that, which is I think is what's happening. Like if you tie your right hand behind and you just use your left hand for the whole day to brush your teeth and make your lunch and whatever, that's kind of the same idea. Is you're kind of just becoming a little bit more. I know it's just spatial, but it's like it's a way of becoming more whole brained. And we really do have a lot of flexibility. We know about neuroplasticity and people who get horrible brain injuries, and then the area of the brain, for example, that is supposed to make your legs move or whatever, that's eliminated. Eventually your brain will get to the point where you can start walking again or whatever. Like those sorts of things happen. It's easier when it happens when you're younger, obviously. But those sorts of things are possible. So I do think there is something to that. I think also, just looking back on my life, the best times I've had in terms of success and achievements have been when I've stretched, try to do something a little bit harder than, a little bit more uncomfortable. Like being uncomfortable is when I find a lot of growth comes. So that's something that I think people might want to think about. And that in a way, what you're talking about is that, isn't it? Like it's a small little way to, like I'm really big on going home different ways. So where I live, I can walk a lot and just walk to the shops or whatever. So I like to not be a habit and always walk the same way. And you know what I mean? Like go through different neighborhoods or whatever and take a different path and just stuff like that, because otherwise you end up on autopilot, don't you? Like you just do the same thing. Like if you allow yourself, you will. So it's kind of good to mix it up a bit.
Yeah. If you look at the world just in a little different way, it'll help you see other things differently also, I think. And just open yourself up to new ideas or even new people, like walking home a different way, meet new people. Never know what can happen, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Exactly, yeah. And you know what? That you bring up a good point, because that's a technique that you can use in your trading to see yourself. I don't know if I don't think we've talked about this. Like, let's say, for example, this is what I did with myself. I used to always move my stop loss. So let's say you go, okay, I don't want to move my stop loss. In other words, I go, okay, I have 150 pips of risk. Trade goes 130 pips against me. So I go, okay, I'll move my stop loss to 170 pips because it's going to turn around now or whatever. That's bad news, right? Because you never really define your risk. But what you can do is you can see yourself doing that. Imagine you're at your trading station and you're like a fly on the wall, or like from God's point of view looking down at you, or maybe a cockroach on the floor looking up at you. So you see it from a different perspective. You see yourself doing that. And then eventually what you want to do is kind of eliminate that. See yourself stressing out because you keep moving your stop and taking really bad losses. And then you kind of see it in black and white. So it's not so colorful. You can see it in a black and white movie. And then you can just kind of take that movie and just tear it up or burn it and watch the film melt. And it's a way of letting go and saying, okay, that's not me anymore. That's not my, that I don't do that, right? That person that I saw in that movie is making a mistake, and that's not part of me anymore. It's just like a technique that some people use to eliminate old bad habits. Yeah.
No, I think that's super powerful. I mean, I think back to some of the things I've done in the past, and if I was up from the outside looking in, that would have been a pretty ridiculous situation. I would have been laughing so hard, but being in the moment and being in the body, it was serious to me. Being a third party onlooker probably would have looked really ridiculous.
Yeah, it's a great way to see it, seeing it from a different perspective. It's a great way to see it for the problems that are there and to let go of it. So yeah, it's a good technique for people who, if you have a habit, it can't be a crazy, terrible habit. It's for the right kind of habit, it can definitely work.
Yeah, for sure. Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah.
They went on to selling, multi-level marketing vitamins or whatever. You know what I mean? Like, I don't know. Like, hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you do to cultivate mental toughness, which is necessary for trading?
Yeah, I totally. So I call it resilience. There's a guy named Martin Seligman. I'll put the links in below. He's known as being one of the modern day fathers, not the original creator of positive psychology, but he talks a lot about resilience. I saw him at a talk. He came out here to Sydney a couple of years ago, and you kind of like can ask him a question if you bring your book up and have him sign it. He's got tons of books, but he talks about resilience. So what I would say is, what I would equate to mental toughness is resilience, and I think it's probably the reason why. It is the reason why some traders keep going. If you keep going long enough, you're eventually going to figure it out. It's not that trading is difficult. It's just the actual mechanics of profitable trading aren't difficult. It's actually all the stuff around it, all the psychology and all the BS around
nature,
it.
Basically.
Yeah, exactly. Yeah. It's against your nature. Exactly right. We have all these cognitive biases working against us. So resilience, I think, is key. And so if you get into resilience, you can read Martin Seligman. There's other people who have written a lot about this. A big one is, like, I'll give you an example. So what they talk about in the resilience research is catastrophic thinking. So I've had 2 weeks of losing trades. I'm down 9% of my account. And so I start to wonder, like, what's going on? Like, is my system broken? Have the markets changed? Am I going to lose all of my money? This is never going to work for me. How am I going to be able to pay my mortgage or whatever? Like, that's catastrophic thinking. It's just taking a little tiny thing and blowing it up out of proportion. Because the reality is, if I shift my focus and say, hang on, 2 weeks of losing trades, how many trades is that? 6. Okay. What are the probabilities that I'm going to have 6 losing trades according to my rule? Oh, well, it's actually 85%. Okay, so actually what I'm talking about here is something that's actually quite likely to happen, and that it's happened is not a big deal because it's predicted given the parameters of my system. So, you're just trying to shift the way of seeing it, and instead of allowing yourself to snowball and get really hyper negative. That's catastrophic thinking. So that's like one tool, right, for the resilience. The trader who wants to be resilient is to shift that catastrophic thinking into another. How can I state what I've just said? I've had 2 losing weeks. How can I state that in another way? Instead of saying I've had 2 losing weeks, I'm going to lose all my money, I'm never going to make it as a trader, I'm never going to be able to pay the mortgage or whatever. Instead, I can say, wait a minute, I've had 6 losing trades. Is that normal? And the answer is quite logically, yes, it is normal, because I know the probability of that happening. So for me, that's how I view mental toughness, is sort of building up your resilience so that you're able to withstand those terrible moments that we're presented with as traders. That's really what we get paid for. Other people don't want to deal with these sorts of things, and we have to deal with them face on. So that's what we have to do. Yeah.
Mm-hmm. Yeah, for sure. Would you say that people who faced some sort of breakdown like that, like blowing out an account or several accounts, develop that quicker than people who are more risk averse and don't take a lot of risk or blow out an account early on? Do you think that they have less toughness or resilience just because of that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
That's a good question. I don't know. I think if you read like the Market Wizards and the New Market Wizards, almost to a trader, they all talk about how they blew up their account and they basically swore to never do it again.
Yeah.
Or they blew up their account and then their second and their third, and they swore to never do it again, sort of thing. It's a tough question. I often wonder, like, are you better off just totally blowing up in the beginning, or, getting on a lucky streak in the beginning? And I think that it's blowing up, but I'm not sure. I think there are probably tons of traders that we never hear about who started trading, blew up their account, and then just never went back to trading.
Yeah.
They went on to selling, multi-level marketing vitamins or whatever. You know what I mean? Like, I don't know. Like, so
Yeah.
I'm not sure. Like, or they went to go flipping houses or whatever the next thing is. So I really don't know. It is crazy though when you read the interviews of traders. It is amazing how many traders have the same sort of basic story, which is, yo man, I started trading, things are going well, and then boom, I lost all my money and I swore to never do that again. So I decided that my risk would be blah blah blah. It's amazing. It really is a common thread. Yeah.
Yeah, and I don't know if the people who didn't blow out would want to tell their story. I don't think they're the type of person who would tell the story, or maybe the people telling the story wouldn't think that's interesting, so they wouldn't write a book about them or interview them, right? So maybe it's just some sort of like filtering bias or something.
Yeah, and you bring up a good point, because I would argue that there are some traders that just want to tell stories.
Yeah,
they don't want to make money. They just want to go, oh man, you wouldn't believe I was in that Euro trade, and then the interest rate came out and blah blah blah. That's what they get. Like Ed Sequoia says, everyone gets what they want from the markets. Some people get these stories that they get to tell. Like that's their thing.
War stories.
Yeah, exactly. War stories. That's exactly right. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Yeah, and there are people that are really into this. I know Sinclair doesn't like information in this podcast. There are people that so get that off. That was my story. That was my understanding is the three things that you can definitely that was probably the worst thing to go run. In my head, all the animals are on a reduced calorie intake. Keep chopping for years. Those people have healthy loss. After like all the information in this podcast is for educational and informational purposes. Only 12 hours is not trading how it's exposed and all those sorts of things happen. They've known that for a long time, but it's only now. I think just recently with the resveratrol and the NAD and stuff, what they're saying trailing is
let
under
the trailing
a
exit.
average.
That's why I like to
two
automate
ends.
trailing
And
exits.
these
That's
are
a really
two
good
and
thing
paths
to
are
do
actually
for
the
people
ones
who
that
have
kind
this
of
problem.
all information in this
naturally
podcast is
you
for
really like to
educational
say,
and
I
information
know I
only.
shouldn't do it.
Only
Keep
not
counting
not
out.
trading or
people
investment
Try and
write
advice.
this
automate
stuff
your
off,
exits,
don't they?
man.
Like
Like,
they
that's
say,
a really
oh
cool
man,
way
well, you know, if I'm
to,
going to
like,
live an
then all
extra
you have to
15
do is
years,
just
I don't want to
babysit
live,
the
you know,
EA
the last 15
and make
years
sure
of my
that
life
it
where I'm drooling on
gets you
myself
out,
and I'm in a
right? So
wheelchair or whatever. You
that's
know what I
another
mean? Like
one.
people,
Hyperbolic
but
discount.
that's not what we're
You know,
talking
I did
about.
the
Here.
thing.
We're
I know
talking
you.
about maintaining
We've
your
done
body
this
to a point where you
exercise
don't,
with
like that's
traders,
not you.
right?
You
And I
don't
think
have
you
to
were there.
walk with a frame and you don't have to
almost
have,
always,
you know, you
I
can't
go,
get out of your
I
chair or
have two
whatever. Like that's
envelopes,
another
right?
thing actually
And we
that
did
I
with
learned from my
Caroline, and I
wife.
said,
Like she
and one of
rehabs
these
people and
envelopes
helps them
is
when they have like
whatever,
strokes and
50
things like that.
bucks,
And you know
and
what
it's
she
yours.
says?
Take it.
What's the
Okay,
best predictor
fine,
of
right.
someone
No,
like
but
when they're
if you open
older?
it up,
If they're
you
going to
get the
be,
50 bucks,
you know,
right?
healthy or
Or
whatever, or
100
if they're
bucks,
going to have
whatever it is,
problems,
I can't
is if
remember.
you can
And then I
get out of
say,
the chair.
now I've got
like
I've got
100 times.
another
So they call it
envelope
sit to
that
stands,
you can
right?
switch,
So you're in a chair
but
and you
this
stand up.
envelope has
If you can
either
do that
nothing
100
in it
times,
or
boom,
200
like
bucks. I can't remember
you're
which.
going to
I
be
don't
pretty.
know.
Like
I
that's
don't
good.
remember.
Like you're in a good spot.
And then you
But
offer
if
them the
you're
opportunity.
unable to do
And
that,
every
you know that's a
single time
sign
I've
that
done
maybe
people do, they
you're
always
not
keep
as
the
fit as you want to
envelope. They
be
never
in
do
your
this.
later
The
years.
only
And
one
we're
that did
talking
was
about people
Caroline,
that are
and that's
older,
'cause
you know,
we
like in
kinda
your
convinced her that
60s,
she
70s,
should.
80s. You want to be able to do 100 sit to
That was,
stands.
and you were
Like
there
if
for
you
that,
can't do
yeah.
those in
So-
your 50s,
so
then you're
that
definitely in
was pretty funny because
trouble,
I'm
right?
telling you, every single time I've done it, and sometimes I put the extra
I think a lot
money
of
in
it's
the
like a
envelope, sometimes
mindset
I
too,
don't.
like
So it's not
what you
always
do
that
right
the
now to
extra money
maintain
is
your
in there,
body,
you
like
know?
this
So
type of
it's
stuff,
really,
just
you know,
how
it's
you
really
think about
interesting, 'cause
yourself.
that
Like
sort of-
if you think
that's
you're
the
old
best way I
already,
know
then you're
to
going to be
highlight this
old.
hyperbolic
And I've seen a lot of
thinking where
videos
it's like,
with like
it's
these old
worth
Chinese
more
dudes
in
or
your
these Japanese
hands
dudes, and they're doing
than the
like
potential
pull-ups and
of
they're like
even more in the
70 or
future.
whatever.
That's
So I think it
basically
is
it.
just
And that's
maintenance
why
and
trailing
kind of a
exits
mindset
are
also
so
too, right?
hard
Totally,
for us
man.
traders to follow is because of that
my friend,
vibe.
his dad
Yeah.
was a
Yeah.
judo
Sure. Why do you
like
think that
black
is?
belt,
I mean,
and I
most
swear to
people are
you,
taught,
he
you
would
think,
go.
to-
I mean,
He
if
would
you
go to
like,
these
if you were going to take an
tournaments when he was
evolutionary
like
point of
60s
view, you
and
would
in
say,
his
okay,
70s, he would go to these
the
tournaments in
caveman
like
is
Las
cruising
Vegas and
through
stuff,
the woods,
and
right?
kick guys'
He
ass
sees like
who are like in their 40s and 30s. I swear to you, dude. And like he was always like,
pick
you
the
know,
berries
and
eat
you
the
know what
berries
was
and collect
funny?
the berries.
When
Or
we
should
were in
he
high
keep
school,
walking,
he
maybe
would-
there'll be like a pineapple.
when we were in high
He
school,
you know, he
so
likes
he had two
pineapples
boys,
better,
right?
they
And
can
I,
feed
you know,
more
I
of his
knew
tribe or
the two
whatever.
boys, right?
You know what I mean?
And
And so it
their
makes
dad was
sense
this
that you would take
totally
it while
into
you
martial
have
arts and
it.
stuff.
You know,
The
we
boys would
spent a
like
lot of time
try to
as
sneak home
hunter-gatherers,
at night, like
you
on
know,
the
just
weekends,
looking
so
for
they
food,
didn't wake up
right?
their parents
And once
because
we
they were out
found
partying
food,
or
we could
whatever in high
relax
school.
and all that. But then,
So they
you
tried
know,
to
the next
sneak
day you
home
got to
and, like,
find more
sneak
food.
in
So that's
through the
why,
back window
you
and
know,
stuff like that.
all you know,
And
all this
sometimes
intermittent
they would
fasting
like
thing
be
is all the
sneaking
rage.
in
People are
through
saying, well, that's
the
how we've
back,
always eaten.
the
We
back
never
window or
like,
whatever
you know,
called
when you're a
in,
hunter-gatherer,
and they
you
would
don't
come
eat on the
down,
dot
and
at
the next
noon,
thing they know,
lunch,
they're up
right?
against the
Like,
wall and they
it
got a
doesn't
hand on
happen
their
that
throat.
way, right?
Like,
You don't know when you're
their
going to run
dad's like,
into
dude,
another
what are you
rabbit
doing,
or
man? You're
a
scared. Like,
bushel
I
of
thought you were a
berries or
burglar
so.
or
Yeah,
something, you
I
know?
think
That's
if
how
you
their
were to
dad
take
was.
sort
It
of
was
the
amazing. Like, and
socio-biological
that's
point
totally
of
how
view,
he
you would
was. You know, he
say,
was totally
well,
like
we
skiing
kind
and
of
stuff
learn
into
to
his
survive
70s,
by
doing all the
taking it
judo,
when
and
we
it was a
can,
mindset
sort of
thing. He's
thing,
like, hey
right?
man, like I don't want
And
to,
we
you know
would
what I mean?
apply
Like
that
it's
to
up to
money
you.
too, I
It's your
guess. I mean,
choice.
that's, you know, but all the economic
my
theory
dad's
stuff,
been
like
teaching
if
Aikido
people
forever,
have a
and he's
business
like
background and they go
93,
into economic
and he's
theory,
been teaching up
they
until
act
this
like
whole
people are
coronavirus
rational
thing, but
and
he still
like do
teaches
the
Aikido
weighing and
class.
say, oh yeah, this
So,
is worth this, so
awesome.
you know,
stay
the chances
healthy
of
and
me
just
getting
stay active,
like,
and
that's all BS.
That's
Like, it's
amazing.
not. It's driven
Yeah,
by
that's
cognitive
amazing, man.
biases, as
So
you and
you
I
do
know,
you do
because we're
Aikido?
faced with
Do you
these
know?
every day.
I took
It's
I took
crazy,
2 summers,
man.
but it just wasn't my thing. So
Right.
you have to kind of rewrite in trading, right?
Oh, that's
Exactly.
cool.
Yeah.
Yeah.
You rewrite
That's
your
so
brain.
cool. Yeah,
Exactly.
so
That's
true.
exactly
Man.
it.
So true.
Yeah.
Yeah, Yeah, you can.
Okay,
like,
cool.
there was a
Thanks, Walter.
guy.
See ya.
You guys, I'll put
All
in the show notes,
information
too.
in this
There's a guy
podcast is for
who
educational
actually,
and
I know this
informational
sounds
purposes
crazy, right?
only.
This is
It is
insane.
not
People
trading
say
or
it's
investment advice.
impossible, right? But this guy broke his back, like shattered it, completely shattered it, and he literally put it back together, like healed himself with his mind. And then he wrote a whole book about this. So I'll put that in there in the show notes too, because, you know, people kind of overlook. They think, oh, I need a drug or I need a rehab thing or I need a tool or whatever. But really, your mind is a really powerful thing. And like you said,
I don't think anybody should trade. Like, what are you talking about? Like, what are you talking about? You're a trader. It's like, no. It's like, no, I don't.
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So in the last episode, we talked about cognitive biases. So let's talk about negative biases. How does that affect us as traders, and where does that come from?
Negative biases. Well, I think for people, considering what can go wrong is adaptive. Who's going to survive, right? Is the person, like the mother who's so concerned about her child that she makes sure that, you know, every little thing, like you grow up in the rainforest and down in South America, you know, the mother's concerned about pythons, getting her baby, right? So she, her family, her kids are the ones that survive because the pythons never get her kids, sort of thing, right? Or what do you call it? Neanderthal guy who's worried about woolly mammoths trampling on his tribe or whatever, his tribe survives. So I mean, it's adaptive in a way, like anxiety and assuming that the worst is always going to happen. To me, that's kind of like it's an adaptive thing, I guess you could argue. And so that's useful in that sense. In trading, it's a little bit different because you do need that. You need that when you're considering risk because it's a matter of risk and reward. But at the same time, I think a lot of traders, they don't get into trading thinking about that. Like I didn't get into trading considering probabilities. I really didn't. I didn't understand that until later. I got into trading thinking about the reward. Like I didn't think of the risk. Right? Yeah, everyone's Scrooge McDuck, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I think you need that balance. I mean, you can go the other way. Like if you're too concerned about risk, I've seen that too. And those traders, what they end up doing is limiting their possibilities, right? Yeah. I'll tell you a story. Just this week, I was working with a trader and he was like showing me his strategies. He was like, look, I got this strategy, it's pretty good. I got this other strategy. Yeah, it's pretty good. I think they both work in the same type of market, like a trending market or whatever. But then I put them together and it's freaking unbelievable. I go, yeah, it is unbelievable. That looks really good. And he goes, doesn't make sense, And so he was trying to tear it down. Like he's like, I want you to show me why, when I put these two strategies together, which seem to be, they would work in the same market, why would the equity curve get so like exponentially better? I said, yeah, that's weird. I said, let's look and see if they're actually, if these two strategies are actually kind of taking the same trades. Turns out they had a 0.08 correlation. One was zigging while the other one was zagging, and that's exactly why his equity curve went straight up. And that was awesome to see. What's cool about this is he didn't just jump in like straight away and go, oh my God, I have this crazy, like I put these strategies together and I'm in the money, right? Yeah. What he did was he said, what's wrong here? What am I missing? What did I get wrong? Can you show me something? Blah, blah, blah. And I said, dude, I said, you just got to run the correlations. Like it's, you know what I mean? It's a question. And he's like, okay. And we were looking at the distribution, you're looking at one, trying to put the equity curves together and see if they're actually, and I'm like, no, man, just run the correlation. Let's just see. And then we'll test it on out of sample data, make sure that, blah, blah, blah. And so, yeah, that's what he did. And like he had the right approach, he's a very data-driven dude. That's how he looks at things. And so he was like, where am I going to go wrong here? And I think that's a healthy approach, to have that negative, like skeptical kind of thing. Here's the question. You probably heard this too. People say, well, how much can I make money? How much can I make trading Forex? Like, what can I? Yeah. What they're asking you to do is they're asking you to take your limits, right? Your limitations, your beliefs, and place it into their head. like that's what they're saying. They're saying, give me the universe that I am going to live in. Like you tell me what I am going, like that's like a parent telling the kid, like, you can only have an IQ of 115. After that, I'm cutting you off, like you're on the streets or whatever. Like that's crazy, right? It's totally crazy. But I understand because we're taught to like accept authority, and whatever authority tells you, that's the right thing and all that stuff. So, I mean, I get it in a sense, but I think we need a healthy dose of like negative expectations of feeling like things are going to go wrong or where can it go wrong, especially when we're system constructing, and building that strategy and tweaking the risk and trying to figure out how much, because your biggest drawdown is always in the future, right? All that stuff is important. But if you're too far that way, I've seen that too, where traders are like I've seen guys who've been trading for decades and they go, you know what? I don't think anybody should trade. Like, what are you talking about? Like, what are you talking about? You're a trader. It's like, no. It's like, no, I don't. It's not. You know what I mean? And that they've just business. Gone. Yeah, they've gone the other way. They've just totally gone the other way. Is that what you meant by this? I just want to make sure that we're clear.
Yeah, no, that's good. Yeah, that's really good. Yeah, that's interesting that you mentioned limitations, because I've gone to a couple of presentations, obviously a lot over the years. And one guy at a meetup was saying, how much can you make trading? And he was like talking super loud, trying to be really convincing. And people threw out some numbers and he said, no, you can only make 10% a year at the most. And I was like, wow, that's really limiting people. But yeah, I mean,
Wow.
that was his world, but
Yeah.
and I don't think he was trying to be negative. He was just trying to be realistic within his version of reality, but it wasn't necessarily other people's versions of reality, right? Obviously.
Yeah, I mean, obviously, like we have Nicola in the forum, and she does way better than that, And
Yeah.
like, there's people that are out there that it's crazy to me. Like, yeah, it's so true, man. Like that guy, he didn't mean to. I really believe he didn't. The guy that you're talking about, he didn't mean to do anything
Oh yeah,
to
sure.
hurt people or send them the wrong way, But here's the thing. Here's a good test. If you ever see someone and they say, "I'm an optimist," don't believe it. And and if they say, like, a self-proclaimed optimist, right? No, you should, like, this is my belief. If somebody is an optimist, it will be super clear. Okay, like you will know it, right?
I wish I started that way, but I know it wasn't possible. It wouldn't be possible because we're always looking for that teacher or whatever to help us out, right? And
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
that's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, somebody wrote in and they have the age-old question of, my trading sucks. What can I do to improve? Like, this guy's losing for I don't know, 3 months or whatever, lost a big chunk of his account. Where does he go from there?
Okay, first of all, do you have a system? That would be my question, right? Sorry, I jumped the gun there. So if you can't write down the conditions to an entry and the conditions to an exit of a trade, then you don't have a system, and you are flying blind, friend.
I call it the swag system.
Yeah.
Wild ass guess.
Really? Yeah, that's it. And people ask me too, they go, have you ever just look at charts and take a trade and just kind of go off and I'm like, nah, no, I have to have it fit into a box that I know, that has made money in the past. So so do you have a system? Number one. Number two, if you have a system, see if your entry is any good. And the way that you see if your entry is any good is whatever your entry conditions are, the indicators or the pattern or whatever, see where the market goes 3, 5, and 10 candles after your entry. That's a really good way to see if your entry rules on average suggest what's likely to happen, next. Is the market up 3 candles later after a buy signal, 5 candles later, 10 candles later? Okay, if you go through that and your signal is good, then the last thing, and probably the most important thing where the most work would be in the exit. So the easiest way for most traders to make more profit with their strategy is to simply wait for more profit. I know it sounds crazy, but like, instead of going for those 1-to-1 trades, what if you went for 3-to-1 or 4-to-1 or 5-to-1? Your win rate will typically go down, but the overall profitability usually goes up. And what I mean by that is, if I have a strategy that's 1-to-1 and it has a 59% win rate, if I move that strategy to 2-to-1, maybe I don't have the 59% win rate anymore. Maybe I have a 46% or 43% win rate, but I'm actually now making more money. So every 100 trades, I have 43. Let's say it's 43%. Every 100 trades, I have 43 winners, and those winners make 86 R, and then I lose 57 R. So 86 minus 57 is whatever that is, 29. Is that right? Something like that. So yeah, whatever, something like that. So I make more money than I would have if I had the 1-to-1 where I had a 59%. So that's key for a lot of traders. But you got to first make sure you have a system. First, make sure your signal's good. Then on the back end, use trailing exits, use aggressive targets, split it up, maybe go 2-to-1 and then have an aggressive trailing exit or whatever. But that's usually where you can make the most gains, is on the exit. And everyone focuses on the entry. It's usually not filtering out bad trades or whatever with the entry, it's the exit, usually.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. I actually test to see how far the price went on each trade. So I call it the max R. So like how far I would have gone if you just left it alone and you just left a stop loss there. And sometimes that can give you some good ideas of where to put your next profit target. You can see, okay, 50% of the trades went 3R, 60% went 6R or whatever it is. And you can kind of guess, not guess, but you can kind of use the data to see where you might be able to get more profits out of the trades.
Yeah. And that would work really well, like with a fixed exit, right?
Yeah.
You could, you know what I mean? Like you could say, yeah, so exactly. That's exactly right. I've been working with a trader, a really interesting guy who you know how he builds strategies. He's very unique because he doesn't really get stuff from other traders. He kind of just looks at the charts and comes up with ideas.
Nice.
And he's like, yeah, so well, how did you come up with this strategy? He's like, well, I just look at the charts and I look for the big moves. And then I look for like what happened before the big moves. And so what I'm trying to do is backwards engineer the big moves. Yeah, it's really cool. Yeah. I mean, I think that's something that we all do in the beginning, but then we kind of get down the rabbit hole of like stochastics and, moving averages and all that stuff. We get away from that simple approach, but it works really well for him. And I think that's, something to keep in mind, that you can, just because it's on a website doesn't mean you have to trade that way. Just because you read it in a book or whatever, like in many ways, you're better off just going your own way, using your own approach, because it's going to make sense to you and you're unlikely to throw it away.
Exactly.
It's easier to throw away someone else's idea.
Yeah. That's a good point. Yeah. I wish I started that way, but I know it wasn't possible. It wouldn't be possible because we're always looking for that teacher or whatever to help us out. Right. And for good reason sometimes.
Yeah. I mean, look, people spend a lot of money on universities, right? Like, I mean, your whole life you're taught, you've got teachers from when you can start talking, so yeah, it's kind of ingrained in us. Yeah,
that's true.
Yeah.
Okay, cool. Thanks, Walter.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I would sit down with my trading buddy and we would get on Skype and we would pull up our charts and we would look at the same charts. And our question was, buy or sell? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So I got a question yesterday from a trader, and he was talking about how I said, how's your trading going? And he was saying that what he realized was that he was losing quite a bit, and he was thinking that what he needed to do was to get better at reading the markets. Basically, he's into price action, so that's kind of his approach, which is close to how near and dear to me, and I know you know a lot about it too. So what I highlighted for him is something I think that a lot of other traders could benefit from, which is this idea that a lot of times we focus on what seems to be the obvious thing, and when someone else has a look at it, sometimes you'll realize that there's a little bit more to it. And I'll give you an example. So when he said that he was consistently losing because he couldn't quite get a handle on price action, my response was, well, are you sure that that's it? Because typically, there are the three things. There's the system, there's the risk rules, and then there's you. Basically, how you interact with the system, your psychology, which is what we talk about here, right? And so he was focusing on the system and specifically the entry rules. What I said was, look, it may not be that. Like, it could be that, but it may not be that. It could be that what you find is if you do the exact same things you're doing right now, but you change your exit rules, things are get better. It also could be if you do exactly what you're doing now, but you change your risk rules, you would be on a different path and have a different sort of a drawdown. And you won't get to those deep drawdowns that perhaps you're having right now, and that's why you're thinking, oh, it's not working, I need to quit, right?
Yeah.
So that's the thing is that and then obviously the last bit is it could be that your relationship with the system is not in lockstep. So like this often comes up when traders go, okay, what I want to do is trade. Okay, so what do I do? Okay, I need to find a really good system. Okay, so let's check on the internet. Okay, this one's really good. This guy's done really well with it. So I'm gonna use it because obviously it's the best thing I can find, right? So it's the best thing I can find, so let's use it. Right. Well, that's obviously, as you know, that's tricky because I didn't really build it, and I'm just using something out of the box that someone's given to me. Unless it really matches up with my beliefs about how things work in the markets, I'm not going to trade it long term. I'm going to give up on it eventually. So the reason why I bring this up is because I think as traders, we need to start thinking in these three buckets. Is it system, which is entry and exit, right? Is it me, which is how I interact with my system and my belief or confidence in my strategies, or strategies. And then finally is the risk, which is the risk kind of amplifies it and it can make my system, have higher peaks and lower drawdowns and all sorts of things when you start to get into that realm. So when you run into an issue as a trader, it may not be that you just need to change your entry. That's probably the number one first port of call for most traders is to go, oh, well, I need to change my entry, but it may not be that. And so I just want to talk about, I know you had some experience in this, and so what have you found in terms of that? Like when you're looking at systems and trying to diagnose, what are some of the things that you've run into?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, sure. You've covered most of it pretty well, but a couple things to add. First, I know a lot of traders think they learned the system correctly, but then when they actually go back to the educational material or whatever strategy the person was using, sometimes they notice, oh, I'm not actually following the rules. And I saw it with this guy this week. He's been posting his trades. He's been showing me what he's doing. And I can see, okay, sometimes he follows the rules, sometimes he doesn't. And he's been losing and he's frustrated, obviously. But I told him, go back, take a look at your journal, see what you're doing, and are you actually following the rules? Did you actually interpret whatever that book or that YouTube video said correctly? And if you didn't, then that's one place to start also. The second thing is, I think we really underestimate the mindset part of it. Like we don't take a look at, am I in the right state of mind when I'm trading? Do I tend to overtrade? Do I tend to undertrade? The same guy I talked to, I told him what's the difference between your back testing and your live trading, and one of the things he listed was FOMO, and that's something he didn't identify before, but it's something that's really common with a lot of traders. You want to get into the trade, you want to make $1 million right now, you just take these crappy trades. So I think those are two things that are really underestimated, but we really have to be aware of.
Yeah, it's so true, isn't it? And it's tricky because sometimes as traders we feel like really we should be pressing to trade more often, right? Because of what you said, like FOMO, right?
Yeah.
Like you're really kind of like, yeah, I need to, And I used to think of it the best way I know how to explain this is I used to think of it like I would sit down with my trading buddy and we would get on Skype and we would pull up our charts and we would look at the same charts, and our question was buy or sell. And that's not how I do it anymore, right? Like so now my question is there a trade? Yeah. Right? You know what I mean? Like it's a very different approach. So It's not always the case. If you have a low win rate, you can have the issue of not wanting to pull the trigger. But in most cases, what traders are doing, especially in the beginning, is they usually trade with a high win rate because they take quick profits. And so what they're really trying to do is trade a lot. And the question is the yen going up today or is it going down? Like, that's the question. And they're not really looking at it from a system point of view. And the other thing I want to mention is what you said to that guy is great. And one way you can quantify that about looking in your journal is scoring. So if you score your entries and score your exits, you'll actually have a quantifiable data set that you can go back and look at and say, oh, this is where it was here or it was there. And that's a really good way for you as a trader, especially if you're not something's going on and you don't know what it is, to see and zero in on, oh, it's my exits or it's my entries. Or if you're missing trades, that's a sign that maybe because you're at work or away from the screen or sleeping or whatever it is, that's a sign that maybe you want to adjust your time frame. Like, instead of trading the 4-hour charts and you miss 2 candles or whatever, or miss 2 candles while you're at work.
And what do you think about Monte Carlo testing?
Oh, I'm a big fan. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, how's it going?
Hey, good, Walter.
So I got this question from a trader today, and she's doing really well. I recommended that she get Forex Tester and start, simulating. She's sort of new to trading, and triple her account. That's what I, normally say. Try and triple your account. So she did, and she was trading I think $1 a pip on $1,000 demo, or not demo, but Forex Tester account. She tripled it in 32 trades, trading the daily charts. I think she was trading kangaroo tails on the euro. Then she said, this is really, I'm pretty excited, blah, blah, blah. I'm going to start moving on to other currency pairs and do more, get more kangaroo tail under my belt and that sort of thing. And I said, yeah, that's great. There's a couple of things that I thought of when this came up, and one of them was that you hear people say you don't have enough data. Like, normally, if someone had 30 trades, people would say things like, "Oh, well, that's not enough data. You don't know if it's significant or whatever." And that can be true, right? And that's why, for example, when you see companies and they do like drug tests where they have a placebo and then the real drug, they'll have thousands of people in the study, right? And one of the reasons why that is because when you have thousands of people in the study, you have the ability to zoom in and see really little tiny effects. And like the placebo effect is well known to help like 30-something% of people, right? Just by taking a sugar pill. So they need a big sample, because if they had a small sample of 50 people in each group, they probably would find nothing. And then they spend all that money creating that drug for nothing. So they need big samples so they can zoom in and see really tiny small effects. Okay. So I said, it's great that it worked out to be 32 trades and you're able to triple your account. But you might have been risking too much, right? Because in the future, you might not be that lucky and actually end up with a lower win rate and more losing trades in a row and get into a deeper drawdown and then throw up your hands and say, I quit, right? So that's one thing, obvious, right? The other thing is, what people don't talk about small samples is if you get an effect for a really small sample of, in this case, 32 trades where she had a 59% win rate, a 1.2 reward risk ratio, that can tell you that you have a really strong edge. Like, if you only take a few trades and you find like this really good effect, even if you take out the impact of the risk percentage that she was using, right, per trade, even if you pull that out, and just like in terms of R, right, R, the amount at risk versus the amount of return, you see that this is a really strong effect. That could mean that you're dealing with a really strong edge, right? That your interpretation of the kangaroo tail, that the way that you trade it is viable.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And so that's something that no one ever talks about. And people just they just assume that small sample equals maybe you just got a freaky lucky, thing. But actually, it also could be that you don't need, a really strong telescope to see the moon. I mean, because you can see the moon with your, you know what I mean, with your bare eyes, and that's the kind of thing that could be happening with that. So that's something I just want to point out for traders when you're testing, is that it's really easy. Everyone knows the story about you don't have enough data, okay, fine, right. The other side of that is if you have too much data, you're going to find a really small edge, right? And maybe you don't want to trade that. Maybe you don't want to trade the really small edge. Maybe you want to trade those systems that after 50 trades, it's pretty obvious that, okay, there's something going on here. So that's something that I wanted to point out, and I think can be useful to the other traders out there. I know, like in the past, you've traded systems, presumably, I know that you've tested because you're really good at that, right? And then later on, you might decide, well, this isn't really, this isn't really for me. Is that because you think that you were trading something with a small edge, or are there other reasons that came in to that? Or
I think in the past, for sure, like the small sample size kind of messed with my head a little bit. Now I understand that, some of these systems are only going to have a few trades. Like what I'm testing right now, actually, it only does not even one trade a month. But when it does fire off, it's like a 90%, probability of winning. So it's one of those things where you just have to keep it in the toolbox, and then if it comes up, then just track the metrics, track the results versus the back testing, and then kind of go from there. But yeah, definitely the small sample size thing did mess with me before.
Yeah, it's a bit tricky, It's kind of like systems where everyone focuses on the entry, and it's similar with testing. Everyone looks at, the win rate, and they look at, the sample size, and they all work together sort of thing. Some traders I know, they won't even use money management. And actually, technically, she didn't either, because she risked a constant lot size on all of her trades, even when the account doubled and, got to the tripling point. That's kind of cool, because when you use fixed lot sizes, you can look at R, right? So that's a way of looking at your R return. And I know lots of traders, usually they're programmers, like they have a really analytical mind. They won't even trade something unless they run the test in R, on the basis of risk, and see what kind of R did it return. Did it return 15R or 50R or 30R? After 500 trades, how many R am I up? And so that's another way to look at it. And that's actually probably one of the best ways to look at it as a trader. Before
you can actually tune things, right, when you're looking at R instead of just the percent or whatever you're doing, right, fixed percentage.
Yeah, because if you use some really hyper aggressive algorithm with your risk, they can make it look really good when really there's just a small edge. So yeah.
And what do you think about Monte Carlo testing?
Oh, I'm a big fan. The reason why, it's because, the reason why I like it, and the reason why I pay people to create spreadsheets, because I'm not smart enough to make them, is because, if you use Forex Tester, you can get sucked into this idea. Well, for example, that woman that was backtesting the kangaroo tail, and she posted in the forum, and she said, hey, this is what I got. You cannot, as a Forex tester trader, run through the same number of simulations that you can with Monte Carlo. You're just going to be on one path. And so you can think, okay, that's going to be pretty close to what I'm going to trade if I go live. The reality is that might not be true. The great news is with Monte Carlo, for people that don't know, Monte Carlo is just when you run a whole bunch of simulations. If you can't do those in your 50s, then you're definitely in trouble, right?
Exactly. Yeah. And I think a lot of it's like a mindset too.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. Hey, Walter, I want to talk about NAD and resveratrol. You turned me on to that, and you've been doing this longer than I have. I just started it, so I want to see what your experiences were, and that might help some people out there.
Yeah, sure. So so we should put a link to the David Sinclair interview. We'll put it in the show notes so people can click and watch that. It's 10 minutes or something, but kind of gives you a background on that. So my understanding, so there's a guy named David Sinclair, right? He's from Sydney, and he's now at Harvard. Again, I'm not a biologist or anything like that, right? So, in fact, I took one biology class, and it was because I failed physics in high school. So, because I failed physics, or got a D, right, and I wanted to go to college, the reason
it's a long story, but I tried not to fail physics. I was in the lab group with these guys that were jokers, and they would like turn on the eye washer and stuff and like spray it all over the. So I basically got lumped with these older guys, these older kids in high school, and totally got screwed. But it's my fault. I shouldn't have joined. You know, that was the wrong lab to join, right?
Yeah.
Anyway, so yeah. So then the teacher was like, "This is a funny story. Then we'll get to NAD, I promise." But the teacher was into like skulls, okay? He collected animal skulls. So he was like, hey, if you bring me an animal skull, I'll skin it and you'll get extra credit. So I was like, oh man, maybe I won't fail physics, right? So so it was like Easter holidays, right? So we had a week off from high school, whatever. And I'm like driving around where I live. It's kind of rural, lots of farms and stuff. So I'm driving around looking for like, you know, a dead rabbit or something that got hit by a car, like some roadkill, right? And a snake, anything, right? And I found a coyote. It's like, holy cow, like a coyote was hit on this, you know, this road out, you know, out in the country, not far from where I live. And I was like, I'm the kind of person that has a problem giving blood. Like I get really wheezy.
Same
so
here.
there's this coyote. Yeah, you same. Yeah. This coyote, I had to saw off his head, okay, with like a hacksaw, like a something that you take a branch off of a tree, right? It took forever. The skin was so strong, man. This was crazy. And I'm sure there was like fleas all over this thing. And so I sawed off the head. I put it in like garbage bags, double bagged it because I didn't want to get blood all over my car, you know. Bring it to the guy. He lived around the corner from my high school, my physics teacher. I bring it to him. I knock at his door. I'm like, hey man, you know, I got you a head. Like, I didn't want to fail physics. And so, because I really wanted to go to college, and this was going to be a black mark on my record, right? So he's eating like cup of noodle soup, okay? I'm not kidding. This is totally true. He's eating like a cup of noodle soup, and when he answers the door, he's like, oh, let me have a look. He opens the bag, like pulls out the head, checks it out. So, oh, coyote, wow, thanks, you know, and he's really excited, puts it back in the bag, still eating his cup of noodle soup. I'm like, this is disgusting, man. Anyway, found out after, you know, school's back in a week later or whatever, after our spring break, or 2 weeks, whatever it is. He's like, oh, the skull was no good. It was too crushed, you know, because when it got hit by the car, it like crushed its head or whatever. I'm like, oh, okay. But I still got the extra credit. So I guess I went from an F to a D. You know what I mean? So that like got me to, so I had to take biology in junior college, and that worked as a science credit. I had to retake physics. So I had to take, you know, summer school at the junior college, which was cool because that actually worked toward my college degree too, so it kind of double counted for high school as well. So that's my only biology course, okay? So that's a long-winded way of saying I know nothing about biology and even less about physics. But David Sinclair discovered this compound called resveratrol, right, which is in wine and is pretty well known now. But he also talks about this thing called NAD and NMN. Now, I have no idea what they stand for. You'll have to look at the video. It's like nicotine mononucleotide, whatever. But the idea is that all of our cells have NAD in them. It's either, I think it's NAD, and I think NMN is the precursor to NAD. But anyways, everything in your body, all of your cells have this NAD. If you didn't have it in your cells, you would die within minutes, okay? So that's how important this stuff is. The interesting thing is, as we get older, our levels decrease. Okay, so this is one of those things that sort of, they believe, leads to aging. Okay, so what David Sinclair says, you can, and they found that this works in mice. With mice, they actually give them this stuff with resveratrol. So it's NAD with resveratrol, or NMN, which turns into NAD when it's in your body, right? It's like their hearts are like, they have the hearts of mice that have been running, like runners, like marathon mice, right? Yeah. And they don't get tired. Right? And they live longer and they regenerate faster and all these really cool things. And so the idea, the belief is, if you increase the NAD in your system, especially as you get older, because it's decreasing naturally, you can feel younger, you can, you know, all those sorts of things, feel more physically fit, even if you don't exercise. Like that's what they found with the rats, is that the rats that do exercise but don't take the NAD, don't have the NAD and the resveratrol supplements, and then the rats that just don't do the exercise but actually have the supplements, they're the same. Like they both have the same ability and all that sort of stuff when it comes to exertion. Like they don't get tired. And so I found the same thing. Like when I get injured, like, if I'm running and I injure my ankle, or I injured my shoulder at the gym or whatever, and it was like terrible injury. And I was talking to some guys my age, and they're like, "Oh man, that's what happens, man. Your shoulders go," and they'll stuff. I'm like, "Oh, really? No." So I'm like, I'm really on the NAD really hard. And what I found is that if I take, and I've been really good at taking it every day. What I found is that I do. Even if I haven't been running for a while, I still am able to run upstairs, no problem. Like I don't get winded. I feel like I've been running. And what I found is that my shoulder is like almost completely healed. And it wasn't healing forever. But now that I've really been on the NAD, like, you know what I mean? Mm-hmm. And you feel like you have more energy. You just feel really good. It could be placebo. Definitely, it could be that. But I would encourage people to look into it, because Sinclair's not the only one doing it. There are other ways that you can naturally increase this. Like another one is rose hips tea. Apparently can help that. Like starving yourself.
Yeah. The cool people tend to hang out late. They like to drink, and once you start drinking, all the stuff comes out, right? And everybody's like good buddies afterwards.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, they say that you're the average of the 5 people you hang out with the most. So what are your tips on like finding more successful people to hang out with?
Yeah, that's interesting. I think it's kind of like finding a mentor. If you're trying to learn a new skill, I believe that going to university doesn't necessarily prepare you as much as maybe like working with somebody would, like someone that kind of like says, okay, I'm going to show you how we do this sort of thing, which is kind of funny for me to say that, because I spent so much of my life in school, getting a PhD and everything. But having said that, that's how a PhD works in science, is you kind of work with a mentor. So, even more so in places like Australia or England, where that's pretty much all you do. Whereas in the US and Canada, they have like courses, you actually take classes. But in other countries, the PhD is literally just working with a mentor. So I guess that makes sense. But so here's the thing. For me, and some people do this, and I understand why they do it. They just hang out with people because, like what you just said, like they go, oh, this guy's really successful, so I want to learn from him or work with him or hang around him, and kind of figure it out. I find that you kind of like need to like them too. You know what I mean? Like it has to be someone, you know what I mean?
Yeah.
Like it has to be someone. I mean, some people do that. Like they're totally cutthroat, and they're just like, in fact, Lincoln's wife, I think his second wife was like that. I think it's the guy who wrote the How to Influence People, How to Make Friends and Influence People, Dale Carnegie. Is that his name? Yeah. I think he wrote a biography of Lincoln, which is really good if anyone, if you haven't had a chance to read it. Anyway, it sounded like, and Lincoln had a terrible life. Like he had so many bad things happen. People kind of might know that before he became president. Like becoming president was probably the only thing that he actually succeeded at. And even at the time, he was like Donald Trump is today. Everyone hated him. So it's funny that we look back and we go, this guy is so like, I guess we used to think he was a good president before we tore down his statues and stuff. But anyway, so his second wife was like that. She was cutthroat. She was like, It was funny. Like I think she was at some point considering who to marry, either Lincoln or the guy that Lincoln was running against for Senate. Like she literally like it was kind of like a coin flip. She's like, and then she chose Lincoln. Then he like lost the race, and the other guy won the Senate race or whatever. It was so funny. It was something like that. Anyway, so for me, I like to have friends that that I like, and it's nice if they're also someone that you can learn things from. I think part of the process of this, like if you have a lot of friends that you feel like they're not doing as well as you, or they're not at the point, like they just seem to always have bad luck, or they always seem to be down. Part of the process is just pruning those relationships from your life. You know what I mean? Like kind of cutting the ones that you don't want that influence in your life anymore, which is always difficult, especially if you've like grown up with somebody since you were kids and that sort of thing.
Or it's a family member.
Tough. Yeah, or a family member. Exactly. Yeah. Even better. Yeah. Good. So I think that's the first thing you do. And then the other thing is it's pretty easy. Like you think about where will people be that you think you'd get along with. So it would be like, if you keep going to McDonald's, what are the chances that you're going to bump into someone that's got a $3 million trading account? You know what I mean? Maybe, but chances are you're probably more likely to find someone who's, not at that level. So there are a lot of places you can go. I mean, that's why they have like clubs and stuff, you know, like they have in Sydney here, they have the American Club where all the Americans hang out, you know, and all this stuff. It's so funny. Like, and they had that, a friend of mine, she worked at the one in Japan, in Tokyo, they have the American Club and they make like deep dish Chicago pizza and, you know, like, so, you know, golfing and things like that. It depends on what you're into. I've made some really good relationships, mostly from older people who are retired through surfing, because in Australia, surfing is a very, and probably similar in the US, like everyone, like there's a whole wide
national sport, right?
Yeah, yeah. A lot of people do it. Yeah, yeah. It's not just a certain demographic. You know what I mean? Like, whereas you might say, like, if you were going to do badminton, there's probably a certain type of demographic that's going to do that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
You know, and maybe bowling is similar, but with surfing, it kind of cuts a wide range. And so I've made some really good personal mentoring relationships from people. Some of them have died because they were older from surfing. So for me, that's been, so I would just say, do what you like and think about where the successful people would be and try and go there. If that's something that you would do naturally, like if it's not, you know, if you're not into like bridge, you don't have to go learn how to play bridge or whatever, you know what I mean? Like you don't, you know, and go into the bridge club or whatever, or golf or whatever it is. I would just do what you like to do and think about where they would be. So, but the first step, the most important step, is cutting the relationships from those people that you feel like are holding you back because they're always, you know, everything seems to be against them. They're always kind of a negative, you know, energy on you when you're around, and they kind of drag you down. That's what I would say. What about you? What are your ideas?
Yeah, no, that's a good point. I totally believe in what you're saying about taking your interest first and go do that, and then go find some cool people, because there's always going to be cool people in those activities.
Yeah.
And I think the general area is another thing to consider. Like, what area are you doing these activities in? Is it more of an upscale area, or is it like a lower income area or whatever? That can play a factor in it. Another thing that's been helpful is just going to like meetups or any kind of group associated with trading, and then just staying there and hanging out late. Like, I think that's one of the key things. Like, the cool people tend to hang out late. They like to drink, and once you start drinking, all the stuff comes out, right? And and everybody's like good buddies afterwards.
That's a good tip. Yeah, that's a really good tip, because it's so true what you just said. That's kind of where, like, those conferences and those things where you have a lot of, you know, whatever the field is, like trading or whatever, and that's where a lot of that stuff happens. You're right. The other thing that you said that reminded me is you can move, right? So if you live in an area, like, let's say you're fairly young and you're renting or whatever, right? And you live in a really nice place, but it's in kind of a cheaper neighborhood. What if you were to move to a really small place, an expensive neighborhood? I think you really bring up a good point, Hugh, what you're saying about when you're saying about where you live, because if you don't live in a nice area, you can always move, you know, to some place. Yeah, so you kind of like check in with the app. It's not like you're just like, Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk about some strategies for calming yourself down during trading. Maybe you had a bad day, got into a fight or something like that. What are some strategies that you use to calm yourself down?
Yeah, good one is breathing techniques. So one would be like, you want to breathe in and out your nose. I think there's a new book about this called Breathe. I don't know. Maybe we'll put it in the show notes. This guy kind of went around the world and learned all this stuff about breathing, which people said, what? You're writing a book about breathing? Obviously, these sorts of things have been handed down through the centuries, especially out in the East. One way to do it is to breathe in, close off one nostril, breathe in one side, and then breathe out the other. Or you can just breathe in like to a count of 6 and then breathe out to a count of 6. If you're really small and younger, maybe a count of 5 or 4. But if you're you're a normal adult, the reason why I say that is I do it with my kids and we don't count to 6 because they can't go that far because their lungs are too small, you know. But like, you know, if you're a small person, right? Like, so yeah, so that's another thing. Or you can just simply, I like to lie down. I know some people don't because they fall asleep. you can lie down and do the sort of the guided imagery thing where every breath you take, what you do is you feel the relaxation kind of moves further through your body, like starts up at your head, goes down through your neck, your shoulders, your body, your abdomen, all the way down to your toes. So after 2 minutes, you've got to the point where that breath, like the first breath, the first exhale, it's like here, second exhale is like here. You know, as you go, you kind of just let it go. So that's more of a sort of like a guided imagery or guided meditation sort of thing that you can do. Those are probably the easiest ones. Like if you breathe in and out your nose and you do it slowly enough, you will reduce your blood pressure. Like there's all kinds of things that you can do. If you're like in a full panic attack, the tips I got from that were, because I used to get these for a really short period of time when I was going to defend my my dissertation in psychology. I was freaking out because I tried to defend it and they failed me. And so then I was like, well, I hope they don't fail me the second time. Like, what are they going to do? Like, you know? So I was really freaking out. And I learned to put your face in ice water. Okay, so if you're like super, like really kind of heart palpitation, I mean, this is not just normal, you know, stressed out. I'm talking about like really full on. Put your head into ice water or bear down and squeeze like you're doing a poo. That's the other one. Those two are like totally, it's like a nerve thing. Like you can't, you know what I mean? Like they both will slow down your heart. So that's just extreme. But otherwise I would go with like the relaxation, you know, visualization of your body relaxing, or the breathing thing can work too. What about you? Do you have any tips on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, I mean, I do the breathing thing too, but I also use this device from HeartMath, and they measure your brain-heart coherence. So that's a visual way, at least you can see on the app, like how coherent you are right now. And they usually recommend that you breathe like, I think 5 times. I mean, not for 5 counts, and then breathe out for 5 counts, in for 5 counts. And that really slows things down. It increases your heart rate variability. And then once that graph is green, then you know that you're kind of in a good place to start trading.
Okay, can I ask you a question?
Yeah.
When you do this, are you sitting up or lying down, or what position are you in when you're using this?
Yeah, just sitting down in my chair.
Okay. And so when you're doing it, are you looking at the app? Like, is it like a biofeedback kind of thing where you're looking at or is it different?
I personally just do 5 minutes and I don't look at the screen, because when I look at the screen, it freaks me out and my graph goes back down again.
Yeah, that's what I would be worried about. Like that was my concern. That's why I asked that. Yeah. Yeah. So you kind of like check in with the app. It's not like you're just like, I can see where that would be for me, that would be definitely like for you the same. That would be counterproductive. Yeah. Gotcha. Yeah. That's the thing. Like I love those apps. I'm always concerned about, you know, is my attention to be on the app, like the screen, or is it going to be more on what I'm working on? That's the only thing I always wonder about those. But yeah, that's a great way to do it. Really, you just check in like every 5 minutes, just check in and see where you're at.
Yeah, whatever works for you.
And the one that you turned me on to, that has the headphones that you plug in your headphones, and then what was it? And then like the chirping, the birds start chirping and stuff.
Yeah. The Muse headband, right?
Yeah, the Muse headband. Yeah, that one. That one's cool because you don't actually have to look at it. It just tells you with the audio. That's why I like that one.
Yeah,
you know what I mean? Like it'll tell you when you're slowing down. Like it'll tell you when you're in a lower brainwave or whatever. Yeah, that's what I like about it. Yeah.
Yeah.
So that's another one. That's
even with those though, like I end up looking at the time, so that kind of throws me off sometimes.
Yeah, that's true. Yeah. Cool.
All right. Thanks, Walter.
Thank you.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
has anyone made it before as a comedian? They're like, well, yeah. Well, then I'll figure it out. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what are the basic trading personality types that you've seen?
Well, it depends on the dimensions you're looking at. So I would break people down into two categories, and we'll be really simple. Okay, people who focus on the reward, and there's people who focus on the pain. And then there are people who are super conscientious, and there are people who are not so much. Okay, so we'll just do those four things. Okay. So what you want, I believe, what you want to do is focus on the pain, but also be conscientious. I think the worst combination, so I could, if you had if you drew a box with 4 spots, you know what I mean? So you could be really conscientious and focused on pain, which is basically losses in trading. If you're there in that area, what that means is you're probably not going to risk too much. Now you can go extreme. So I know this guy, he was the co-founder of Awanda, and he was super extreme, too far. He was just risking 0.1% and stuff like that. He was really, really low, really risk aversive. So the other side, so you have those 4 squares. So you have risk averse or focus on the pain and very conscientious. Conscientious just means you're very meticulous and you're aware of what you're doing and you're not sloppy. And you know what I mean? You're so someone who's very good at being organized is conscientious, right? Mm-hmm. And it also helps to be self-reflective too, but that doesn't necessarily mean, conscientiousness may or may not relate to that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Then if you're focused on the reward and you're low in conscientiousness, that would be the worst, because in that case, all you really think about is how much trading can make you. You don't consider the drawdowns, the losing streaks, and you're not very good at, this is the kind of person that's always kind of swapping systems and oh, well, so-and-so said to buy the euro, so I'm just going to do that because, he's always right. Even though you've never tested or anything, his strategy, just kind of that sort of thing. And you can do a conscientiousness test. We can put that in the show notes and see where you are there. But that's what you want. You want to be higher on conscientiousness, and you kind of want to focus on the risk or the pain of trading, because that's what's going to end up ending the game for you. It's not the reward. The reward's great, and it's great to look at that, and it's great to target that. The driving feature of your system should be dependent upon the risk side of it, because that's going to define how long you get to play the game. So, yeah, that's what I would say. Cool. That's how I look at it. So those 4 dimensions, those 2 dimensions with 2 categories. I know it's very simple, but that's an easy way to see it.
Oh, that makes sense. I think for me, it's people are either focused or unfocused. Focused people tend to figure it out, and if you're not focused, then they tend to go off, do something else, and go flip houses or something like that. So
yeah, exactly. It's a means to an end. And if you really press every trader, they'll even in the beginning when you say, "Oh, I love it" and all that, they'll still tell you it's a means to an end, and that's true. But you're right. There are people who are totally determined, and I can't remember. I remember there was a comedian, and his parents were like, "What? You're going to be a comedian? Are you serious? That's ridiculous. You'll never make it," or whatever. And he's like, "Has anyone made it before as a comedian?" They're like, "Well, yeah." Well, he's like, "Well, then I'll figure it out." You know what I mean? Then that's, you know what I mean? Those are the kinds of people. It's the same in trading. Oh, well, you're going to be a trader? Well, everyone loses money, blah, blah, blah. Well, has anyone ever figured out how to trade? Okay, well, I'm going to do it. That's the kind of the approach I think that works. It can be painful. There are shortcuts. Information is helpful, but too much information can get you off track. There's so many things you have to keep in mind. But yeah, I would definitely say that's a big factor, what you pointed out. That's a huge one. When I was undergraduate school, one of my professors, she kind of made a side bet with her lab assistant. She didn't know, I was dating her lab assistant. She didn't know, and she told me. She's like, there was me and my other friend. We were both trying to get into graduate school because we both wanted to get our PhD. And my friend was way smarter than I ever would be, right? He was naturally gifted, okay? at a lot of things. And she said to the lab assistant, who was my girlfriend, and she didn't know, she said, which one do you think is going to go further or whatever in psychology? And the professor basically bet on my friend. He's way smarter, but he's not really that motivated. Like we all knew that he was really smart, but he wasn't that motivated. He never really had to try. And then, and then my girlfriend's like, well, I don't know. What about, Walter? Because he's like super motivated. And she's like, yeah, but he's not that smart. So yeah, it was pretty funny. Anyway, fast forward, my friend, he went to graduate school for a year and dropped out. So he never, I went through it. Yeah. So it's exactly what you're saying, basically. So at least in this one instance, yeah. So I agree. Yeah, motivation is true, man. Like if you have that motivation and you're determined no matter what, then you'll find a way. You will find a way. You just have to do it long enough, and then you can get it. You can definitely get it. Yeah,
for sure. Yeah. Well, talking about personality types, what do you think about like all these personality type tests? Do they help? Do you think they just hinder?
It depends on what you're trying to do, I guess. This is a big thing in psychology. In personality psychology, people always talk bad. Like the one I was telling you about, the conscientiousness, that's from one called the Big Five, right? And, they talk about the 5 dimensions. And it's kind of like intelligence. In psychology, intelligence is a hot topic too, because people go, well, what is it? Is it a general thing or is it like individual specific things? And it's a big debate. If you're a person who's trying to get better at trading, then I do believe there are some tests that can help you at least become more self-aware and probably focus on something. Like if you identify something is your weakness, then that's really helpful. That's a very good thing to know. It's also kind of, which I think is what you're hinting at, it's also kind of taken to an extreme where it's like you take this test and you'll know for sure if you're going to make it. Like, that's not, you know what I mean? Like that's like, because personality changes. That's another thing. Yeah. We used to think that it was like solid set. Not true. Personality changes. You can become more conscientious or you can become less conscientious. You can become more determined and you can change your mindset from sort of a defeatist sort of woe is me, everything always, my life, I always have bad luck. How do you know that the walrus is angry and he just doesn't always look like? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, revenge trading. I know some traders do it. I haven't really suffered from that, but let's talk about that and see first of all, why do people do it? And what are some ways to overcome it?
Well, to me, it's kind of like the same reason why as humans, we will look at different animals and we'll give them human characteristics. There's actually a really fancy word for that, and I can't remember what it is. But like it's where they do that in Disney movies, right? They take animals and they make them look human. And we do that when we see animals. Like you go to the zoo and you go, oh, look at that walrus. He's so angry, and like, but you like, how do you know that the walrus is angry and he just doesn't always look like, you know what I mean? Like,
yeah.
To me, that's a weird thing. And we do the same thing, I think, with the markets where it's like, you little pound, you got me this time, next time I'm gonna get you, sort of thing. It becomes this thing where it's like I'm gonna get back at the pound because the pound has been beating me up and taking my money. That's just a license to get off the road. Like you're going to be off your plans. You know what I mean? Like you're going to get way outside of that. And
now it's personal.
Yeah, it's personal. And the other way it comes up though is brokers. Like you'll hear people say, oh, my broker got me again or whatever. I will say that there are brokers that do that, especially in Forex.
Yeah.
But it's not the norm, and you can usually figure out who they are really quickly by the reviews. So when you see these reviews where these brokers are just getting hammered, all the brokers get hammered in the reviews actually, but the ones that get really hammered, those are the ones that you want to stay away from. And sometimes you can kind of tell when someone gives a broker a bad rating. You can see like they're like, well, what they're saying is completely ridiculous. Like, like I'm actually on the side of the broker. You know what I mean? But so you can get spiked and things like that. And so you're like, oh, I'm going to get that. I'm going to get my money back and stuff like that. But it's really important for you to just determine like what are you trying to do as a trader? Are you trying to make money out of this strategy that you've tested and has a really good chance of working? Or are you trying to get back at the broker, the currency pair, trying to prove your boyfriend or girlfriend wrong that, you know, you can make it out of trading. Like, what is your real motivation? And I think the closer you are aligned to following your rules and actually following that path, I think the better off you are. But that's
totally, for sure. And I think it really boils down to ego, right? Like, we want to prove something, like you said, and our ego can't let go of it. And we need to get back at them, or get back at whatever we perceive to be the culprit or cause us to lose. So what do you think are some ways to get over that?
To get over it. First of all, what you said is I totally agree with. The female traders typically don't have as much an issue with that. They're really good at letting go of ego. Typically, not always, right? Typically, they don't have the ego that men do. And you'll see this when you go to like see trading gurus talk. The men will talk about all the money they made and how good they are and how they did this and that and blah, blah, blah. And it's like, you know, you're setting yourself up for a failure. At the time that we're recording this, there's a really famous dude on Twitter who trades stocks, and he's made a boatload of money. And the last couple days, he's lost 4.5 or 4.2 million or something like that, because he's letting his ego take over. And he's saying, like he says, the stocks only go up. And if you have any, rule number one, stocks go up and they only go up. Rule number two, if you have any questions about what to do on a trade, see rule number one. And so what he's doing is he's really setting himself up for a life-altering loss.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And if you read like the Market Wizards books, you'll hear all the stories about these guys who went through that. So how do you get rid of ego? Okay, what you need to do is you need to become your own manager or have a manager, one or the other, or probably both. So one, to become your own manager is rate your score on entry and rate your trade on exit, okay? And objectively look at that every week, every month, every quarter, every year. How are you tracking? You can keep it in a spreadsheet, see how you're going, how your rating's going. The other thing you do is every week you can talk to someone else and have them do the same thing and say, well, you didn't do what you said you were going to do with your system on 3 out of your 5 trades. So what's going on here, buddy? Right? Like that's another way. So what you're trying to do is step out of yourself and see your performance from another's point of view. This is why the professional traders, when I say professional, I mean like the job, the guys that's their job at the bank or the fund.
Traders,
yeah, they have someone looking after them. They all do. And when they leave, they don't, right? When they go home and trade with their own money, they don't anymore, okay? And let's look at the difference between performance. So you can create that yourself, where you have someone else. You can try to do it yourself with your journal and rate your entries and exits and rate your performance on the execution side, but you can also get these sort of reports from somebody else that you trust, and you can do the same thing. You know, it's a trading buddy sort of thing. I try to connect people with trading buddies in the forum, and it's a really good way. Like, just every week, man, just work on one thing. What's the one thing that you tell your trading buddy you're going to work on this week? Simple as that. And then at the end of the week, how did you do? Did you do it? What? Show me. Let me see the trades. Let me see the data. Even if the one thing is just, I'm going to back test 100 trades this week. You know, it doesn't even have to be live trading. It could be back testing or whatever. So yeah, that's what I would recommend to do is offload the responsibility of knocking down your ego to someone else. They're much better at it.
Yeah.
Hopefully
Exactly.
they'll tell you the truth. You need someone who's truthful, right? Yeah.
Exactly. Yeah. And I think we both know several bank traders who could trade well at the bank, but when they leave, it's really difficult, right? And it's part of that system. Now, I would also add, like, I think it helps to physically imagine yourself like separate from yourself almost, and like observing yourself from as like a third party, and that helps me to get more objective about what I'm looking at.
Yeah, like a camera. So I think I've read about this when I was on my trading sabbatical. Yeah, so you kind of like back in 2004, I don't know if it's NLP or maybe it was NLP, but the idea that you kind of see, like you say, like you're there trading. And I remember when I first started doing it, I was like, man, I looked at myself and I felt like I was addicted. You know, like I felt like I watched myself trading in my setup, and I had this really comfortable chair, and I was sitting at it like every night. And I just thought, man, like you're just sitting there in that chair the whole time. What are you doing? Like, and that's when I kind of moved away from trading the lower time frames. I just thought, I realized, number one, that all my best trades were the ones where I didn't sit and watch it. And so I kind of walked away. And thing number 2 was doing that technique you just said, which is a great technique, because I kind of objectively saw, man, my body is going to mold into that chair. Like I am going to, you know what I mean? I am going to be like, I'm going to turn into Jabba the Hutt because, you know, and I would fool myself because all day I was surfing, I was going, you know, doing whatever I wanted. And then at night around 6 o'clock is when I would sit down in that chair and just lock into the computer, and I'd be there from like 6 till 2 a.m. It was crazy, man. So yeah, so I just thought this is not a good idea. And so that can definitely help. You can ask other people. You can ask other people, you know, I mean, like, it doesn't even have to be, I don't, you know, with your trading accountability partner, you want someone who's a trader, but it could be someone that's not, doesn't really understand trading. And you can ask them about, what do you think about, you know, my trading or how I'm, you know, because then you might get a perspective about, they might say something that'll shock you. Like, are you really happy? Like, is this really what you want to do? Like, you know what I mean? You always seem so upset, or, you know, they could give you some sort of weird insight that you hadn't even considered.
Yeah, because if you're in it, like, there's a certain amount of dogma associated with any type of activity or profession, and some people get brainwashed into that. But when you get an opinion from somebody else from the outside, then you can get something that's fresh and something that's not necessarily part of that dogmatic thinking, right?
Yeah, absolutely. Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I would argue even the most successful have been women, the ones I've met actually, and that's a very small population size, obviously.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about men versus women in trading? Do you think that generally women are better traders from the beginning, or do you think men are, or what do you think about that?
So there's this idea in like science. I understand it from psychology, but I'm sure they have it in biology too, which is you're born with this range. You're going to be a height. Like, your genes are basically going to determine pretty much the upper and lower limit. So you might be 6'3", or you might be 5'11", but you're going to be between 5'11" and 6'3", or something like that, right? Depending on your nutrition and things like that. Okay, so, and I guess, you know, how much you stretch your spine or whatever. Like, I don't know how you get taller, like, how much yoga you do. Yeah, so the way I kind of look at this with the women versus men sort of thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
On average, and I know we're talking about averages and stereotypes and all that, but sure, on average, men have a wider range. And here's why I say that. Because sometimes you'll find a Jesse Livermore, and you guys can look up who he is. You can go read Reminiscences of a Stock Operator. I'll put the link in the show notes for this episode. He was crazy. Okay, he took risk to the max. Actually, you could argue that George Soros is the same way. George Soros is very similar. The upper limit is when you just go hog wild. Now, Jesse Livermore also killed himself. George Soros is to be determined. Okay, so you may not want to be, you know, Jesse Livermore, right? You may not want to go into that. So that's the other thing, is that George Soros and Jesse Livermore, they're at the upper edge because they got so wild with risk. Then you can also have the lower limit down at the bottom, where there's people, same thing. They get crazy with risk. They're doing revenge trading, all this crazy stuff, and they end up blowing out. Whereas I think women have a tighter range, right? So I think women typically don't let ego step in and kind of dictate what their position size is for any given trade, right? And they typically a little bit more measured. I actually think that women in general should be running the world. Like, I actually think we would have fewer wars. There'd probably be more wisdom in terms of, you know what I mean? Like, I just think the countries would get along. That's another story. So so I think that they have a tighter range. So they're probably more likely to make money overall.
but also they may not have the extreme highs and lows that you get when you get these wild cowboy guys, stepping in the markets, which is like, they're there, man. You can see them, and you can see them today. You can go on Twitter. I had no idea that Twitter was such a spot for traders, but it is. Like especially the stock traders. It's crazy. I've only really realized that in the last like 6 months, but it's entertaining. It's actually entertaining to see these guys try and blow themselves up. It's crazy. Yeah.
There's actually some good opinions there too. So
yeah, absolutely.
Yeah.
What do you think? I mean,
for me at least, the most consistent traders I've ever seen, and I would argue even the most successful, have been women, the ones I've met actually, and that's a very small population size, obviously. But I do know of a couple women who can make a living basically with a 5 or 10 grand account, and they'll double that up every 1 or 2 months, and then they make a living off of that, and they don't want to trade anymore. But I'm on a pure percentage, return. That's like fantastic, right? But yeah, I think they do have a little bit more of a calm head. They generally look at things more objectively, and they don't put that testosterone, I guess, in it and try to like go balls to the wall or whatever. Yeah. So I think, there are fewer women trading, but I think when they do decide to trade, I think they end up usually being pretty good.
Absolutely. Yeah.
Yeah. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Take it and, be a man.
Yeah,
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, when you're first starting out, what would you have liked to know about trading psychology that you know now?
Yeah, it's a good point. I think probably that's the biggest part of the trading game is the psychology part and not the systems part. I was like a lot of traders, probably like you in the beginning, where all of my focus from 2000 to 2004 was on systems. And back then there was like one Forex book that was available that I could find anyway. The rest of them are all technical analysis books for stock traders. Mm-hmm. And so that's what my focus was, and if I remember one day, it was when I moved to Australia, I didn't really have anything to do. Like all I did was just get books from Interlibrary Loan. Mm-hmm. So there's a little tiny library in the town I lived in that was about the size of like a really big garage,
Yeah.
It was weird, man. It was crazy. It was like walking into a sheep shed or something. It was weird. Anyway, so they had no books, right? And certainly no trading books. But what was cool was I could pay like $10, $15, $20, and they would send these books from all over, from universities in like Adelaide and stuff. It was amazing. And so I had this really cool education of learning all these strategies. But in the end, I realized, and I remember one day I had this system. It was called, I learned it from I'll put the link in the show notes. I learned it from a Jake Bernstein book called The Stochastic Pop. Okay. And I was trading this. Yeah, I was trading the strategy, and it was actually working. And yet I didn't follow the rules. And I remember going out surfing, like it was a rainy day, and I remember just thinking to myself, what am I doing? Like, I have this strategy, it works, but I'm not following the rules. Like I'm taking my profits too early, blah blah blah. I'm doing all the wrong things. You know what I mean? Mm-hmm. And it was at that point that I really understood the magnitude of the trading path. Which, really what it is really about you. It's about you, the trader. You are the mechanism that makes it all work. And even if you're an automated trader, I know some people might be listening to this and they're like, well, I program, I use EAs, blah, blah, blah. I don't have to worry about that or remove emotion from my trading, blah, blah, blah. Well, no, not really, because you turn it on, you turn it off, you modify it. You know what I mean? Like you're still tinkering around. So it's really no different for a discretionary trader and an automated trader or what they call systematic trader, I guess. So yeah, so that would be the biggest thing. And the other thing that drove that home for me was the Market Wizards books, because I saw all these different traders who were successful and they all had different ways of doing it. And I was like, whoa, because I always thought like there's got to be one way or maybe a couple of different ways it would work. And I didn't realize that there's all these paths you can take, you know? And that was really cool too, because it showed me a lot of them had that experience of having a terrible loss, and that sort of set them off on the right path in terms of risk and stuff like that. So they really kind of recognized the importance of risk management. And then also it was an eye opener, because like, wow, all these guys have totally different approaches and they're all making it work. So that's kind of like, it sort of readjusted my reality, and it wasn't about systems anymore, because like, why would it be about systems? All these guys are, they're trading totally different, completely opposite in some respects, like 180 degrees opposite. So yeah, that was, for me, that was really important, was the realization that it is about you, the trader, and not so much the system. The system's important and you interact with it, and that relationship between you and the system is really important, but it's not the real gains you're going to make as a trader is once you realize that you are the reason why you succeed or fail. Everything else is just kind of like real estate. They say real estate, location, 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 right? And that's true. Like you can have a gorgeous mansion, but if that mansion is in like the ghetto of like South Central LA, nobody gonna want it, right? I mean, it's the same, it's the exact same thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Whereas, take the opposite. Let's say you find a total rat-infested, disgusting house that's barely holding up, but it's like in Beverly Hills. Guess what? Everybody's going to want it, because what are they going to do? They're going to knock it down and fix it up. So it's the same thing with your trading psychology. If you have that part right, the system, don't worry about that. Like that will come. If you can get you right, then it'll, you know what I mean? It'll work. So what about you? What are your thoughts on that?
Yeah, I totally agree. I mean, I think that's something that everybody goes through. And I just don't know if you can get around that or if there's a way to shortcut that realization. So maybe my thought is that maybe you can look at other areas in your life and figure out maybe what are your shortcomings there and try and fix those things first. And then that will carry over to your trading. Because I think just inherently the way that trading works, I think everybody defaults to the trading strategy. They want to have the highest strategy, highest return strategy. They want to find the most successful trader. But in reality, it really comes down to your own psychology. So I think that might be one way to short circuit that mechanism. But I don't know. What do you think about that?
No, you sound a lot like Ed Sequoia, because Ed Sequoia said that, right? Like in his book, I'll put in the link for you guys in the show notes, the Trading Tribe book. He talks about how like basically what you're saying in a different way. You know, if you have issues in your life, they're going to come up in your trading. And so the whole reason why they have these trading tribes around the world, and you can probably find one pretty close to you for most people listening to this. Like, you know, he has these groups where the whole point of the group is, I don't go anymore. I used to go for years and years and years. And the whole point of it is for you to pull out those emotions, those dramas, like those things that are happening in your life that are like causing friction. You're supposed to experience those and kind of release them in a way, right? And so in a way, it's kind of really Freudian in the way that Freud talks about, you know, like in Freud's day, the steam engine was the big thing that everyone was relating things to. Like today, it's a computer or whatever, but back then it was, you know, the steam engine, and so kind of like letting off steam sort of thing. And that's kind of what the Trading Tribe was designed for by Ed Sequoia, was like, look, you have these things in your life that are like issues and touch points and little disagreements with people or issues with whatever dramas are going on in your life. And you're not allowed to get emotional about this. You're not allowed to, like, especially as males, you're not allowed to talk about them. You know, we're supposed to just kind of take it and, you know, be a man. Suck it up, boy. Yeah. And so the whole thing about the Trading Tribe is to release it. And so, yeah, so what I'm saying is he would have a similar approach, I think, to what you're saying, which is understanding that it's not just your system. It's not just you. It's not just you and your trading journal. It's not you and your platform. It's everything that's kind of impacting that. And I feel really sorry. Like, I feel really bad when I hear from traders who have people in their lives who don't like that they're doing trading and they think that it's a waste, you know, that's an influence, you know, that can really impact your overall bottom line. So I find that what you said to be very true, you know, like that you have to have a way to release. It doesn't have to be trading tribe, but you got to find a way to get, like, for some people it's journaling, just writing down. For some people it might be like working out or running or riding their bike for, you know, miles and miles, or, you know, whatever it is. Like, you've got to have this way of kind of like releasing that pent up energy, that pent up emotion inside of you that otherwise can seep into your trading and create like trading dramas, you know, where that's where they play out. So that's, yeah,
no, totally. I mean, I've studied quite a bit of like ancient cultures and how they heal people. And that's totally what it is. A lot of them, you know, regardless of what method they use, sometimes they use some medicine, sometimes they use chanting or rituals. But regardless of what they use, it's all about facing the trauma and then releasing it. And until you're ready to face it, then it's still going to be there. It's still going to cause problems. And I've seen some pretty amazing healings with those types of methods. But yeah, it all comes down to, do you have the courage to face it and solve it? And I think that's the same in trading too, right?
Yeah, that's really interesting. And I bet you, when you look at that, I bet you found that they kind of set it up in a way where, like, you know, you have like a support system around it when you approach that, right? Like, it's kind of interesting, isn't it? That like we think of ourselves as so advanced, and we do have a lot of advancements today, but it's weird that there's certain areas, I think, that like historically, like you're saying, like ancient cultures had a better approach, like a better way. Yeah. And this might be one of those areas where you see it pretty consistently, right? Like, there's probably a very strong protocol in a lot of cultures for like, what do you do in this case? Like, how do you help someone through this? How do you get to the other side, sort of thing? Yeah,
no, that's a good point. I mean, they have a lot of strong rituals and protocols, and they also have the support group. So I think it's a similar thing in trading. If you should have a support group, and you should try out some of these protocols that people have, and, you know, see if it works for you or not.
Yeah, cool.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think there's a huge difference between being able to do the thing and teach the thing. Some people are good at both, but most people are just good at one, I think.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are your favorite or most influential trading psychology books?
Trading psychology books? You know, I actually find that more pop psychology to be more useful.
Okay.
To be completely honest. I mean, the Mark Douglas one is pretty good. I would say that for me personally, so when I went through psychology, so I did a lot of psychology. I was surrounded by psychologists, right? So my mom was a psychiatric nurse, okay? And so I had like psychiatrists, psychologists always around, like, because she worked with them, like she worked in like the nut house, right? And so like, you know, we knew, like, and I was, you know, I would go in there and see these crazy people, and I always knew they were different. It's really kind of interesting, you know. When I went to school and did undergraduate and then later on a PhD and master's and all that in psychology, you actually get really specialized. Like, the most that you learn in terms of breadth is in undergraduate, and then as you get further on, you kind of, you know, like any PhD, learn a lot about a really precise thing, you know. What I found interesting though about that area of doing that and working with academics and things like that is how like certain ideas are just kind of relegated to like, this isn't real science. You know what I mean? Like, there's certain topics you're not allowed to study, right? And in a lot of ways, I found some of those to be the most interesting.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Like, for example, there was a guy in my school, and I know this is a long-winded way, but I'm going to eventually get to this. So there was a guy in my university that he studied UFO abductees, right?
Okay.
And nobody was allowed, like, I never saw him. He was a professor, so he was tenured. He had been there for decades, right? And I even walked by his office one time. It was on a level that I never, like, there's multiple levels, and I was on the bottom level, and the lab that I worked in. So I never really went up to different levels. But one time I walked by and I go, holy crap, this guy is at this university. I forgot. And he was like a well-known interviewer of people who had been abducted by in UFO experiences, you know?
Mm.
And I thought that like was a really interesting thing to study, right? Like, I mean, but I always listened to like those shows, those late night talk shows and stuff where they talk about that stuff, right? So I was kind of interested in that. So, but yet whenever his name came up, which is only once or twice I can remember, like my mentor would just kind of blow it off, like, you know, he's loony bin, you know, he's a crazy guy, like, you know, and it was so weird, like, because people would just, and that's how it is in science, like certain ideas, like another one would be, I think in anthropology, like they say, like, there's only one theory about how people came into North America, like go over the land bridge from, you know, from Russia and come down and so anything earlier than that, it can't be. Like they actually wouldn't dig to a certain depth. After they dug a certain depth in archaeological sites, they wouldn't go any further because they knew there was nothing down there, which is crazy, right? Yeah. And then now we have all this evidence of like Göbekli Tepe in Turkey, which like this city structure thing like isn't supposed to exist when people were in the Bronze Age, right? Like they're not supposed to have cities and stuff like that. So like there's a lot of there's actually a lot of evidence in North America and South and Central America too. This is a long-winded way of saying what I found in trading psychology is to be kind of like, for me, not that meaty, but I found it in like typical pop psychology. Like I found some of that to be more useful for me. Like, for example, there's a guy named Martin Seligman. He's written a lot about, he's kind of considered the guy who created positive psychology, which again, you know, in some circles, it's kind of accepted, right? But it wasn't something that I learned like all through going to get a PhD. We never had any chapters or readings really on positive psychology. Like it wasn't really a thing, you know what I mean? Yeah. It wasn't until I got out of it and I realized that this guy had written all these books and he had actually, like there are his disciples in Australia who've created schools based on his teaching. And he has all these guys. He's getting really old now, you know, and I saw him, he came out to Australia and you get to like listen to him and ask him questions and stuff at his lectures. But his stuff is really cool because for traders, resilience, and that's something that he talks a lot about, is resilience. That's a really important thing because we quit trading systems, we quit trading, we give up on things during losing streaks. And so that ability to bounce back, I think, is the best predictor of trading success. So like you, for example, are a very resilient trader. I know this because I've known you for years and I know like the process you've gone through, right? I believe that that's why you've been able to make it as a trader. I know other traders who don't trade anymore. And the reason why, I think, isn't because they couldn't do it, but it's because they've got to a certain point, and because they didn't have the resilience, they just kind of gave up. So they never allowed themselves to make those extra couple steps to where they would have actually made it. You know what I mean? Yeah. So for me, the biggest thing, if I had to guess one thing, like, you know, if someone asked me and I said, what should I go, just read all the books on resilience, Martin Seligman, like get into that stuff. And that's really going to help you if you use those tools. And there's a lot of like, it's not just Martin Seligman. There's a lot of his disciples or whatever, people who've taken up the baton and are doing really good research in this area. And a lot of them have written books too. So look up positive psychology, look up resilience. Those are things that I think can help. There are great trading psychology books out there, like the Mark Douglas one. You know, there are other ones like related to like trend following where you know, it's kind of like, you know, pick yourself up and go and do it again, you know, sort of thing. Because a lot of the trend followers have to go through that, like Curtis Faith, you know, that sort of thing. But I found personally for me, just applying those lessons from mainstream sort of pop psychology has been more helpful. Yeah. What about you? Yeah.
Yeah. I mean, for me, it was a little bit out of the trading realm, I guess. One of the big ones was the original title of the book was Poker, Sex, and Dying. Dave Kaplan bought it and he renamed it Trading, Sex, and Dying. But the original author, Joel Anderson, was a poker player. He worked at a phone dating service and he worked at I think it was a morgue. So that's where the title comes from, Poker, Sex, and Dying. So he said that based on those experiences, he got a lot of insights into human nature, how people act, and especially at the poker table, how certain personality types would respond to certain types of stimulus. So he could kind of read them just based on what on the category that he thought they fell into, which is really interesting. And when I started reading about my profile in that book, I realized, okay, yeah, that's me. So I guess before that, I was thinking that these things about me were wrong or they were bad or something I had to change. But then once I read that book, I realized, okay, that's just how my personality is. And I could kind of go forward from there and not be like guilty about it or whatever. So that was one book. Another book, yeah, the Mark Douglas, Trading the Zone. Another one is, I forget what it was, but anyway, so it's just basically a psychology book. I'll put in the show notes afterwards. I forget what it is. It just escapes my mind.
Yeah, we'll put it in the show notes. Yeah.
Yeah, but those are the three. But I'd be interested from a psychology standpoint, besides the resilience part, what do you think is most lacking in most trading psychology books in terms of like you say, pop psychology versus trading psychology?
Well, actually, what you just said, because I think you really nailed it. Basically, what you said is what a psychologist would call self-awareness, right? So what you were talking about was like you were trying to like map yourself onto what you're reading in the book. I think that self-awareness would be one of those really important skills. I don't see a lot of this going on in like trading, like most trading books. Okay, so most trading books, 85% of it is devoted to systems, right? Entries, exits. Yeah. And then the other 10% might be a chapter on psychology or something like that. And then maybe another 5% on risk or something like that. Like that's usually what it is. 85, that's typically, you can pick up any book and that's what you're going to find in most cases if it's a normal trading book, right? If it's not just devoted to psychology, obviously. Okay. What you were talking about is being self-aware. Now, how can you be self-aware? Why is that important? Well, in trading, like if you don't know, because I guess the reason why I say this is because if you are self-aware, then you also are like, you have what's called high interpersonal intelligence, right? Like you can kind of read people and stuff like that. So like if you're a door-to-door salesman, something like that, or like a car salesman or, something like that, you can kind of read people. Like you get used to like figuring out if someone's thinking that you're BSing them or whatever, you know what I mean? I've always found that fascinating, sort of like an introvert. I've always found it fascinating to like, if I'm at a party or something or a get together and there's lots of people, I'm always like thinking like, what is that person? And you know what I mean? Like, what are they thinking and what's going on in their lives that they're not talking about and stuff like that, And in fact, I remember the last time I had a job, which was a long time ago, I'm basically unemployable. Yeah. When I had a job, I remember my manager was saying to me, like, you're very aware of your body language and stuff. And like when people were in meetings and stuff, I would always, and he was right. Like what I would always do is I'd always like shift and stuff so that they knew that I was listening to them, you know what I mean? And stuff like that to make, you know what I mean? Like to get that sort of, and they talk about it in NLP and all that about facing someone. But I think, so if you want to become self-aware, why do you want to do it? Because you become aware of the mistakes you're making, right? And number two is if you're not self-aware and you can't figure out what's going on, what's going on with my trading? Why isn't this working? There are things that you can do. Like you can become more mindful, right? Mindfulness is something, that sort of meditation. That's a really buzzword right now, nowadays, this idea of being mindful, but you can read up on mindfulness. You can also write it down in a journal, not like an emotional journal, like a diary sort of thing about your trading and your experiences, and not sort of, I entered the euro here, I sold here. And, not like that, more of a, stream of consciousness sort of thing. You can also write down your dreams, and there are ways that you can like people say, well, I don't dream or I don't remember my dreams. Well, you can work on that too. I've posted some stuff on my blog about that. I'll put the links in there if you guys want to check that out. But so those are tools. Those are three things right there that you can become more mindful. And you need to be mindful as a trader, because if you're not aware of what's going on with you, how are you going to fix it? You need to know, okay, this is an issue for me. Like, this is not a strength. This is a weakness. How am I going to attack this? How am I going to make it better? Typically, if I'm watching something on YouTube from a trading guru or more like lectures, I do watch some lectures on like futures traders and stock traders. Like I do find those sort of interesting. The Forex stuff I don't really find useful. but what's interesting is they will usually say something like this: you got to do this, and this. Like you got to fit my pattern, right? And I'm not a big fan of that. What I think you need to do is one, become very resilient, and two, become self-aware. So kind of like, and if you can't do that, other people can, right? Like having a trading accountability partner can help you.
right? Like a trading accountability partner can help you, because every week you talk to your person and you say, look, this is what I did. And they can say, well, why didn't you do this? If you have those blind spots, those sorts of things, if you're not a really self-aware person, that's what I would do. So trading accountability partner, mindfulness / meditation, and also journaling. Those are 3 things that you can do to kind of up that, because I think you're right. That's basically what you just said. And I think that's really a big one for traders. And again, I don't see this in terms of like trading psychology. I don't see it as a thing that's talked about. It's like resilience. It's kind of like a thing. Like they usually will say things like, just do this, this, and this, right? Like follow this path. They don't say like discover who you are, or here's how to, you know what I mean? Like
that doesn't sell very well.
No, exactly. Like that's not a it's not a
too touchy-feely.
Yeah, it is. And a lot of these traders who get these platforms, they're very self-assured because of, their experience in trading and the money that they've made. And so they kind of get blinded to the fact that, they kind of think that this is the way, like you need to do what I did, sort of thing. You don't get a lot of people saying, well, I did it this way, but you could probably also do it this way. Like you get a lot of sort of dogmatic and that's not, I don't think that for a lot of people, it might be perfect fit for you. It could be, just like you can go to the shoe store and you can pull a shoe off the shelf and that's your size, right? But a lot of time it's not going to fit. So it's not a good match, in my opinion.
Yeah. I think it's, the bottom line is that those people aren't necessarily being dishonest or whatever, but they just aren't very good teachers. I think there's a huge difference between being able to do the thing and teach the thing. Some people are good at both. But most people are just good at one, I think. So,
Yep.
That's
true.
Thing.
Yeah, it's true. Yeah. And part of that is because when you get really good at something, you don't know what you're doing. You're not aware. Like, like think about when you first started driving. Like when I first started driving, I remember I was in the car with my friend, and he's older than me. He's about 10 years older than me. He's actually a really well-known actor, like well-known. He's always covered up in a costume, so you wouldn't know him, but he's in a lot of like movies and stuff. And he was in Silver Surfer. He was the Silver Surfer, and he was in all these different movies. So I had a permit, so I had to have someone who had a full license in the car. And I'll never forget, I was driving with him, and he's like, "Hey man, can you change the radio station?" And I'm like, "No man, I'm driving." You know what I mean? Like, like it's like I can't change the state. I'm like concentrating on driving. Think about that. Like, it's the same with trading or any skill. When you first learn it, it takes so much of your mental energy has to be focused on that. And then as you get good at it, it's so automatic. It's so like just you don't even. It's not even a part of your awareness. It's so hard to even bring into your awareness what you're doing when you're driving. When you've been driving for 30 years, it's just not possible. It's really hard to bring that in. So I don't blame people for that. Again, it's part of being self-aware and mindful. That's how you know what you're doing. And so you really have to almost like get really deliberate, And so for me, one thing that really helps me, and this could help people, even if you're not sharing these videos with anyone, you can download like a free video recording software, and I'll put a link down there for you. You guys can make these videos when you take your trades and maybe when you get out of your trades, even if no one sees them except you, and just walking through the trade and talking about, this is why I'm taking this trade. This is what I'm going to do. If it does this, I'm going to do A. If it does that, I'm going to do B. You're mapping out, just having that record so you can go back and look and go, why did I do that? Like, and eliminating that hindsight bias, because you can see, well, that's all the information I had when I took the trade. I didn't have this future information. Just having those sorts of things where you're actually speaking out loud and talking about your trades, that's super useful for people to open up to, okay, whoa, that's a blind spot for me. That's something I didn't realize I was doing that, but now I can see it. So that's another thing you can do too. So yeah, this is actually a really good episode, Hugh.
Yes, we're getting into it on this one.
Yeah, I think this is a good one. Yeah, so hopefully, with all these things that we've talked about, people can use them, at least one.
Yeah, definitely. Oh, just real quick before we end, that book was called Trade with Passion and Purpose by Mark Whistler, just so that we have a reminder for the show notes.
Oh yeah, that guy. I've heard about that guy. I went to a husband and wife trader team in Portugal. And they're like, dude, we just had Mark Whistler here. Like I went and stayed with them for a couple days
Oh, I know what it was. I was at the FX Street conference in Barcelona. That's right. And they said, "Hey, come over." And I go, "Okay." And I said, "I can only come for a couple days because I got to go to a wedding." And the guy's like, "Well, whose wedding is it?" I go, "It's mine." He goes, "Oh, okay." So I had to go to Tahiti. So I had to go from Barcelona all the way back to Tahiti for my wedding. Yeah. They were saying that Mark was there, and I heard about this guy. I didn't really know much about him until they were telling me, and they said, "Yeah, he's a really cool guy." So I'm going to check that out too, Hugh. Thanks for that, because I never really heard of this Mark guy until they told me about him. They said, "Yeah, he's a really cool guy." I said, "They're like, we always try to get these traders to stay at our place." Nice. And it's a really nice place too. It was like a kind of like a bed and breakfast, like a really nice, right across from the beach, and it's beautiful. Yeah. So.
Oh, cool. Yeah, he's written a few books. I've read a couple of them, and they're really good. He's kind of like a good underground author that I don't think too many people mention, but
yeah, I think you're right. Yeah, but I'm going to check it out. Yeah, thanks for that. Yeah,
sure.
Awesome.
Okay, thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Well, that ain't going to last very long. And here we are 20 years later, right? It's still over $1. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk a little bit about swing trading psychology. How is it different from other types of trading? What are your tips on becoming the best swing trader possible?
Well, I would say from the data that I've seen, from asking traders questions and putting them through a questionnaire, most traders are what you would term swing traders or end of the trend traders. So about 85% of traders like to find the end of the trend or like the end of a swing move, right? So they like to kind of catch a reversal. It's almost unnatural for most traders. It's unnatural to try and buy at a high or sell at a low and assume that you're in a trend. So number one, if you're a swing trader, it's probably going to be quite easy from a mental point of view to try and hook into these. The bad news is there's a real temptation, because a lot of times, let's say you're a swing trader and you get in on a pullback. So it's actually a trend. It's a strong trend, and it's going to keep going. It's going to keep trending. And so you find your reversal entry and you get in it. The problem is, that trend, that reversal is only going to go so far, and then it's going to continue on in the trend. So what that means is you have a very small window to take profit if the market's trending. And oftentimes, a lot of swing traders or reversal traders, end of trend traders, their radar really perks up when they see a strong trend, because they think, oh, it's gone too far. I'll tell you right now, I raised my hand as, back in 2001, I think it was, when the euro went over $1.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And I remember saying to myself, well, that ain't going to last very long. And here we are 20 years later, right? It's still over $1. So, because when I first started trading, it was when the euro first came out. It was always below $1. It was like 87 cents, 89 cents, 92 cents. It was always down there, And so we always thought it was trash, the euro's trash, man. It was no good. And so I remember thinking when it got above $1, I go, well, totally time to sell. Well, that was like a 3-year bull trend, it's crazy. So it's natural is one. There's a temptation to take quick profits, which I think is bad. I think you're probably going to want to use some sort of element of a trailing exit and also some sort of way of determining whether or not the market is trending or not, and make sure you just stay away from the trending market. So like if you see a box consolidation or a channel, there's lots of different or trend lines or whatever, like if you have a line in the sand, you go, okay, it shouldn't go beyond this, like use that sort of thing. So like trend line, support and resistance, anything that you can really sort of define the market as range bound or at least not trending, you're better off than looking at those wild charts where the market looks like it's gone too far and you just think it's going to come back because it's gone too far. I would stay away from those, and I would try and have a really high reward risk ratio because like I said, it's really tempting to take profit when you catch these reversals and it doesn't really go that far. And then you start thinking, I better take profit or it's going to go against me, sort of thing, Yeah. So you're better off just moving to break even and then slapping a trailing exit on it or something like that. You know what I mean? And then saying, okay, well, I either hit break even or I really got one here. You know what I mean? Sort of thing. That's what I would do. But I mean, everyone's got to decide for themselves and test and figure it out if it's profitable.
Yeah, sure. I think definitely patience and lack of patience is definitely the hardest thing about swing trading. Just going through the testing and figuring out, okay, how am I going to exit? Does that exit work? I think is the toughest part. Otherwise, it's pretty easy from the standpoint that you can just take 1 or 2 trades a week. You don't have to look at the charts every hour or whatever. And but yeah, I would agree with you.
Yeah, for sure. Yeah, I mean it's fun. I mean it's fun, right? I mean that's why a lot of traders get into it because they think, well, this is obvious, like it's going to turn around here. And I think for non-traders or new traders, I think that's what they think trading is. Like you have to know where it's going to go. You know what I mean? Like trading is predicting the future when really it doesn't. That's not
more
really
reactive than anything, right?
Yeah, exactly. Yeah, exactly.
Yeah. Okay,
exactly.
Cool. Thanks, Walter.
Thanks. See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Discipline can trump talent. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, missing trades. How do we avoid it? Why does it happen? And how can it affect our trading?
So for me, the way that I've tried to avoid that is by trading. Well, there's 2 ways for me. If I trade higher time frames, I don't necessarily have to miss trades. Like it's just easier to see like the 12-hour candles. So that's one thing. The other thing is like let's say I wanted to take a trade on a 1-hour time frame, then I would just set up an automation so that it enters the trade if you know what I mean, if it's if everything sets up correctly. So so that's what I've done. But I think what you're getting at is the psychology behind it. The difficult part about it, I think, for a lot of traders, like imagine you're playing a soccer game, right? And your team's down a goal. So it's you're 0-1 down a goal. There can be a lot of pressure for you to try and score, right? To, even it up, so to speak. And I think that's kind of the way that some traders, like we think about trading when we go, well, we missed that one. And then you'll watch it and you go, oh, look, of course it worked out so nicely, blah, blah, blah. And so you kind of feel like you got to make it up by taking another one as soon as possible. The other real problem is getting in late and chasing it. I prefer recently, the last couple of years, I've liked to trade the trend mostly. So that's a real big deal, isn't it? Because if you miss an entry and you don't, and then like it's tempting to get in again after your signal, and if the trade's already up 80 pips or whatever, and you're like, well, I'll just get in now. Or what I like to do is really kind of hold off until another signal comes. Because if it's a strong trend, it's going to keep pulling back. It's going to keep giving you signals on the pullbacks if that's how you trade, right? So it's not really like, for me, it's more of a lifestyle thing, like making sure if this is something that really bothers you, then just make sure that you don't just set up your day. If you're away from the computer from 7 a.m. to 8 p.m., then just trade those charts that allows you to
make your trading decisions, you know, before you go to work or whatever, and then at the end of the day when you get back, like just set it up that way. Like it's, to me, it's an easy solution. I understand. But the problem is so many traders are into the lower time frames. They feel like if they quit their jobs, they would be better off because they could see all these, you know, all these candles unfold and that they wouldn't normally see. And that's really the danger, I think, is that you convince yourself that your trading would be better if you were dedicated to it completely. And that's where, you know, the missing trade thing kind of highlights that for some people. Like, oh, well, if I quit my job, then I would have seen this one. And, you know, hindsight bias can seep in and you forget about that one, and that one, which would have been losers, you know? Yeah. What do you do?
Well, I think the bottom line also I see a lot is it just comes down to discipline, right? You just have to have the discipline to, you know, if you're trading the 4-hour chart, check the chart every 4 hours. Or if you're day trading or whatever, then sit down for the 1 or 2 hours that you're going to day trade and just do that instead of like watching Netflix or like trying to make some bread on the side or whatever. Yeah, I think that's one of the major things that I see. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's very true. Like just setting aside that time, making your schedule. Discipline, it's a funny thing. Like what you said reminds me of my friend in high school. He was a really good basketball player. He was a freshman in high school, so first year in high school, and he was on the varsity team, right? Which is the junior and sophomore, the year 11 and year 12. Normally, kids are on that. You know, he came in straight away, and I'll never forget, we became really good friends, and we still are to this day. And he said, and he went on and played in college and stuff like that. So he's a pretty good player, right? Mm-hmm. And he said, I'm the worst athlete on the team. And I said, really? I said, what do you mean? He goes, yeah. He said, and this is coming from the only athlete on the basketball team who's been on the varsity team since freshman year, right?
Yeah.
And he said, I'm the worst athlete on the team. And I said, what do you mean? He goes, and then I realized what he was saying. I go, oh, you're just saying you work harder than anyone else. And he goes, yeah. And that's kind of like, and it was true. It was absolutely true. He was the worst athlete on the team, and he absolutely worked his tail off because I saw him do it, you know, and I saw the things that he did and all this crazy Russian sports science that he was into and all that stuff. It was really cool, actually. But yeah, so what I'm saying is discipline can trump talent. And in trading, it's kind of similar. Like discipline can actually, like you might have a really talented trader or someone who has a really good system, but if they're not that disciplined, you can win. Like you can beat that trader in the markets just by being disciplined. You know what I mean?
Yeah.
Yes, you need to have a system that works. Yes, you need to have all this stuff. Yeah, blah, 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 blah. That's all true. But if you have the discipline, that's a huge part of it. And I attribute the discipline to the reason why I was able to go through school and get a PhD. Like it was only because I was disciplined. It wasn't because I was super smart. Like that should be clear to all the listeners, right? Like that's obvious, right? And now I wasn't the smartest person. I wasn't this or that or whatever. Or, you know, I just tried really hard and I set my, you know what I mean? I set my my goals up, my schedule up. I did the work. You know, I literally got bounced doing my PhD. You have this thing where you defend it. They actually said no. Like usually, it's almost usually a. I'm serious.
Guaranteed,
like,
right?
Yeah, it's almost guaranteed. Right? It's almost a guaranteed thing that when you go in to defend your dissertation, you have this committee of 5 professors, and they read through it. You give it to them. They have to, you know, they have it for a couple of weeks. They read through it, and then you go in there and they ask you questions, and then they like pass you or fail you. And they failed me. And I'm not going to get into all the politics about that because I think there were some, but the reality is I kept pushing on and I said, okay, well, you know, what do you want me to change? And they told me, and I said, okay. So 6 months later, I came back and did, you know, made the changes and did it again. So, you know, that was just by being disciplined and keep going and hammering away at it and not, you know, getting discouraged or whatever, or trying to do so, or just throwing my hands up and going, you know, whatever. Like I saw today, actually, I went surfing this morning and I saw a guy in like one of those scooters, those motor scooters, right? You know, and you could tell he was ill for whatever reason. He wasn't that old, really. You know, he's probably in his 40s or whatever, but he was like, you know, really sickly and he was in this motor scooter. He wasn't even like a big guy. So something was wrong with him, right? Mm-hmm. And I was thinking about this other guy that I've seen all the time on the beach. Same age, okay, as the guy that was in the scooter. And I don't know what's wrong with this dude, but he basically has one leg. And what I mean by that is this guy runs on the sand, he sprints up and down stairs, and one of his legs is basically useless, okay? And it's like all bandaged up and stuff. Like it almost looks like it's like hanging, like they told him, dude, we got to amputate your leg. And he's like, no, I'm going to make it work again. You know, like that's what I imagine. Yeah. And it's kind of the difference between these two guys. Like the one guy's like, oh, okay, screw it. I'm going to have to be in a scooter for the rest of my life, you know? And the other guy's like, no. And he literally is like, you see him going up the stairs on one leg. He's like, and he's like making all these noises and stuff. Like, dude, the guy's going to die. And you'll see him on the sand. Like all these people are jogging on the sand in the morning. And he's like on one leg going, you know, I'm like, dude, this guy's crazy, but he's disciplined. You know what I mean? He wants to, he's trying to get back to where he was. It's clear, you know, that's what he's trying to do. So anyway, I just thought that was an interesting analogy, and it's exactly what you're talking about. Discipline,
no, totally. Like I
it wins.
This guy, I didn't know this guy, but I used to play against this guy in high school in soccer, and you know he was okay. Like we didn't know about him because he wasn't like spectacular or anything. But same thing, like he worked his ass off. He made it to he played for the Houston Dynamo, I think, in the MLS.
Really?
Yeah, and then he has like one of the top 25 goals of all time because he scored a bicycle kick in like the MLS final or whatever. And when we played that guy in high school, he wasn't like anything special, you know, but he worked his ass off and he got there, and he's like a legend now at the Houston club. So I think work and discipline really do trump any kind of skill that you have or anything like that.
Yeah. Yeah. And that's why you rarely see someone who's super like you're saying, like in sports, you rarely see someone that's so like just transcends sports. It's those people that have the two, like they're really talented and they work their butt off, and that's so rare. It's usually one or the other, right? Like you usually have someone like they're super talented and they just kind of like ride that talent. Sure, they work. I'm not saying they don't work, but they don't totally push themselves. And then you have your friend or the guy that you knew that you played soccer with. He's the opposite. He's like got some talent, right?
Yeah.
You know, maybe average talent, whatever. But he worked he worked so hard to get to where he was at, and it should be this should be a message of hope for you traders. If you're kind of struggling right now, just know that discipline is what will do it. You know, making that time to back test, making that time to check the charts, just cracking it every day, even if it's only 20 minutes, working on your strategy, working on getting your data, doing your back tests, whatever it is. It's a big deal, and it all adds up, you know? So
yeah, it does. And I think it's also kind of hard to sometimes see like inspirational stories from traders. So I think it's also useful to like look at other areas of life and see, you know, these people who have succeeded, even though they weren't the best or most talented in the beginning, and then just kind of draw some inspiration from there also.
Absolutely. Yep. Yeah. Absolutely. Biographies are great for that sort of thing. Yep.
Yeah, for sure. Okay, cool. Thanks, Walter.
See you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I've been experimenting with actually putting on your arm. So like I have this case that holds it, and then I put the sensors on my arm. So we'll see how that goes. But
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, you turned me on to the Neurophone. So I just wanted to tell people about it, what your experiences are, and I can share some of my experiences also.
Yeah, sure. So there's sort of like two ways, I guess, that I see it for use. And we'll put a link in for people who are interested. I think their new ones aren't really the Neo Neurophone. I don't think they have them anymore. I think you have to get like a used one. Yeah. But you can probably find them. So unfortunately, the inventor, he's died. So I don't know what the plans are, if they're going to be making any more. Maybe his wife will commission another lot of them or whatever. So basically, the device was invented by this guy named Patrick Flanagan, and what it was meant to do was help deaf people hear. And the way that happens, it pulls sound in, and it actually, instead of echoing the sound off your ear canal like normally, and what happens is it kind of, you put these two pads, they look like electrode things, and you put them on your head, and you actually hear the sound through your skull, which is really kind of weird. So that's one thing. And you can actually learn, like they say, that you can put almost like hypnosis, how you get hypnotized and then they give you suggestions. You can kind of do that because it can entrain your brain waves so that you're at a certain level of alpha or whatever, and then or theta, and then you can put information like how to speak a language or subliminal thoughts that you want, like any sort of suggestions. You can put that in there, so you can kind of get really relaxed and then plug in an audio source, and then you may or may not hear it, but the idea is that it actually will be in your subconscious. I remember for the longest time I couldn't hear it, and then eventually I did hear it, and I was like, oh, okay, I could hear, the subconscious, like the audio input. I could actually hear it if you're quiet enough, And so that's kind of the way I see it, is sort of using it for two different ways. And the research is that they had these gurus, that were meditating out in India in the caves for decades. They tested their brainwaves, and they found that it was really interesting that they had all of their brainwaves elevated, which is normally not the case. Normally, we humans have one or another. Like you and I would be in beta right now, which is sort of your waking state, and that's sort of the dominant brainwave. And then maybe when you're relaxing, watching a movie or something, and then it becomes alpha, and then maybe when you're sleeping, you're down into theta or even delta at certain stages. So there's kind of like one brainwave that becomes dominant. And what they found with these gurus, these meditative dudes, that they had all of them elevated, and they found that the same thing would happen for people when they were using the neurophone. It's kind of like a brain tool, subliminal. So if you know about brainwave entrainment, you can get your brainwaves to a certain level. You can also put some inputs in there, like subliminal information, and you can read books in a way. Like when I say read, like read books, plug the book in, or the audio book, and see if you know what I mean, if you retain that. So it's kind of a fun tool, but I've misplaced mine, so I've been looking for it, and because I really miss it. And I know you can find used ones. There was a guy in Canada that had some of the older ones, not the new ones, for sale. Maybe we can find that link for people. But what did you do? What did you find?
Yeah, no, totally. I found that I can concentrate a lot better, and then I actually get this ringing in my ear after I use it, and that's, some people would say that's what, tinnitus or whatever that.
Tinnitus, yeah.
Other people will also say that that's because you're more sensitive to more subtle energies or subtle frequencies. So I tend to think it's the latter. So, but just from a cognitive perspective, I can focus better. It does help with learning things, and I haven't done the language thing yet. That's right. My next thing also. You can actually get the older one. This is the older one.
Yeah, that's the older one. Yeah.
You can get it brand new from Canada, and if you pay in Bitcoin, he gives you like a $50 discount or something.
Oh, really? That's awesome.
You got to trust the guy and stuff. But that's been my experience so far, and it's been really helpful just to kind of zone in and concentrate.
Because they were talking about making another, because they sold out of the Neo Neurophones, and then they made another. They said they were going to do it again, make another lot of them, but then for some reason they said, nah, we're not going to do it. And so everyone was like, oh, So I'm sure you can find used ones out there, or older ones or whatever, because he had several versions. I mean, I think he invented it in the 50s or something. It's a really
you see, the old school ones with the tube sticking out and all that stuff. Yeah, it's pretty cool stuff.
And did you hear the story about how they got the patent? The story about how he got the patent is really cool. How Patrick was young, he's 13 or 15 or whatever, and his dad said, well, I know a patent lawyer, and they applied for a patent for it, the neurophone, and the patent office came back and said, no, there's nothing out there like this, so patent rejected. he goes, well, where would I get something protected that has never been invented before, if not the patent office, And what they were basically saying was, we need to see science that links up all the elements of your, patent. And so they said, listen, if you come to DC, and we've got a deaf person in the office here, come to DC and show it to the deaf person. We'll plug them in and all that. And if it works, we'll grant you your patent. Because usually once they reject it, that's it. That's the story, is that typically you do not get there's no appeal or whatever. It's nope, patent rejected, boom, that's it. So and they did, and they plugged it into the person working there, and they started crying because they could hear again and all that. And so it was because they played her favorite record or whatever,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And so, she could hear again. I guess she must have had hearing and then lost it, and then got it back with the neurophone. But Yeah, so it's a really interesting device if you're into those sorts of things. Yeah.
Yeah. How would it apply to traders? Would you say like specific?
Well, what I used to do, I used to do exactly what you were saying for concentration. So I would put it on and then I would look at my charts. So in the morning, so my routine is that in the morning I wake up and I kind of look at my charts and see what is there anything that's looking good? And then in the evening, which is when London is trading, that's when I actually kind of put my orders in. Right? Usually that's how I usually trade. What I would do is actually put it on in the morning and then go and look at my charts. Because I found the same thing that you're saying. Like it really kind of, you feel like switched on. And I used to, when we did podcasts without the cameras on, I used to wear it on the podcast. The old podcast that we did, the truth about FX, I was always wearing that on. You know what I mean? Like I had it on my head. Yeah. I found the same thing you did, basically. Like some people use coffee or whatever, but it's a really good way to kind of, like if you're doing back testing or you're making any sort of decisions that you want to be on point, I would definitely say, that's something to use. Yeah.
And I think if you do some like positive affirmations or whatever, you could probably feed that in also, right? That's what I've been doing. And I think it's been helping. I've been experimenting with actually putting on your arm. So like I have this case that holds it and then I put the sensors on my arm. So we'll see how that goes, but I just started using that.
Some people get shocked. Did you know that? Have you ever let someone use it and they are like, No, I did that to my friend. And he was like, get that off me, I think you can make it like more intense and less intense and louder and
whatever.
Yeah. There's like a volume and there's an intensity and so it's kind of a different. So everyone's going to react differently, like they said,
Yeah, but just another cool tool to experiment with and see if it works for you, right?
Exactly, yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I could go right now in the grocery store and we could buy, $50 worth of ice cream if I wanted to right now or whatever. You know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some ways that people can feel more wealthy? I know that a lot of people have this like poverty mentality or feeling of lack in their life. What do you think are some ways that people can boost their wealth awareness?
Okay, so what I did, people say do visions and stuff, get really relaxed and imagine yourself in the future or whatever.
Yeah.
There's that, and there's vision boards where you put things on, you cut pictures out of magazines or whatever, whatever you want, and then you put it on paste it and that's what I want. There's those sorts of things. But there's actually a book that came out. Recommended it to people. I'll put it in the show notes. It's called Ask and It Is Given. And it's really cool because it has all of these techniques that you can use to kind of help yourself with your mentality. If you feel like you're saying, you feel kind of poor, you feel like things are never going to get better or something like that. And it's really cool. I'll give you one, for example. So in the book, there are lots of them. And it actually talks about in the book about levels of emotion. So they're saying if you're down here at full on depression, you don't just automatically switch on and become ecstatic.
Yeah.
So they have this scale of emotions, and they say, look, all you really want to do is just move to the next one. And then once you're there, try and move to the next one. And it's go up the ladder slowly. There's no reason, if someone's depressed / suicidal, you can't say, oh, you have so much to live for. Come on, let's go on holiday. They're not going to, they're going to say, no, get off, get away, go. So that's really cool just to see that. But here's one that's cool. Let's say you feel like maybe money's been tough and is it ever going to get better? What you do is you get a $50 bill, or in Australia, it's 100 because everything's more expensive here. But you put it in your pocket or in your wallet or your purse or whatever. And what you do is when you walk around, you just say to yourself, you look in the, oh, there's some shoes right there. Let's say you're a lady, right? Oh, I like those shoes. They're kind of like the ones that I wear. And, I could wear those with my dress or whatever. And then you think to yourself, well, I could buy that right now because you have that $100 note in your purse or whatever. Or you're walking by a restaurant and, with your wife or whatever, you think, You think, oh, well, we could go there right now because I have that. You know what I mean? Like what you're doing is you're trying to create this mentality of, instead of keep thinking and cycling through your mind, oh, I can't afford it, I can't make it, I can't do it. What you're saying is I can, and you're becoming more positive relating to money. And you never really spend that thing, and you don't put an IOU in your wallet. Like that doesn't work, right? It's got to be the real money.
Yeah.
Like, and it's not a credit card, it's not anything, it's real money. So you actually pull the money out of the ATM. I know no one wants to use real money anymore, but you take that real money and you put it in your wallet, and then you just remind yourself every time you walk by the toy shop with your kids. Oh, I could buy that toy for my kid. I could buy, that hat. I could buy those pants. Whatever. I could go right now in the grocery store and we could buy, $50 worth of ice cream if I wanted to right now or whatever. You know what I mean? You just kind of like keep that. It's just a way of reminding yourself. When you walk by something and you see something, you think, oh, I could do that right now. Oh, I could go joyride right now with an Uber. I could go on an Uber joyride because I have $50 in my pocket, or whatever. So that's the idea, is that you would do that. So, yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Cool.
Yeah, I mean, it's funny that you mentioned that because I've used that actually quite a bit. Like several years ago, I started that habit, put a $100 bill in my wallet, and it really did help. It helped a lot. And it also helps because if there's some cash situation where somebody's going to pay with their card and you have to pay them cash or whatever, or the place only takes cash, then you also have that confidence of having that in your wallet, saying, oh yeah, I could cover that. I don't have to go run out to the ATM or whatever. So yeah, I think it's a super useful exercise.
Yeah, and you get to the point where you'll just always know that it's there. It's a very comforting thing to know that, like, yeah, I can afford it because you can. Because it's right there, it's in your pocket. Like, it's not, So it can go a bit. It can go a long way. Just doing that and just keeping that in mind. It's like you'll just be at a different emotional state all day because you know that. And in the beginning, you might forget that you have it, but you just have to remind yourself. And then after that, a couple of weeks, it's like boom, you'll always remember.
Yeah, totally. And I think it really is a good step from that lower level to the second level, or maybe like a mid level, right? In terms of psychology about money.
Yes. Yeah, absolutely. Yeah, it's great.
Cool.
Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Oh no, that didn't happen. It's terrible, right? Like, it's the worst thing ever.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk a little bit about catastrophizing when we do this in our everyday lives and how that kind of carries over to our trading.
One interesting thing, and this might help some people, just kind of as it's true, that did you know that intelligence is negatively correlated with anxiety? So that would mean that if you wanted to act smarter than you really are, just kind of say everything will be all right. So it's kind of like the antidote, right? You just say, no, but I guess there's two ways that I know of for that. You can read the positive psychology guy. He's written a bunch of books, but I can't remember his name now. He came out to Sydney and I saw him. Anyway, I'll post it in there. The Marty Seligman, that's it.
Oh yeah.
Martin Seligman, yeah. So everyone calls him Marty, but he thinks it's weird. He says he never says for anyone to call him Marty, and he doesn't even think of himself as Marty, but everyone calls him Marty. I thought that was pretty funny. But yes, so for catastrophizing, you can adjust it like logically and say, like, for example, as a trader, okay, I've had 7 losing trades in a row. Obviously, my system doesn't work. I'm never going to make it as a trader. I'm going to lose all my account, and I'm going to have to start all over again, because the strategy doesn't work, right? That's like a slippery slope sort of catastrophizing thing. So another way to look at it is go, okay, let's go look at my historical data. When I tested this in Forex Tester, did I ever have 7 losing trades in a row? Yes. How likely is it to happen? Well, you can actually work that out. I'll put the risk calculator for people who want to use that. You can use the risk calculator to see the likelihood of that given your system. We'll put that in show notes too. So what that means is you're using logic to reassess the situation and kind of put it in its place in a different way. That's one way to do it, is logically. And the other thing to do is kind of more of an emotional thing. What you're doing is you're convincing yourself that you are on the right path. And so it's a little bit different to logic, where logic is kind of like trying to drop a bit of, antiseptic into the wound and make it heal, right? And say, look, I understand why you're saying that and why you'd feel that, but it's actually not reality, right? This is not likely. And then the other way to do it is to kind of like focus on the feelings that you had when you discovered your strategy, when you tested your strategy, and when you saw that it worked. And think about what it's going to be like in the future after you've been trading this strategy for a couple of years or whatever. Where will you be at financially and that sort of thing? So you're kind of trying to use the emotions, and you can use hypnotherapy for that, or any other of your favorite ways of seeding your subconscious. Those can also help and get you in that direction. But most of the positive psychology research, what they do is they give you specific tools like the one that I just talked about, which are like, trying to shift your focus and look at things slightly differently and say, what am I looking at here? Is it a normal sort of drawdown, normal sort of losing streak, or is this something totally different? What do you do? What do you use, or what have you found?
Well, one thing I found really helpful was just being more aware about the words that you use. So for example, a lot of times people say, oh, I need to go to the store. Well, you don't need to go to the store. I mean, it would be nice. You might be able to make some dinner, but you don't need to go to the store. And I think that's kind of where the catastrophizing starts, is where we pick up these phrases from our friends, our family, or whatever, right? And then that kind of gets ingrained, and it becomes like we need to do this. This has to happen. Oh no, that didn't happen. It's terrible, right? Like it's the worst thing ever. Well, you lost a few fries, you dropped a basket of fries. I think you'll be okay. I think that's a really important one too, where we have to realize how we speak to ourselves, how we speak to others, and how we take in the information from the outside, like from the news or from other people also.
Yeah, absolutely. Yeah, what you're saying is so true. It's, when you have kids, it's like, I need this toy, I need that. And I don't know if you really need it. It's a sort of same sort of thing, right? Yes. I think you kind of nailed it. Like, it's interesting, there's this debate in psychology whether or not they dream in images or if they dream in language, in words. And I had the experience, I spent a lot of time in South America and Central America, and I had the experience once where I was dreaming in Spanish. And so then it just kind of shifted my thinking. I was like, well, maybe you do sort of dream in words or something. It was weird that I had that experience and that my thoughts were in Spanish, in my dream. And so,
hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
To follow up what you're saying, that's exactly what a really good approach would be. What I would call a positive psychology approach would be to do that, to kind of reframe. What you're trying to do is reframe the situation, because when you catastrophize, usually you have negative emotion associated with it. So it's actually easier for you to fall into the trap of that faulty logic, right? Mm-hmm. Because you just feel so bad, right? It's like someone who's suicidal and you say, oh, cheer up, let's go, start a charity or something like that. Like, so someone who's suicidal is not going to want to start a charity, right? Like you're on a totally different emotional level. So yeah, so I think part of it is exactly what you said, is just kind of shifting, just a slight shift up to the next higher emotion. And that can come through words for sure. Absolutely. Yeah. And the other thing you can do is get another perspective. Like if you have a trading accountability partner, someone you talk to, you can show them your stuff and say, well, what do you think? Mm-hmm. And like, I think this, and do you think I'm off base here?
And that's another way, you know, just to get another set of eyes and see how someone else looks at it, who's kind of a little bit more detached from the emotion of the experience of going through that tough time, which is usually, obviously, for traders, it's usually a losing streak. It usually is that. It could be something else. It could be, you know, relationships and people who don't believe in your trading career. You know, it could be feeling like you're never going to find a system. You know, those things can also be the case. But normally what happens with traders is we get into a losing streak, and that's when we start to think, oh my, this is it. You know, this is the end of it. It's all done, you know.
Yeah.
And so that's tricky. Yeah.
No, that's a really good point. Yeah. I mean, I think the bottom line is that we're a lot harder on ourselves than we are with other people. So if you can get that outside perspective, or you can say to yourself, how would I talk to my good friend about this? And I think those are good perspectives to have also.
Absolutely. Yeah. Yep.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Back in his day, they didn't have such a thing as, you know, Prozac deficiency or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, so we're on the topic of trading psychology, obviously. So Jesse Livermore, how would you analyze his psychology? What do you think were good parts of his psychology? What do you think were the ones that brought him down?
Well, my favorite quote, and I used to have it. I don't have it up anymore, but I used to have it. It said, I can post it for you in the show notes for people. But he said something along the lines of, I always made my money by sitting and waiting. You got that? It was by sitting and waiting. Plenty of traders or men, I think he said men, can be right about the market and buy at the exact bottom and sell at the exact top. But there are very few that can actually hold on to it. To me, that kind of sums up what was good about Jesse. Now, the bad things are obviously, you know, people don't talk about this a lot, but he killed himself. And one of the reasons why he killed himself